this and he thought, we're going to get really rich just by looking at the money people are willing to throw away.
Absolutely. You know, the majority, about 2/3 of adults who are over 21, admit that they started betting or placed their first bet under the age of 21. And of course, the numbers are even higher for those who are already in their early 20s, 30s. So we're seeing an increase of people doing this. And so it's important to have it be part of the curriculum in personal finance classes, but there are very few states that have incorporated that into any type of academic
You've got to take it
standards.
head on. This is where things are moving. How active are teens when it comes to the prediction markets, when it comes to sports gambling?
Well, when you look at the fact that at 18 or 20, you know, you may not be able to there's not legal betting that you can do,
Yeah,
but a lot of the exactly, through their parents, and a lot of the prediction markets will allow you to bet, you know, at 18 and up. So we talked to one student who's a senior in a school outside of Nashville, and he said he was watching on YouTube, watched this guy predict on how many points a player was going to make, and made $5,000. He's like, that's free money. So he decided for his 18th birthday to take the money that he'd gotten and start betting. And he lost so much. He never saw those big wins that he thought were going to materialize. And he's like, I could get addicted to this, though. And that's another thing that we're seeing, that even the addiction to gambling is greater or more serious, a lot of people have said, and surveys have shown, than alcohol or drug addiction.
I mean, if you're trying to bet to actually, like, make money to use or to have fun with, that's the wrong way to do it.
But that's how some of these teenagers
That's
do
what I mean.
If you want that immediate gratification.
I made a bet yesterday, okay? 4-way parlay on baseball games. And if the $5, but guess what I would have made? And 3 of my teams won, and the Phillies came back in the bottom of the 9th
Yay, Phillies.
to beat the Nationals. Otherwise, I would have won $128 on $5. Now, that put me
That's
kind of
your
in a
fault,
bad,
not taking
put me in a
the
bad mood. But I don't need the $128, and I don't need the $5.
Right,
It was
right.
all about watching nervously when the Nationals blew this lead in the bottom, and I was on the edge of my seat watching this. But that's fun.
You don't
High school
need
teachers.
this money. These
No, I don't.
kids and their
This is
family
$5.
just
It
learning
literally-
how to budget.
Right.
People think I have a problem.
Well, but a friend, Katie Kramer, our producer, has a friend who's a teacher who talked to her students recently, and almost every boy in the class raised their hand when they said when they were looking towards their future funding, they were going to put some in retirement, they were going to put sports gambling was part of what they planned.
It just makes it fun.
Earnings
Yes.
for this.
It just makes it fun.
They could name, one of the students in the class named in like 2 seconds 6 sports betting companies. I said, okay, so now what are your 6 favorite stocks?
Right.
No, he wasn't even naming the shoe company, wasn't naming the clothing company, but that's what he was focused on.
I don't know.
That's not great.
That's scary.
Yeah.
You bought Nike at 170. It might be better to put some money on Villanova.
But I'm fine.
Yeah.
Sharon, thank you.
Sure.
All right, 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kerner along with Becky Quick. Andrew's off today. I'll take a look at the futures, which aren't pretty, but we had 2 pretty solid sessions, down 500 basically today. And because of this, big jump in WTI, and look at the spread. It's kind of interesting. It's back to not even $1 between WTI and nice spread, but $8 on West Texas. Let's get to Eamon Javers with more on the president's speech. Hey, Eamon.
Hey, good morning, Joe. No new announcements or much new information from the president last night, but he did continue to make the case for why he believes attacking Iran was the right thing to do, saying that Iran was a threat to the United States and to the world, and he threatened to continue to pound them hard militarily. Here's what he said.
There is no deal. We are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it, and it would be gone.
Now, the president also raised the prospect that when the war is over and the United States withdraws, the Iranians could be in control of the Strait of Hormuz, and he said that that ultimately would be for other countries to deal with. Here's what he said there.
The countries of the world that do receive oil through the Hormuz Strait must take care of that passage. They must cherish it. They must grab it and cherish it. They can do it easily. We will be helpful. but they should take the lead in protecting the oil that they so desperately depend on.
And Joe, in terms of timing of the war, the president used that 2 to 3 week framework that he's been discussing all week in his televised appearances at the White House, suggesting that that might be when this war can wind down, but no real indication of exactly when this will happen, and no indication whether the president's thinking of escalating or de-escalating the war at this point, guys.
No, right? Why would he let us in on that? He wouldn't. And we all are well aware of how many carriers are there, how many ground troops are positioned around the area right now, and none of us have any idea, and I don't expect to get indications from the White House on what their plans are, which I would hope we don't get
Yeah, I mean, I think,
indications.
look, what matters to oil markets and to financial markets most importantly is the Strait of Hormuz and whether it's going to be open or not. And what the president seemed to be suggesting is that, you know, the U.S. Navy is not going to do that job. And he's looking to American allies, other countries. Earlier this week, he mentioned China might come in and do something there. But it doesn't seem like those countries necessarily would do it militarily. If they were to come in, you could see a world, Joe, where they just simply buy their way in to the Iranians, and that gives the Iranians de facto control over the Strait of Hormuz and a revenue stream for Tehran.
But you wouldn't put the odds at zero that suddenly there's U.S. troops on Kharg Island. I wouldn't put that at zero.
Yeah, no, not at all.
I don't have any idea what the possibility is that we do end up opening the strait. I don't.
Yeah.
You know.
Look, the United States has moved a lot of resources to the region, a lot of troops. You know, we talk to the military experts. Kharg Island is a tricky one, just because it's so close to the Iranian mainland, and it's also in the northern Persian Gulf, right? So if you're going to do a seaborne attack on Kharg Island, you've got to get your assets through the Strait of Hormuz in the first place. You have to run that gauntlet before you can even begin to attack Kharg Island. And then there's the question, Joe, of what you do once you seize it. If the Marines can seize it, can they hold it, and for how long, and under what conditions? And those are all real open questions right now.
Right. All right, Eamon. Thank you.
You bet.
When we come back, economic forecasters are starting to factor in the impact of the war in the Middle East. Steve Leisman breaks down the latest NABE survey. Plus, sectors on the move as futures slide. Right now, the Dow futures are off by 535 points. The NASDAQ down by 430. S&P futures down by 90. And again, this is because WTI has picked up so significantly. We'll talk more about this. Squawk Box will be right back.
Get to Frank Holland with a look at this morning's pre-market movers. Good morning, Frank.
Hey, good morning, Joe and Becky. We are following the latest developments in the war in Iran, and it's moving big energy stocks higher as oil prices, they surged above 105 per barrel. President Trump said during his address last night that the U.S. will hit Iran extremely hard over the next 2 to 3 weeks. That's just dashing hopes the war will end sooner. Big oil names like Chevron, Exxon, Conoco, and Occidental all moving higher by about 2 to 3%, all of them reversing their declines from yesterday. Airlines and cruise lines also sinking lower on these developments. United, American, and Delta, as well as Royal Caribbean and Carnival, all down at least 3% right now, as you can see, a lot of red on this board, as the higher oil prices are expected to hurt these companies' bottom lines. United CEO Scott Kirby expects the company's fuel bill to increase by $11 billion if prices keep gaining. That's according to estimates from United. And fertilizer company CF Industries this morning higher, as you can see, gaining about 3.5%. Big move to the upside for them as well. As the Strait of Hormuz remains closed, roughly 1/3 of all globally traded fertilizer that is shipped by sea, it passes through the strait. That means higher fertilizer prices, at least more than likely. CF shares were about 6% lower on the week on hopes of de-escalation, but now you can see regaining some of those losses over the last year, though. The shares up more than 66%, big rise in recent weeks and months. Back over to you.
All right, Frank. Thank you.
Thank you very much.
Thank you.
In the meantime, economists are beginning to factor in the effects of the Iran war into their forecasts. Senior economics reporter Steve Leisman joins us right now. He's got the latest NABE survey. And Steve, good morning.
Good morning, Becky. Yeah, they held this one back and they went back into the field. This is one of the first looks at how the Iran war is impacting the aggregate outlook for the U.S. economy. Economists at NABE see an elevated chance of recession, have lowered their growth forecast, and as you might expect, it boosted their inflation outlooks. The National Association for Business Economics, they went back into the field for a flash survey after oil price surge. Worth mentioning, though, oil prices are higher now than the late March later survey period. But here's the results we have. The survey found 43% of respondents see recession odds at the 35 to 50% range. 43% put it at 20 to 35%, both elevated from the prior survey. NABE President Gregory Dacko saying that rapid deterioration in sentiment sits against the initial March survey that had already told a cautionary tale. The share of forecasters viewing risks as skewed to the downside had jumped sharply from 48% in November to 77%, driven by a broadening of geopolitical conflicts. Now, 47% see a 0 to a half point boost to inflation from the oil price surge, and 27% think it's going to be a half to a full percentage point. 10% see no change. Respondents were divided on the funds rate outlook. A third see no change this year in the funds rate. 27% see one rate cut, and a third see two rate cuts. Before the flash survey, the consensus was actually for two cuts. Survey shows the effects of oil price surge are relatively mild, with the economy able to absorb them. The most worrisome message I get from this is not the hit to growth or inflation, but the elevated chance of recession. You got to watch out for that because you can make a policy mistake along the way.
Is the recession risk, is that you fall off a cliff at some point if these prices continue? Is it a gradual decline in terms of the economy continue? I just wonder, is there a point of no return?
I think that, first of all, it's the dealing with not the level, and the level is worth watching, but the speed with which we got to them.
We've
So
seen
all of a
prices
sudden,
like this before.
all of a sudden, United's looking at $11 billion extra cost. How do they get that, and what does that mean for employment for them? What does that mean for future plans to employ or future CapEx plans? Does that create? I remember Becky talking to the head of, well, this dates me, Kodak.
Film?
Film. Back in 2001, and it was the president of Kodak, and he said to me, it was as if all the cameras in the world stopped clicking at once.
Well, he's right.
So it was sudden, was the point.
Fuji
Didn't
photo-
answer your question.
Was it Carp?
I don't remember his name. I'll have to go back and look at it. It's in the journal. But I
There's
was
a guy that
reporting on
loved buybacks at 80 on the way to.
and the way to zero. Yeah. Anyway, that was his take. You just get to a point where things aggregate. Now remember, we have very, very low, we'll talk about this tomorrow, job growth. Mm-hmm. So going to zero on job growth is not that hard in terms of where we would be.
But you've also told us recently that because of the changes in population and immigration,
Right.
that zero's not what it used to be.
Zero is maybe what it ought to be,
Right.
which is a bad thing to say. I have trouble with, speaking of Mr. Brooks, which side of my brain dealing with zero? It's like, zero is right, but how do you say zero is right at the same time? The inflation numbers, the key thing we're going to watch there is whether or not it goes into the core. And that's the thing Fed folks will watch. Right now, we're looking at about.
Because if it's just food and energy, we
we can look through it.
Once it's in the core, it's a lot harder to slow down.
The market has teetered. If you think about a ship on the ocean, it was listing to the right towards rate hikes and then listing to the left towards rate cuts, and now it's stabilized at about 85, 89%, 90% probability of no change this year.
Because they don't know what they could possibly, even if the economy turns down, do you want to cut rates when you're dealing with an inflationary potential like high oil?
I think that doing nothing is the most likely outlook, unless things become very clear that you have inflation, it's only in the headline, and you have a real jobs problem.
Right.
You'll remember, Becky, probably. George Fisher, didn't like him. Anyway, he was 1992 to 2000.
Kodak?
Yeah, Eastman Kodak. He was. I remember. I'm not going to speak, but I remember. But
They invented the digital
he left
camera.
at 58. He left at 58. So I'm out of here. And turned it over to Karp in 2000, who you
How
must
did we
have.
lose that? They invented the digital camera.
I don't know.
Because they were worried what it could
Xerox
do to
hasn't
their
done much better. Remember the Haloid and
No, but he's
Galva
saying
put it? Yeah.
Eastman Kodak invented the digital.
It was their
camera.
thing. They didn't.
Right.
They didn't want to pursue it because they
Well, they
were afraid
didn't-
it would actually destroy
they didn't put it
their
on a-
own-
The same
their
reason.
own
The
market.
same thing with newspapers, right?
Well, same thing with De Beers, which, by the way, went after these fake diamonds. We were just talking about De Beers in a commercial break earlier about it, how the value of this diamond company has collapsed because of the diamonds you can grow in the lab now. They had a thing that was making lab-grown diamonds, but they made them really crappy on purpose to kind of keep their mainstay diamonds valuable. And they just shut down that.
They didn't have
Last year they
they
shut
didn't
down.
have a phone for the
Laptop.
digital camera.
But nobody had a phone initially for
I
this.
know, but that's, I mean, now
They
it's,
could have gotten. Imagine we were all.
The
they'd
device.
have built a phone around your digital camera
Yeah.
that Apple came with.
Steve, thank you.
Pleasure. See you at
And we
8:30
will
for the
see you
data
tomorrow.
on
A
Good Friday.
reminder, folks, this is very important. The markets are closed for Good Friday tomorrow for the holiday, but we will have special live programming covering the release of the March employment report. The report hits at 8:30. We will be live starting at 8 a.m. Eastern time. You don't want to miss it. It's a big number, and it matters.
Might be a big number, might be a small number, might be a negative. But
It's an important number.
it's an important number. Coming up today is World Autism Awareness Day. One venture capital firm is dedicated to investing in solutions and care. We've talked before. We're going to talk again to the co-founder of the Autism Impact Fund about where money is being put to work. Squawk Box returns in just a moment.
Time now for today's Aflac Trivia question. On March 30th, 1974, John Denver scored his first #1 hit with what song? The answer when Squawk Box returns. And now the answer to today's AFLAC trivia question. On March 30th, 1974, John Denver scored his first #1 hit with what song? The answer, Sunshine on My Shoulders.
Today is Autism Awareness Day, World Autism Awareness Day. Our next guest is the co-founder of the Autism Impact Fund. The fund is designed to invest in solutions related to autism, both behavioral and mental health conditions. Joining us now, Christopher Mail of the Autism Impact Fund. Welcome, it's good to see you.
Great to see you. Thanks for having us back
The
up.
latest news on more funding for, what is it, a second fund, or tell us
Yes,
about
it is.
Yeah.
And before I get into that, I just want to thank you for having us back. It's our 4th year now, and I know you and amongst others at CNBC, every day is World Autism Day, so
Right.
I really appreciate you all shining a spotlight on the work we're doing and what we're doing. It's made a difference over the years, so appreciate that. And with the families, we see increasing rates, continue to see massive challenges here. So we're excited to be here, announce the second fund as well, and continue. You know, 5 years ago when we first joined you, there was a dearth of capital. There was no investment capital other than traditional behavioral health, and we've now seen that shift. And we set out at AIF to be the investment and innovation arm for the community, behavioral health, mental health, and now we're seeing a lot of capital flow into the space. So we finished Fund 1 with 17 portfolio companies, 2 successful exits, and are announcing today the first close of our second fund.
Will it be different in terms of focus?
One of the things that we really learned is individuals with autism, 95% or more, have another diagnosis. So as we look at investing, it's not just autism, it's behavioral health, mental health, complex chronic conditions, the most common of which impact 1 in 4 individuals and represent $1 trillion market. So we'll be deploying innovation capital throughout services, tech, and related.
I could design 10 funds, I think, depending on which aspect of the issue you want to look for. But in terms of, I don't know, therapeutics, there are some things on the horizon. There's something that works both with the social issues as well as repetitive motion, things that you see, even though it's a wide spectrum, those things seem conserved all the way from nonverbal all the way up to very high-functioning individuals.
You're correct. One thing we know is there's no one type of autism. There's many types of biological forms of it. It is a very wide spectrum. We are seeing therapeutics that are coming out helping with core symptoms. Another example on the biology side is a company of ours called Mara Bio. They created and commercialized the first biological blood test for a subtype of autism that impacts nearly 20% of those diagnosed with autism.
It's genetically linked, or how, is it gut related, or how do you test for it?
The spectrum is so wide that you test through the blood and look for antibodies in the mother.
You look for antibodies?
Yes.
Marker,
Yeah, for the markers there. And then another one called Yamo Pharmaceuticals we're involved with as well helps the core symptoms like you're talking about, irritability, behavioral issues. So we're seeing real advances there, especially with what's happening in tech and AI being able to move forward.
I mean, some individuals on the spectrum are, there's challenges, but then at what they're good at,
Yeah.
they could be better at certain tasks or jobs than mainstream people. And you got to somehow figure out a way of matching those people with the skills that they have.
Yep.
So they can lead great productive lives and earn a living and everything else. So
Correct.
That's what I mean. There's 10 different areas that you could focus on in terms
There
of.
are, and we see that in employment as you're talking about. We view, for most, it's a talent opportunity, not a charity opportunity. And we're seeing a shift, especially in tech and AI companies, where they're changing their model. They're looking for different types of employees and hiring a lot of the neurodiverse community because of that superpower. So it's an exciting time.
How do you figure out, as you mentioned, it's a really broad spectrum. You have very talented individuals on one side, you have profound autism on another. How do you decide what to go after?
We look at the entire spectrum. So as we look at investing, the core is finding innovation that is delivering better service delivery models, care, precision understanding. So using technology to subtype the groups because it is so broad. So as we're able to subtype then we're able to have more of an understanding and really help those individuals.
Do you ever think about trying to go after probably the biggest problem that every parent with a child with autism thinks about, which is what happens to my child after I'm gone?
Yes.
Not just from an independence perspective, but if you're not independent, how do you care for them?
We do, and that's where we look across the entire spectrum, and it's all about looking at innovation that is improving outcomes to help the families, using technology for precision understanding, and better models that are able to provide long-time care. And with Mara and some of these other companies, the earlier we're able to detect it, or earlier we're able to diagnose, that changes the trajectory
By
of
getting
their
the proper
lives.
services, like
Yeah.
ABA services or something? Or
ABA is one that's been around for a while. Another good example of a company we're involved with is Imagine Pediatrics, and this is where you're seeing real capital come in alongside Oak, Optum Ventures, and Rubicon. Those are our investment partners. And what they're doing is value-based care, 24/7, virtual first, in-home care that is delivering better outcomes. So that's where we're seeing the shift. It's not just a volume of pushing ABA and service hours. It's truly figuring out where to drive the value, how to improve outcomes, and make the lives better for these individuals.
You do the math, I don't know, New Jersey's, what is it, for male children, 1 out of 40 or something?
1 out of 31.
1 out of 31. So do the math, you get to millions very
Yes.
easily. Couldn't there be a REIT or something that has facilities where these people eventually live in live in communities? Is that happening?
It is. I'm part of a nonprofit foundation called Jonathan's Landing, which ties together work, employment, and living, all of that. So there are opportunities for that. We're seeing them. Not everything falls under the mandate of AIF, and that would be one that's outside of what we do.
It'd be outside of what you do.
It's outside of what we do, but we're able to partner with them and bring additional capital in to drive those types of opportunities.
Because I could see that I don't know how many, you need a lot of facilities if you just do the math. And it wouldn't necessarily be, that would, where you would use the term differently able. Sometimes I go, what does that even mean when you're disabled? But it's true, differently able, because it's, it's possible to have great, productive, independent lives. And we can't just turn, just like look somewhere else and hope it's going to fix itself. It's not.
It's a significant problem. I think one of the biggest takeaways for your viewers and for the community is that while public-private partnerships are key, the cavalry of the government isn't going to come solve this. And we've proven this through Fund One. But the opportunity is for the private sector to really lead innovation, investment, and driving opportunities at scale.
And to figure out scalability, I think, is the biggest issue.
It is.
Trying to figure this out on more than just a local level.
Correct. And that's where private market can come in and really help. The opportunity is growing. Again, 5 years ago, we saw very little capital. With Fund One, we proved out the thesis. You're able to drive market returns while really driving impact at scale to impact the community.
Okay. Chris, thank you.
Thank you.
See you same time next year.
Thank you again.
With more, hopefully, positive stuff. Thanks.
Yeah, appreciate it.
All right. Squawk Box, be right back.
Welcome back to Squawk Box, everyone. We are watching crude oil tick higher even again from where we had seen. WTI is now at 109.16. That's up 9% today. Brent crude is up 8.3% to 109.57. So they're almost at the same price. But those higher prices have definitely resulted in another leg down for the futures. Last I looked, we were looking at the Dow down over 600 points. That's only happened in the last, down 621 now. That's only happened in the last 20 minutes or so as we've seen additional pressure or additional upward pressure on oil prices. S&P futures now down 100 and the NASDAQ off by 470. If you want to see what that's doing to the Treasury market in the meantime, you'll see that the 10-year yield is now higher. It's 437. The 2-year is at 385. Oh, this is me. President Trump addressing the nation last night on the Iran war, saying that military objectives will be completed shortly. Retired U.S. Army Colonel Jack Jacobs will join us in just a moment to give us his assessment on what the president said and didn't say during last night's address. Squawk Box will be right back.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
President Trump addressing the nation last night. Joining us right now is retired U.S. Army Colonel Jack Jacobs. He's a Medal of Honor recipient and an MS Now military analyst. And Colonel, what a lot of people took away, at least based on what the market's reaction is that there may not be a very quick out or an off-ramp when it comes to this. 2 to 3 weeks may be one thing, but the market is now pricing in more with the higher energy prices we're seeing today. What's your takeaway?
Well, exactly what people expected, and that was that that the president's off-ramp is just to declare that he's finished doing what he's doing, that he's achieved his objectives, and that we're leaving. I think one of the interesting things that came out of the speech was not just the suggestion, but almost the direct statement that we're not going in there to go collect up all the fissile material in Isfahan, which a lot of people expected us to do. We had massed a very large number of troops, including ground troops, Marines in the area, a brigade of the 82nd Airborne Division, with the expectation that we were going to go in there, secure the area around Isfahan, spend a week, 2 weeks, maybe more, bulldozing the area to get the fissile material out of there. It's clear we're not going to do that.
Is it clear though, Colonel? I mean, if he was going to do it, would he tell anybody? I don't know that he would have telegraphed it.
I don't know. He has a tendency to telegraph things from time to time, and of course, the objectives keep changing. Every day it appears. One of the reasons we got so much volatility is because it's unclear when this whole thing is going to end. The instant his speech was over, Dow futures dropped 3 or 4%. And oil popped up, and now it's even more in that direction. There's a lot of volatility because it appears that the objectives have changed, are changing, and that there's no clear end to this, that ultimately it will end, but when it will be and under what circumstances, not entirely clear, Becky.
Yeah, I mean, that was my takeaway, just the jump in oil prices and the decline in the futures as a result. I thought it was two things. One, he didn't specifically say that we wouldn't leave until the Strait was reopened. He did tell the Gulf countries, the Gulf states, that America's not going to abandon them, so they had something that they could hold on to with that. I don't know how much of this is a negotiation with Iran at this point, how much of this is a negotiation with NATO allies that he would like to see come and help out in terms of trying to reopen the Strait and make sure that things go through there. And how much of it is, you know, I'm not going to tell you everything. I walked away from that speech not knowing a whole lot, but then again, we know that we are continuing to send military assets there. And if you know that you're going to be there for at least another 2 to 3 weeks, who knows what happens in the outcome? Are you saying, Colonel, that you would like to see him go in and go after the enriched uranium at this point?
No, not at all. I think that's a fool's errand. We're going to have to put an extremely large number of troops to secure the area. And it's going to take a long time to get that stuff out. And in addition to that, all the troops who are going to be on the ground are going to be sitting ducks for missiles. You mentioned the Strait. One of the other things he said was that we don't care whether or not, he suggested that we don't care whether or not the Strait's open or not because we've got lots of oil. Well, it's clear that he either does not understand or he's ignoring the fact that the price of oil is a global price, that the demand is spot and the supply is forward, and that's why everything that happens right now has an effect on the price of oil at the pump right now.
So what would you like to see, Colonel?
Well, a withdrawal would be terrific, but maybe one of the things that the president at the National Command Authority is planning is this: continue the attacks on their infrastructure, make life extremely difficult for the Iranians, and get them to the table whereby, by which the United States can negotiate some kind of restriction on their ability to produce nuclear weapons and their ability to attack their neighbors in exchange for opening the Strait. That's probably what's going to happen. Whether the president announces that we've won the war before these negotiations actually take place, they're not taking place at the moment, or whether it happens just afterwards, remains to be seen. That's probably the arc of this conflict. Continue the attack, particularly on infrastructure in Iran. Squeeze the Iranians and get them to the table so that some concessions can be made by the Iranians so that the president can announce that we've won. And that's the only way he's going to get the straits open, Becky.
You think that happens, the potential for that could happen in the next few weeks if he pounds them back to the Stone Age, as he said last night?
Sounds like a few weeks. It sounds like the objective is maybe 2 weeks to 1 month. Of course, the longer it takes, the more difficult it becomes, the more volatile the markets become, the more difficult it is for American citizens. And the prices they pay, it becomes more difficult for our allies, both in Europe and in the region. So the faster he does that, the happier everybody else will be. But 2 weeks to 4 weeks sounds about right.
Yeah, I think probably most people or most allies would like to see this over quickly. I don't know if that's the case with the Gulf states. I think they'd like to be reassured that Iran is not going to be a threat, as their neighbor has done so much.
Well, we're being
in terms of
encouraged by
attacking
the
them.
Saudis and others in the area to carry on and make the Iranians pay for being terrorists and make and ensure that there's a bit of safety in the region. There's obviously this, the backstory is there's this rivalry for control and influence in the region between Saudi Arabia on the one hand and Iran on the other. And so there's a great deal of encouragement from them to continue the attack on Iran and get them to acquiesce in some fashion. But I think
certainly to at least reopen the strait and not have any of the constraints of toll or other things that the Iranians have floated.
Well, it's not just oil coming through there, it's fertilizer and all the other
Helium
come through there. Very difficult.
Colonel Jacobs, thank you. We appreciate it.
You bet, Becky.
All right, coming up, Amazon reaching for the stars with a potential deal for a satellite company. That story in the stock reaction next. And later, we'll talk more about a SpaceX IPO with Elon Musk biographer Walter Isaacson. Squawk Box returns in just a moment.
Shares of satellite communications firm Global Star jumping on a Financial Times report saying that Amazon is in talks to acquire the company. The FT reports that Apple's 20% stake in Global Star has proven to be a complicating factor in talks. A purchase by Amazon would bolster its efforts, though, to build a low Earth orbit satellite business. And again, you can see Global Star shares up by 17%. Amazon shares are off by 2.25%, probably less because of this deal and just because of where we see the general market overall. When we come back, Iran threatening to target major tech companies in retaliation for U.S. and Israeli strikes. We've got more details on that and other stories making news in the sector when Squawk Box comes right back. Iran's Islamic Revolutionary Guard has warned that it will begin attacking U.S. tech firms, including Apple, Google, IBM, Microsoft, and Intel. Joining us right now is Stephen Levy. He is Wired editor-at-large. And Stephen, this has been kind of circulating for a few days. You all tackle this and get at it. How realistic of a threat is this? How good are they at being able to follow through with these threats?
Well, they're really talking about attacking facilities in the Middle East, of our allies that are near Iran. A few weeks ago, they did attack an AWS facility that caused some disruptions. And I just got a report, recently that, in the last few hours, that yesterday, which is the day they're going to say they're going to resume attacks, another Amazon facility got hit. So all these companies have had to warn their employees that, in the Middle East, that attacks could be coming. They are targets.
It's something we're watching, but obviously there's a lot of headlines that have been coming out in recent days. I'm hoping we can get your take on several of them. First of all, we had some pretty big layoffs announced by Oracle and the potential for others coming at other tech companies, too. It follows what we saw with Block. how much of a pattern is this? How much of a trend that you see massive layoffs at some of these companies? They're citing AI in some cases, like with Block, with Oracle. It's probably because of the spending that they're doing on AI for why they have to reduce headcount so rapidly. Have you ever seen anything like this in your time?
Well, yeah. I mean, I think this recent trend, you can really trace it back to when Elon Musk took over Twitter and, just decimated the workforce, and people thought that Twitter would crash, it would never work again, and it still works. So, under the name X. So I think ever since then, there's been this carrot in front of CEOs saying, wow, we can get away with like a lot fewer people working here. Right now, they're saying, well, we're doing this because our employees can be so much more productive with AI. People call it AI washing. And I talked to Jack Dorsey after the Block layoffs came that you mentioned. And, he cited AI, but also he ousted as kind of a general reorganization there, which is what Oracle is saying. Basically, and you also mentioned that Oracle itself has huge expenditures in its investments in building data centers. They've got the Paramount thing happening. So they need money, and they're going to see if they can do with fewer employees.
With Block, people suggested that it was because Block hired and that hiring got so out of control during COVID. This was a necessary pairing for them. Oracle, as you mentioned, they've got a lot of other things that they're focused on, including CapEx spending on AI, including Paramount and money that they're redirecting to other places. Are there other tech companies that you would not be surprised to see massive layoffs like this coming, though? Others that have similar reasons?
Well, we're seeing sort of the beginnings of a giant cut at Meta. So
Yeah.
I think, that's one to watch. But I think all these, big tech companies are looking now to see what they can do about their workforces. A company like Amazon has a lot of people physically in warehouses and stuff like that. But and there's this other trend happening that people are getting much more efficient with coding. There's been some huge advances just in the last few months about what you can do in terms of coding. So I think that if you're a programmer at one of these companies, you're not a superstar, you got to be worried.
Mm-hmm. Anthropic has been under pressure this week as they race to try and contain the leak of the code behind Claude. Kind of crazy that this would happen. How would you view it? How would you see just how big of a problem this is? Because if you can't protect your own, how do you convince enterprises that you're going to be able to protect their information when you can't protect your own?
Anthropic is probably the most interesting company on earth right now. On one hand, they're the company behind this big boost that I just mentioned. Their Claude Code is taking the world by storm. You talk to people in technology, and people who hadn't coded in years are like not going out of their rooms, they're ignoring their families, coding with Claude. And on the other hand, as you say, huge setbacks. The big fight with the Pentagon, and this leak now, which is dangerous in a lot of ways. Not only exposed a lot of their plans for the future because the code included some stuff that they hadn't rolled out yet, but it's huge vulnerabilities. If you're going to attack Claude Code, you have the blueprint now. So there's huge ups and downs with Anthropic.
Yeah, Stephen, how big of a hurdle is this to overcome, though? Can they fix it easily? I don't understand.
Well, yeah, I mean the cow's out of the barn here. So, for in terms of this level of it, and probably you got to have the next few months. They'll survive that. I think the big problem is protecting it and figuring out what vulnerabilities have been exposed that they got to sew up. But, and I think they will get past it, because right now, if you look at all the companies that are furiously competing to be the best model out there, Claude is right now in the lead.
And then going back to the idea of companies trying to deploy this and it maybe not working as perfectly as they anticipate. And I'm not just talking about Claude, I'm talking about AI writ large. You look at what Amazon had done where they rolled it back and said, we're going to have to slow down. You need some oversight, some human oversight over some of the things that their AI agents have been doing. How common is that?
Well, you have to do it. We're right now, it's so tempting to automate what you do that, people can't stop themselves. And then they pull back and say, whoops, we made a mistake here. We gotta fix that. But the pressure, both in terms of keeping your workforces down and what you can accomplish by automating a lot of your activities and having multiple agents running for overnight and for days doing your work, that's very enticing. So I think that the temptation and the competition is going to lead us to get ahead of where we are, of what we can reasonably do without making mistakes. So we're going to get big advances and huge blunders like we saw at Anthropic for the foreseeable future.
Stephen, thank you.
Thank you. Bye-bye.
Bye-bye. Stephen Levy at Wired Magazine. In the meantime, it is 8:01 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off this week. Among our top stories, President Trump addressing the nation, telling Americans that he expects the war to last a few more weeks, but saying he thinks it's close to an end.
Our armed forces have been extraordinary. There's never been anything like it militarily. Everyone is talking about it, and tonight I'm pleased to say that these core strategic objectives are nearing completion.
As for oil in the Strait of Hormuz, the president saying the strait will, quote, open up naturally. Check out oil prices at this hour. You'll see right now, WTI is actually up by 9.7% to $109.31. It's actually trading above Brent, which is also up by close to 8% to 109.17. Usually there's a spread and $6-7 with Brent being the higher traded. We'll have to look in a little more into why this is happening right now. It may have something to do with May delivery, and we're looking at June on the Brent contract. So maybe that tells you a little bit about more concern on the May contract than June. I just noticed that we're looking at May on WTI and June for Brent delivery, which would probably explain that. Take a look at where the futures stand with these higher oil prices. You can see the Dow futures are down by 700 points, the NASDAQ off by 528, and the S&P down by 113. Not sure why the graphic's so small, but I can't see it that far across the room. Also, SpaceX has confidentially filed for an IPO, bringing Elon Musk's rocket company one step closer to what's expected to be a record public offering. SpaceX could target a valuation of more than $1.75 trillion and reportedly raise up to about $75 billion.
Joining us now, Ulrika Hoffman-Berhardi, Chief Investment, Chief Investment Officer for the Americas, but global head of equities at UBS Global Wealth Management. Just makes me nervous even thinking of all those responsibilities. Ulrika, how you feeling? You all right?
Yes.
How'd you sleep okay last night? Let's talk. Prior to the war, I think you were somewhat optimistic about things, about stimulus, about maybe a broadening of the moves in the market, but a continued positive spin on 2026, even though the AI trade is changing.
Yeah.
You still are looking through this unless boots on the ground and the strait stays closed. Is that fair?
It's a pretty good characterization. So we remain constructive on equities, but as you pointed out, we changed our stance quite significantly at the end of last year. We were very focused on technology, a concentrated bet on technology for the last 2.5 years. And at the end of last year, we said we need to broaden out, we need to diversify across the different sectors of the economy. And I think that is even more important now also in navigating the geopolitical conflict, not just within equities, but also across asset classes. And as you pointed out, the best hedge against these oil-based inflation shocks is oil itself.
Yeah. The AI trade, did that change as well? You're looking now at the disruption and the risks from that, not as much as the positive aspects of it. Did that change? I mean, everything's run up so much at this point.
Yeah, we think AI is still underappreciated,
Oh, okay.
both in terms of its capabilities, but also in terms of its disruption risks. In terms of capabilities, what we have seen over the last 3 to 4 months in coding is unprecedented. There's been a super exponential growth in capabilities. AI used to be just a digital coworker. Now it's autonomously writing code, and not only that, but is also self-checking the quality of its code.
We were just talking, though, it's not always right, and sometimes it's been rolled out a little too rapidly without the human supervision.
There is still a meta layer where the human is involved, but now the code increasingly checks itself, and you as a human are only checking that the code is checking itself properly.
Wow.
So that's the level we're at.
So you need fewer and fewer humans for every AI interaction, every build.
Certainly on the coding side. We think that's a harbinger on what's to come also in knowledge work more broadly. But then, of course, also there are disruption risks. We have seen it in software, but we think there's disruption risk across the broader part of the digital economy. And if we have more and more agentic AI, what happens to advertising? What happens to the way we shop? Is consumption going to be ultimately more predictive coming from AI, telling us what we need? Because they know so much about us. So there are a lot of questions, which is why we downgraded the technology sector and communication services, because we want to see how this is going to shake out. And you mentioned the SpaceX IPO. There are probably 2 more IPOs this year. And the big question is twofold. One, of course, these IPOs need to be funded. Is that funding coming out of the stock market? And also, these companies need to show profits. And are they going to encroaching on the moats of the existing, especially Mag 7 companies?
Remember, when did you become CIO of the Americas?
That was in June of last year.
Who was your predecessor in that position?
First, Solita Marcelli, and then before that, Mike Ryan.
Mike Ryan?
Yeah.
That's what I thought. Because all my money's with UBS. It goes all the way back to GE and Kidder and all that stuff.
That's awesome.
Yeah, I ended up at UBS. Okay,
Yeah.
so, I mean, believe me, you need to keep me happy. Whoa, I mean, for...
Now I'm trying
no.
harder. Now I'm getting nervous.
No, I'm kidding. No, but I remember they got mad at me because you had one guy, Mike Ryan, who was bullish, and you had the other guy, a French guy. You remember that guy? And
No.
one was bullish and one was bearish. I'm like, well, we're in different parts of the firm. I'm like, what, are you giving the good info to the rich people? You give me the crappy info because of it. And then they haven't been back on since. But Mike Ryan's gone now, so it's you now, and you're here.
Mike Ryan is still with UBS, so is
but
Southwest
not global CIO.
Yeah.
Is Francois? Was there a Francois?
Maybe before my time. I only joined 2.5 years ago.
Remember?
No, I'm looking, trying to find
Look it up.
You didn't give me a whole lot to go on.
No, I didn't. You get mad at me. That's neither here nor there. So, base case, short-lived, what's happening in the war right now. But that could change. Or it couldn't change. Because you mentioned, I'm sorry to interrupt you, you mentioned the midterms. So there are constraints other than just, I guess, strategic constraints. There's political constraints, right?
I think lots of uncertainty when it comes to geopolitics, but when it comes to constraints, there are some certainties. And I think there are 3 types of constraints. Facing once the US, we have the midterm elections in November. And when we look back at history, prolonged military conflicts have not helped presidential popularity ratings, right? Truman and Johnson, I think, are 2 good examples for that. But then also we face constraints in Iran. We have, of course, a very weak economy already heading into this military conflict. Now the economy is further weakened, the military is further weakened. So I think they probably also would like to see an end to that conflict. And then the international community, it's not just an energy choke point, and you've talked about it also, fertilizer inputs, helium, which is very important to industrial production. So I think these constraints are only going to become more and more binding by the day, and therefore I think also the probability of a resolution increases, even if we might see more short-term escalation.
Trahan, I came up with it. Trahan. Remember that guy?
Yeah.
No.
Oh, no.
Okay, good. It's good that you know. I can remember things. Has it happened to you yet? I can remember things 30 years ago, but is it the third today or is it?
The second
Second.
today.
Okay, I knew that.
Second.
I knew that. No, but that happens. I don't know why. Thank you. Hope to see you again. Was everything okay with this? You're happy?
Yes, thank you for the
You had a good
question.
experience.
for coming.
Okay,
I
good.
wasn't
'Cause
sure when we
we
were
lost
on.
you. Yes, we lost you.
Still on. Before you say anything, look out, we're still on.
Yeah, right. Oh yeah, we are. Yeah, the cameras are still on. But we had you. We lost them for a while because I got mad that they were. You know, you were long and short. I remember commodity funds that used to do. So they'd have one fund that was long, another one that was short. They'd
Do you
always.
remember one time Mark Haynes was on set and you go, oh yeah? Who's our guest host today?
Oh
And you
yeah.
let him say,
And the guy was next to him. I went like that. Who's the guy? And he was like. I know. I've turned into
it
him.
happens to all of
Turned
us.
into him. Oh, we can.
Thank you.
No,
Appreciate it.
thank you for the
Okay.
question. Appreciate it.
Okay.
All right, when we come back, President Trump making the case to the nation about the attacks in Iran, and later, Elon Musk author and Tulane history professor Walter Isaacson on SpaceX confidentially filing for an IPO. Of that and much more with Walter. Squawk Box. We'll be right back.
You know any?
We are on the cusp of ending Iran's sinister threat to America and the world. And I'll tell you, the world is watching. And when we do, when it's all over, the United States will be safer, stronger, more prosperous, and greater than it has ever been before.
All right, now the latest on the Iran war in reaction to the president's speech last night. Let's bring in Firas Maqsad, Eurasia Group Managing Director for Middle East and North Africa. It's good to see you this morning. Thanks, Firas, for joining us.
My pleasure, Joe.
What do you think the president said last night that was different than what we were thinking earlier in the day and earlier in the week about the Strait and what happened with WTI and Brent today. What came out that it's going to stay closed longer?
Yeah, Joe, I think this was primarily a communication exercise targeting the domestic audience, because from a policy perspective, the president, if anything, only reaffirmed what most of us already understood, namely that this war will go on for at least another 2 to 3 weeks, perhaps a bit longer, to achieve its mission. He reiterated what the objectives are: to further degrade Iran, its ballistic missile program. He sunk his navy, re-obliterating the nuclear program, what's left of it after the 12-day war. But I would argue that there is an unstated objective, at least he didn't highlight that yesterday, which is what the president has referred to as taking Iran's oil. He's made that clear as an objective as late as Monday in an interview with the Financial Times. But in terms of timeline and objective, there wasn't much that's there. I think we're going to be heading towards a very important inflection point mid-April, in that 2 to 3 week time frame that he outlined, which is when the president will decide whether to go for the maximalist approach and try to seize control of Iran's oil. A lot of the military assets that are currently still on the way to the region, the USS Bush, some other Marines, the Marine Expeditionary Unit, elements of the 82nd Airborne, those don't get there until mid-April. And the president is going to have to make a decision whether he wants to go all in or whether he wants to take an off-ramp. And I think the domestic standing here in the U.S., the impact, the energy impact, but also Iran's residual military capabilities are going to be key factors.
Right. That's what I've been thinking for us, that we have no idea. And when we have these brief periods where we think things are winding down and the objectives have been met, we never know whether that's what the president, that's what he wants to signal as a head fake to Iran, to whomever is trying to follow along. I don't think we have any idea. And there could be some major, as you say, inflection point a couple of weeks from now, and we have no idea what that might be. But there's a lot of things moving into the area that make me wonder whether we're actually seeing things pull back or whether they're going to ramp up even more so.
Yeah, Joe, I would argue to you that every time the president has chosen to deploy military assets, whether it was in the 12-day war against Iran some year and a half ago, or whether it was against Maduro in Venezuela, and then the lead up to this war, he's actually used those military assets once they're in theater. Also, I would say that there's a clear, discernible strategy here in terms of communication. The president time and again has said that he is in touch with the Iranians, that the channels are open, that they're negotiating, that the Iranians want a deal, only to back away from that. I think it's in the interest of the administration to try and manage oil prices, manage the markets, keep them under control, in order to prosecute this war longer and further degrade Iran's military capabilities. So if we see a lot of back and forth in terms of what the administration is signaling, it's part of that strategy of actually trying to manage the markets. It's not necessarily indicative of where the president is going. I'm watching the military deployments much closer than I'm actually watching and indexing around what the president is saying.
And just in terms of trying to get into the president's psyche, when you look at the period when he wasn't president to where he came back, there's a lot of adversity, obviously. And a lot of times I don't think he cares what's being said about him or I know he does, but I think he's going to do things based on what he's going to do. And it makes me think, even if there isn't in this country, if there's memories of Iraq and if there's no stomach for casualties and all these things, I think that he might do it anyway, just based on what he thinks is necessary and needs to be done long term for that part of the world, which is why I don't think anything's off the table.
I happen to agree. It's actually astonishing that we're talking about ground troops and Marines being deployed to the region. I mean, this is a president that time and again has messaged no forever wars in the Middle East, certainly no ground troops in the Middle East, and yet here we are, thousands of American Marines and soldiers on their way to the region. I think to put this in a broader context, the president has always been fixated with this idea of controlling the oil. Whether it's Maduro's oil in Venezuela or even prior to that, it was in Syria and justifying the residual American presence there is having to do with the oil. And certainly when it comes to Iran, that's part of the messaging that has popped up every once in a while. And perhaps this is something that has to do with great power competition with China. I don't think that the president was delighted to see the Chinese so successfully weaponize their control of the critical mineral supply chain. And greater control over the globe's, the world's oil reserves is something that continues to animate Donald Trump.
As a businessman and now as obviously the president, you're right. Oil, minerals, it's all based on economic implications because there's no strength without a strong economy. It almost goes hand in hand. All right, for us, what is it? Today's, I keep it figuring out. Today's
April 2nd.
The 2nd?
After April.
You're talking mid-April is when does everything arrive? What in your calculus that you're talking
Different
about?
things arrive at different times. There's already a Marine unit that is just outside the Straits. The second is, I'm told, due to arrive next week. And then we're waiting for the carrier. And the carrier, the best estimates out there that I've seen from military planners is, again, around that mid-April timeframe. So that's the moment to watch. It's the go, no-go moment for President Trump, and whether he wants to begin to go for the off-ramp or try to take the oil.
Very good. All right. Thanks, Faraz. Appreciate it. And we'll talk to you before then, I hope.
My pleasure.
All right, very quickly, let's show oil prices again, because oil prices are what are moving the market, but there is a weird thing that happened overnight. Okay, you right now see...
Yeah, that makes sense.
Yeah, this is the May contract for Brent expired. I think it was reaching towards $119 before its expiration overnight. It expired because back in 2016, they changed it so that the Brent contract would expire a month and a day before actual physical delivery. It takes longer for the North Sea delivery mechanism to actually work. So this morning, when you look at our boards, don't just show me Brent, because you can see 109.11, which is up 7.8%. WTI is trading at $110 for the active month. That is still May. And that's simply because it doesn't expire, the May contract for WTI, until I believe April 21st. So you're going to continue to see this where, because of the action in the markets and because the movement has been so volatile and so rapid, when you look at our boards this morning that show you WTI versus Brent, you will see that WTI has actually moved ahead of Brent prices. It's because we're working on different contract months that are active, and there's still a lot of action in that current month. So $109.94 for WTI crude for May delivery. That's up 9.7%. We're looking at the June contract for Brent, which is at 108.84. But again, this is simply because of the expiration of that May contract. It was up at about $119 before it expired. That is where you would see the crack spread still, or not the crack spread, but the spread between WTI and Brent. We'll continue to keep an eye on this, but Brent and WTI, those energy prices, are what are pressuring the futures this morning. We'll talk more about that in just a moment. Up next, we do have stocks on the move in the pre-market. And then a read on the labor market. We get weekly jobless claims. That is ahead of tomorrow's big jobs number. Tomorrow, the markets are closed for the Good Friday holiday, but Squawk Box will be open for business. We're going to bring you special coverage of that jobs report. We start at 8 a.m. Eastern Time. Jobs numbers at 8.
Debuting a new possible time switch
time for us.
8 to 9 only, maybe.
And welcome back to Squawk Box. I'm Frank Holland. Here are your morning movers. We're going to start with shares of satellite communication company Globalstar. You can see they're surging just about 12% right now on an FT report that Amazon's in talks to acquire the company. The deal could bolster Amazon Leo, the tech giant's internet from space service. Amazon's launched about 200 satellites into orbit since last April as it competes with Elon Musk and SpaceX. Again, these shares up just about 12% right now. Tesla shares, they're lower this morning, down about 2% as the EV makers expect to report Q1 deliveries before the bell. That number is expected to be down roughly 13% compared to Q4, and that's despite the company seeing slower demand in key markets and intensifying competition. Tesla's China-made electric vehicle sales, they rose for the second quarter in a row. That's according to the China Passenger Car Association. Besides Tesla, all the remaining Mag 7 names, they are in the red this morning. Tesla shares down over 2.5%. Also looking at Bitcoin this morning, down this morning, trading right around 66,000. You can see down about 3% right now. Other cryptocurrencies and crypto-related stocks, they are falling as well. Digital assets rose earlier this week on hopes of de-escalation with the war in Iran, but they fell along with stock futures. As President Trump said last night, the conflict will continue for another 2 to 3 weeks. Joe, back over to you.
Great, Frank. Thanks. Up next, jobless claims and U.S. trade deficit data. The numbers and the market reaction is next. And then a number of topics to discuss with Walter Isaacson, Tesla, SpaceX, AI, and more. He joins us in just a bit. Squawk Box will be right back.
Welcome back to Squawk Box. Rick Santelli here live at the CME HQ with the breaking news on this Thursday morning. The trade balance, which is a deficit for the month of February, coming in on the light side, minus $57.3 billion. And that would be the lightest going back, well, actually, since last month was a bit less, at minus 54. This would be the largest since Dece of last year. Last month of 25, we're around 72 billion with a minus sign. So nonetheless, really, this is some progress. just consider that some of these numbers, especially when you go back to October of last year, at minus 31, that was the smallest going back to 09. So progress being made. Initial jobless claims for the week ending March 28th, expected 212,000. Take away 10 and you arrive at 202,000. That is a good number. That would be the smallest since the second week of January, the 1-9 week, when it was 201,000. And that number was the smallest going all the way back to 24 when it was 195,000. These are getting to be quite low historically speaking. And if we look at continuing claims, 1,841,000 follows 1,816,000. That would actually be the largest since the first week of March when it was 1,851, because once again, we are really moving down on these numbers quite extensively. We see that yields are elevated, but nowhere like Europe. If you look at the Japanese 10-year or the German 10-year, they're really at lofty levels. Our 10-year right now hovering at 435. Well, yes, it's higher. It's up 3 basis points on the day. But the high close is the 27th of March at 443. The intraday high was closer to 4.5, but still underneath. And the point here is that we are all watching oil. We see that front month premium on crude oil futures for the month of May. That front month always gets the biggest horsepower kick when you see news like we have over the last 6 hours. Just remember, their last trade in that futures contract is the 21st of April, basically less than 3 weeks away. Joe, back to you.
Okay, Rick, thanks. Let's get to Leslie Picker, joins us with some breaking news on Blue Owl. Leslie.
Hey, good morning, Joe. Blue Owl experiencing elevated redemption requests for 2 of its private credit funds in the first quarter, according to letters to shareholders that came out this morning. The firm's flagship OCIC, with about $36 billion in assets, received redemption requests of about 21.9% of shares outstanding during the first quarter. Blue Owl's smaller tech-oriented fund, known as OTIC, received redemption requests of 40.7% during the same period. Blue Owl attributes this to, quote, heightened market concerns around AI-related disruption to software companies. In both of these funds, Blue Owl opted to cap these requests at 5%, meaning in OCIC, investors could redeem about 1/4 of what they wanted, and in OTIC, it was about 1/8 of what they wanted. Blue Owl, which is unique actually in having 2 of these non-traded private credit funds, is also among the last to report redemptions. The firm's percentage of redemptions is multiples higher than their peers. Most firms have opted to use that same 5% cap, but some, including Cliffwater and Blackstone, allowed slightly more redemptions during the first quarter. Blue Owl's OTIC Technology Fund saw redemption requests of 17% in the prior quarter, in the fourth quarter, which it did fulfill. OCIC's requests were 5% during that period. And these are also 2 of the funds that hedge funds Saba and Cox have offered tender offers to locked up holders at a steep discount. Also worth noting, guys, that both funds saw gross inflows, which combined with the 5% gates meant that net outflows were somewhat modest, and this is actually what matters for the firm's revenue. The stock, though, for the parent company, OWL is the ticker, that's down more than 6% this morning, down by 42% this year, guys.
Those are some big redemption requests.
Certainly are. All right, Leslie, thanks. We're gonna do that ourselves. We said no. Let's Leslie.
Leslie, one question on that: the firms that are offering to buy out the investors at the 2 Blue Owl funds that aren't going to be able to redeem, is that a common practice, or does that tell you if you've got the patience and the money, maybe they see long-term value in holding on to those positions?
You're exactly right, Becky. So Saba and Cox, I talked to Boaz Weinstein a couple of weeks ago about this very dynamic. They see a lot of opportunity here. They're offering basically a 30% discount to tender investors who are facing this illiquidity pinch. And they actually like Owl for the long run. They're long a little bit of the equity, at least they were a couple weeks ago when I talked to them. And they kind of see this more as a byproduct of essentially a gap between what's going on in sentiment and performance and an opportunity for them to offer liquidity for investors who may not want to see it through, until they can ultimately get whatever money back that they'd like to.
So if you're a retail investor, you get fleeced coming and going on that because you thought this was a liquid asset that is liquid, not liquid a lot of the times when you may want it or need it.
Exactly. It's definitely a learning lesson. I mean, it's in the fund documents. Every fund document has that 5% cap. It's something I think when these funds were structured, I don't know how many managers anticipated just the level and the scale of the emotion that we're currently seeing with regard to the redemption requests and the difficult decision making involved in whether to restrict redemption requests, restrict them a lot, or to take steps as we saw with Blackstone where they were able to raise it to 7% and then put in the firm's own capital and employee capital in order to fulfill all of the requests.
The question is if you just were able to leave it there, if you could ride this out and there is value, and it sounds like certainly some of the professionals believe that's the case. Leslie,
exactly.
Thank you.
Yeah, and that's what they say in the Blue Owl letter too. They basically say, we see a lot of opportunity in the market. We've seen this in a few of these letters, basically, because spreads are widening as a result of all of this turmoil and concern. And so if you are a private credit manager, that could be a good opportunity if you have the liquidity to put into place. And so if you are to fulfill all the redemption requests, you may not have the same liquidity profile to be opportunistic if you do see various potential in the market environment. And so that's another part of the rub as well.
You can't do it if 40% of your funds are gone. You can't be opportunistic.
Exactly. Yeah, you definitely cannot.
Leslie, thank you. All right.
Thank you.
Welcome back, or let's get back to what we were just talking about with jobless claims. For that, we want to bring in Aditya Bave and Steve Leisman on the jobless claims number and the trade deficit. Aditya is the head of U.S. economics at B of A Securities. Steve, why don't you run through very quickly what you thought about the numbers, and then we will talk to Aditya about it.
Can I yawn publicly on national television? I mean, look, it's good yawning in the sense that we have remained, I don't think we have this chart up, I just asked for it, below 35,000 since September. And there is a clear downward trend in claims. So if you're looking for pressure from the job market, which, by the way, was the thing that people who wanted the Fed to cut rates got their hair all on fire about, was the market was weakening. That's not happened. I wish you could see my data program here, but I just tried to overlay the unemployment rate on that, and you had this steady unemployment rate in this 4.3 to 4.4 area, with these steady jobless claims at 200,000, and you're under, 2 million on the continuing claim. So it's a very stable job market. You did have, by the way, the Challenger this morning. That was interesting. A rise in job cuts, 60,000, or announced layoffs, that's actually the way to put it. But a big chunk of that, 25%, was related to AI, and AI replacing jobs. So we're watching that. That's a big factor.
How much of that is the AI whitewash, where you're saying it's related to AI, whether it is or not?
I can't go through every single announcement here, but more and more they're AI related is the point, and you've
Or at least
lapped.
they say they're AI related.
You've 1 year lapped the layoffs from the federal government, so now it's more a private sector story.
Okay. Aditya, let's talk about what you are doing, because you have recently cut your growth forecast based on what's happening with the war. I think for your global growth forecast, you're now looking for the year for 3.1%. That's down 40 basis points from where you were before.
Yep, that's right. So our commodities team changed their forecast. They're expecting WTI to peak this quarter, but they're looking for it to remain quite elevated. So they have an average for this quarter over $90 and then around 90 for the next two. From our perspective, the duration, that kind of duration of shock is going to weigh on GDP growth. So we took it down 0.4 for the year from 2.6% to 2.2%. And then with that comes inflation. Yeah.
That's similar to what happened in Navy. The only point I want to make is you have this reasonably big decline, but the 2.2 is not bad.
2.2 is not bad.
Sorry.
No. That's a great point, Steve. Thank you for putting that in context. 2.2 is not bad.
2.2 for the United States?
It's 2.2 for the United States.
Potential growth, right? It's in and around potential.
A third of those, 0.3 of that comes from the shutdown. So it's 1.9 underlying. It's still okay.
Yeah.
It's fine. But with that, it's a supply shock. So with that comes higher inflation. We have the core staying above 3%, core PCE for the rest of this year, and headline could be close to 4% this quarter.
But you now are assuming all of these assumptions are based that the war in Iran will end before the end of April.
Well, the assumption is that there will be some sort of sustained disruption, but that these levels of prices will not be sustained indefinitely.
Aditya, you are monitoring on a weekly basis with your Bank of America credit card data. Folks, don't get worried. It's anonymous. We don't know what you're spending, but they are able to aggregate it, which is a wonderful and new development.
I'm glad you said that because otherwise I would have.
It's anonymous, folks. Just relax. But it really adds a lot to the understanding of the economy on a very, very timely basis. What are you seeing in terms of the credit card data?
We've been pleasantly surprised by what we've seen for the first 4 weeks of March. So we just put out the data through the 28th of March. We basically work on the same cadence as jobless claims. So every Thursday, we tell you what happened through the previous Saturday. And it's dollar spending. So the total numbers are going to go up because oil prices are up, gas is up as well. What's interesting is that ex of gas, spending remains very robust. It took a leg up at the start of the year, a couple of weather disruptions in Jan and Feb, but through March,
Baby, don't worry about a thing, 'cause everything gonna be alright. Baby, don't worry about a thing, 'cause baby, it's gonna be alright. Woke up this morning little surprised. 3 little birds sitting on my doorstep. Baby, don't worry about a thing, 'cause everything is gonna be alright. Woke up this morning, yeah, with a good surprise. A beautiful woman right before my eyes. Baby, don't worry about a chain, 'cause everything's gonna be alright.
Getting ready for that redistribution of wealth. Rivian's in the news.
R2 model, which goes into production and theoretically first deliveries this quarter. We'll get exact timing perhaps in the next few weeks, in the next month or so from Rivian. Financials coming after the bell on April 30th. Guys, we'll send it back to you.
Okay, very good, Phil. Up next, SpaceX has filed confidentially for an IPO. The aerospace company could break the record for the largest public offering in history. We're going to talk all things Elon Musk, the future of space travel, also AI with Walter Isaacson. Next, we'll be right back.
Elon Musk, SpaceX, has confidentially filed for an IPO that could be valued as high as $1.75 trillion. Joining us right now is Walter Isaacson, Perella Weinberg advisory partner and author of Elon Musk. He's also, of course, a CNBC contributor. And Walter, welcome. It's great to see you.
Great to be back, Becky.
Okay, so it's been a while since we talked about SpaceX and its potential IPO with you. Does this come as a surprise, the valuation that they might be getting for this? And I say come as a surprise to you before you wrote the book or while you were researching the book. Did you anticipate that it could possibly be this big?
Now, one of the amazing things when I was writing the book is the guy is reinventing the internet in low Earth orbit. He's got more than 10,000 satellites out there, and that is a huge market if you can do communications. And that's just one element of SpaceX. If you look at it being combined with XAI, his AI company, if you put data centers, if you put power centers in low Earth orbit, that's a huge transformation. And last night, I don't know about you, but I'm old enough to remember holding my breath when it got down to T-minus 10 seconds and you're launching. I think we're going into a new era of space, and that's going to make SpaceX, especially if we're going to put a base on the moon, extraordinarily valuable.
So is this potentially his biggest act, his best act ever? Forget about Tesla, forget about any of the other things that have come before. this is
well,
the biggie?
Definitely. I mean, I think bringing us into the era of electric vehicles was really big. It seems a little bit less big now that we're backing off some on electric vehicles. Who knows what gas prices will do with that? But I think ever since he was a little kid with very few friends sitting in the corner of a bookstore reading science fiction, this notion of becoming a multiplanetary species, as he puts it, of going to space, has been the thing that has driven him the most. And I think SpaceX, when you combine it with XAI, and you know what, Becky, this is a prediction that may or may not come true. I'm sure at some point he's going to be yearning to make it one big company, because the AI components of Tesla really, especially the real world AI components, mesh well with what's happening in SpaceX.
I mean, that makes sense. It makes sense from the investor's point of view, too. If you can get all of Elon instead of just certain portions of him at different points in times, I would imagine most investors would be in favor of that. What's kept him from doing that to this point?
Hey, Becky?
Well, I think maybe doing the IPO can be a step in that direction. I think that he would definitely yearn to do that, especially if he has
For
control,
years, you
as he
badmouthed
will,
Elon. We don't want to hear you.
under this IPO
Yeah.
plan. Sorry.
That's the issue, is he has wanted control for a long time. I think he's been frustrated that he
people
hasn't
are
been able to get it
disgusting.
one way or another.
I think the IPO you're looking at for SpaceX makes sure that he can have control. And I think that he blurs the line between his companies. I mean, I know all those engineers still, they go back and forth from SpaceX to XAI.
You look
to
funny
Tesla.
today, Becky.
And so I suspect
What
that's
are you
on his
dressed up as?
long-term, medium-term
Spinach?
horizon.
I mean, it's amazing what he has
You look
done.
like a spinach to
and
me.
Done time and time again with
What the
new
hell are you
innovation
wearing?
after new innovation.
Yeah, you're right.
When you talk
think
to
you're
a
cheating
long-term
it?
investor like a Ron Barron, who's been with him for a long time,
would never
and
let
he
a
has
woman wear
completely
that.
hitched his wagons to him again. You know, he's very excited about SpaceX coming out.
Are you
The one
mold?
thing that Ron will admit
Is
is
that what you are?
the biggest issue is the key man factor, that these companies are Elon Musk. Is there any move or any thought to what these companies would be without Elon Musk? Is there a plan for the future?
Well, there's definitely a key man factor there. And if you watch Musk in action, and you've seen it in the book I wrote, it's him driving things that nobody else would be trying to drive things through.
We're at a
However,
pivot point
Glenn Shotwell
on the
is
spy.
an awesome person. And I
The
found
200
it quite
today is gonna be
interesting that
your
obviously
pivot
with
point.
Musk's permission or encouragement,
spy.
she's on the cover of Time
On the 1
magazine looking
Let's look
as
at the
if,
5.
she's part of the command
5
team
minute.
there. So I think the slightly
So we've had
higher
a great
visibility
run.
for Gwen Shotwell is important too. She's
Does anybody
somebody who's
remember
been
my
able to
strategy
be
about the
joined at the hip
Fibonacci's?
with Musk, not try to tamp down his drive, but be able to help execute it.
We had John McNeil on yesterday, the former Tesla president, to talk about
we ready?
the formula for how this all works.
Are we
He said that
ready?
you had encouraged him to write this book on the algorithm.
Totally.
that
This
Dr.
Rivian
Deal is
pump.
great. And that algorithm, which I know
You
you
know,
talked about yesterday, which is,
Biden
you know,
administration put
first of all, eliminate,
billions in a car
question
that doesn't
every
even have-
regulation,
didn't
eliminate
have a
parts,
plant,
simplify.
I
That's
remember
driven
right.
Tesla, that's driven
They
SpaceX,
come out and
John
build 10,000
McNeil. And I
cars in a
remember
quarter.
sitting with John McNeil, who was a great source
Tesla
of
does
for
500,000.
my book. And boy, he knew the dark side of Musk. He knew.
Why do
he
they
saw
keep pumping
Musk
this car up?
going through those
This company will never.
2018
I know because
meltdowns.
Biden put
But he
so much
also
money
knew
in it.
that algorithm was getting rockets
It's like
into
Wall
orbit.
Street
It
hope.
was getting Teslas off the production line. And so I said to him, I have a chapter on the algorithm in my
10,000
book. I
cars.
said, you got to write a whole book on that
Give me a
algorithm.
break.
I was just out at Michoud, the space flight facility here in New Orleans that built Artemis and the main part of the rocket.
They're pumping it because they think they can
that
get
went up
some kind
yesterday.
of step
And
in on
it
the
is
higher gas
very,
prices of what
very
they're doing.
great as manufacturing, but they
And
don't
only
have
the
that
elitists
craziness
that make
factor
over
that
100
Elon
grand a
has,
year
which is why I think it's good.
can
You're having
afford
both NASA
an
and
electric car.
SpaceX, and to some extent, Jeff Bezos,
If you
all
don't
being
have a
part
family.
of this race into space.
Yep. Walter Isaacson. Walter, thank you for
Anybody in
joining
here
us
have an
today.
electric car?
All right, let's take a look very quickly at the futures. You are going to see that right now it looks like the Dow futures are down by about 630 points.
But then I might
NASDAQ
not even
futures
have a
are
car
off by
because
just
I'm gonna
over
live on some kind of
450
small
points,
island.
and the S&P futures
need a
down by
car.
close to 100. It's all coming
I'll get
because
a
of what
little
we've been watching with
three-wheel
oil
motorcycle,
prices. They've
live in tropical
skyrocketed
weather all
overnight.
year long.
WTI is now up by 12.5% to $112.60.
I'd used a
Brent is up by
moped in Hawaii for
7.5% to 108.94.
about 2 weeks until I got
You
my
haven't
truck
seen
shipped out to me.
WTI close above Brent since
Then the son of a guns,
2010.
on their
It's a
disclosure,
weird
when I
phenomenon
ship the
that
truck,
this is happening
make
here.
sure
but you'll
there's
see
no
that
valuables in
WTI
there to
is
get
the May
stolen.
contract that's trading. Brent May
So I had to
expired
lock my
yesterday, so we're
subwoofer
now
in,
trading on the June
and I had this
contract.
little bitty
What we're
skull-like
watching is massive volatility
went
that
into
is
my
moving
fire,
the current contract, and that's why you
my
see
lighter
this huge spike,
lit up.
particularly
They
in
stole
oil
it.
prices for WTI. Hey, make sure you join us tomorrow. We've got that big jobs report coming out. Joe and I will be here starting at 8 a.m. Eastern time, and we will see you
ship a
then.
truck
Right now, it's
in
time for Squawk on the Street.
2004. Hey, we got your truck. It's a cool truck, Dodge, yellow Dodge 4-wheel drive, perfect for Hawaii. Well, that's all that. What was I going to type in here? Spy. So you got to zoom out. Instead of just looking at the daily, you got to zoom out. 10-day, 30-minute. See, we're at support. We've had days a whole lot worse. The triple bottom called that out. If you have patience, this is the best time to make money. Apply a little bit more patience. Zoom out. So I've got this is a two-headed snake. It's a triple bottom. It's a snake breakout, pull back, boom. Very bullish. We're at the 200 for right now. If we stay above the 200 on the 30-minute, now I want you to also start looking at that hour. You got to zoom out when you're in a pullback. You can't get stuck looking at the same old chart every single day. You got to learn how to adjust to the weather, to the climate. Are you going to go outside in the wintertime, 20 below, wearing shorts and no shoes? Or are you going to put on a winter coat, maybe some insulation, a pair of boots when there's 2 foot of snow out? You got to zoom out, zoom out. So I got a neckline right here. That's called a neckline.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Oil spikes about 13% here since the president's speech last night. A new cycle high of 112. WTI actually more expensive than Brent today, although the front-end contracts aren't exactly matched up. Equities, meantime, look to retrace some of this week's bounce. Not quite to Monday's 6-month closing low around 64.75, but close. Markets are closed tomorrow for Good Friday, and we'll get that jobs number.
Then I want to take
roadmap begins with the president saying the U.S. will hit Iran extremely hard over the next 2 or 3 weeks.
Use them as support
Plus more
levels.
private credit concerns. This is Blue Owl caps fund redemptions at 5% for 2 of its private credit funds. That follows what were redemptions far above 5%. And we'll also talk SpaceX.
Because you have a head and shoulders right here.
For an IPO, it would likely be
left shoulder, head,
offering,
right shoulder.
Guys, one of any number of large IPOs we may see over these next, let's call it 8 to 12
And then I'm going to put another support
Let's
line
begin with
right
the markets
here.
and the president's primetime
bottom
address
of
last
that
night. When it
head.
comes to oil, he delivered this message to allies who refuse to help the U.S. in this war.
Go to the strait and just take it, protect it, use it for yourselves. Iran has been
See, a lot of rookie
essentially
traders haven't
decimated.
lived what I've lived.
The hard part is done, so it should be easy.
People are
And in
really
any
in fear
event,
right
when
now. I don't
this
know why.
conflict is
It just
over, the
doesn't make
strait will open up naturally.
no sense to me.
Meantime,
We had
the
a
French
war on
responding
oil
say it's
under
probably
Biden's
going to be more of a
regime.
diplomatic
Gasoline got
solution than
up to
military in the
$5
strait.
to $8,
investors
$9
didn't
in
get what they wanted to
California.
hear last night. I think that it was
For 3 years
pretty straightforward
straight.
that
Nobody
there were a lot of
complained
people
about
buying
gas
stock
prices back
betting
then.
This was going to be the official wind down, and we understand.
Nobody.
It.
But
Not
me,
for
because I have a
bombing,
job. I got to
of
work.
course, the
I got to pay for that
Iranians
gas
still
every month.
bombing too. You know, David,
Part of my business.
We understand that the Navy.
I'm saving
is being
half of what I
decimated. We
was during the
understand that
Biden
Air
years
Force is
in
not
gas.
a factor.
I was spending
in the program,
150 to
but
200
those
a month.
really aren't on the
I'm only
table.
spending
What's
about
on the
60
table is missiles
to 80
and
now.
drones, and they don't stop, and as long as
Gas
they
was a
don't
lot
stop, I
worse.
think it makes it problematic.
Energy
that
was.
the U.S.
We were at
just
war
stopped.
with energy.
Okay, so we're here saying that
gave
today.
Iran
Obviously, yesterday we were saying something quite different. I just don't know, like as an investor at this point,
oil to sell.
I mean,
It's sit on
if you
your
care
hands.
every day,
We gave
you
Russia.
don't. I
Although
guess
there
look
was
for
a
entry
war going
points on
on
certain
for
things
years,
and
they were
just sort
still
of know that this is going to end
dealing
at some
oil.
point, most likely in the shorter
it to
term,
China.
can we say?
Yeah, but I
Selling
mean,
it
I
to
think that-
India.
Yes, you're right.
But
I think
question
that
then
when-
still becomes
The
what's the
problem with that,
impact of the closure of the strait in
loosen them
terms of
sanctions
overall
up.
and macro, and
But
does
there's
it
a
bring on
problem here in
recession, or
America.
at least in certain parts of the world. I don't know. I guess all I'm saying is this is hard.
It's very hard.
And they
It's
put
to navigate.
Remember, the average move, the S&P
$1 trillion
last-
in the
at-
EV
at
sector
the last trading
that
day
just
of the
got
week,
wasted.
since the war broke out, is minus 1.28. Last Friday was minus 1.67. It seems like we're going to be in line to do that again, Carl.
Giving $7,000
to
credits
actually
to the
take
rich
action.
to
You
buy their
looked at
EV
The rally
cars.
Tuesday, pretty broad. Yesterday's action was back with
So
that,
this is a
the
support
Mag
channel.
4, Western Digital,
Things were a lot
Seagate,
worse.
and
We had 8 wars
SanDisk, and
going on.
Micron. And those were very poor leaders for the first quarter, and they're proving to be very poor
We had
leaders for the second quarter.
genocides
Fret
that
was
happened
not as
under that
strong
watch.
yesterday as it was the day before. This is going to be our 11th red Thursday in a row. And then your
Things were a lot
post this
worse.
morning actually trended on X, in which you said it's rare that you get oil doubling and stocks not down 20%.
Well, it was unfair that I said that because that's actually Michael Semblus' work. I should have credited him. I've credited him a number of times, but he has done a remarkable work on energy as well as other topics, and he has measured
When
what
you're new to
happens
trading,
when it's
you don't
up
understand that.
100%,
You don't understand that
and all
we've
the
had
instances are down 20%.
total of a
so
50%
I
pullback
apologize,
on
Michael.
Biden.
I should
I mean,
have
under Obama.
credited you. I have credited you a number of
50%.
times. I know Michael watches.
We had
and I feel badly
30%
about that,
under
but
Biden,
his work
and we've
is
only got a
definitive.
10%
And
under Trump.
David, when you see a definitive
And that's normal.
chart
There's nothing
between
unusual
what's
about
happened
that.
when
Especially
oil's at
after having
100
3
and where we've gone,
previous years of a
20%
good
is
run.
the minimum.
Called 3 White Soldiers.
Yeah, I had an opportunity to see some of his work recently as well.
Oh,
And
you
it's,
did? That's right.
And it's quite,
Go back and watch my little
quite
video on
impressive in
soldiers.
terms of so many of the
You'll
different things
understand
that he tracks.
that I expected
whether
the
it be
pullback
power
this year, no
production,
matter
of
what.
course, which is so important
If we
right
were
now in terms of the data center build out
booming
that is fueling our AI boom and,
But we've cut
and
back
any
a
number
lot
of
of
other
fraud.
things. All right, so I don't know. Is there anything I want
Billions
to
of
own or
dollars
not
in
own
fraud that
specifically as a
happened during
result
that
of
period.
what
Well,
the
I
president
think
said
we
last
talk
night?
about. I don't want to own Blue Owl's comment.
We're going to get to Blue Owl.
No, I
and
think
private
that,
credit, which obviously
you know,
we've
I've been
discussing.
saying that Chevron is the one, and Chevron, because Michael Worth is indeed leveraged all over the world. Now, I thought the president said something very interesting, Carl, which is that we have oil. Come buy our oil. Well, no, we're not. We're continentally self-sufficient. We are not nationally
If you want-
self-sufficient. So people always have
To
to
get on
remember
that
that.
print
It's very
press
different.
again like we did
And,
back then, we'll have another
we need all we
20%
can
inflation,
get. And sometimes
which doesn't
I know
help
we
the poor.
do export gasoline because we've got refining capacity, but this is not necessarily a clarion call to buy our oil because we don't have that much.
Yeah, we talked about that yesterday, and then we'll get to countries like
So I'm
Japan,
kind of
which
positive
Goldman
about that.
today
I know
says has about 6
hard.
weeks of
It's-
LNG.
I know.
We're going to start counting
God, I
down.
wish we had
now.
more LNG, but the
last
fact is,
couple months,
it wasn't.
Iran killed
look, it's
30,000
been,
people
there were some.
of their own
It is
people.
absolutely true that under the Biden
Slaughtered them.
administration they tried to slow it down. But the problem is that these things take forever to build. Hey, by the way, there was a really good article about how pipelines ones. They take a long time to build.
Yeah, and that east-west is paying off, but it took a while, yeah. We're getting some auto numbers today. We got Rivian with Phil LeBeau's help, and now he's got Tesla. Hey, Phil.
Instead of
Hey,
letting
Carl, take a look at
genocides
shares
take
of
place, do
Tesla,
something
the
about
company
it.
delivering in the first quarter 358,023 vehicles. That was shy of expectations. The street was expecting deliveries of 370,000 vehicles for the first quarter. Production of 394,000. By the way, with deliveries, as expected, 95% of the deliveries are the Model 3 and the Model Y. That's the way it's been for several quarters here. 8.8 gigawatt hours of energy storage deployments in the first quarter. That is well below what the street was expecting. It was expecting 14.4 gigawatt hours in energy storage deployments. April 22nd, after the bell, guys, that is when we get the Q1 financials. And that's probably
We're
when
still
we hear from
bearish,
Elon Musk
as long as
next.
we stay
Although
under
you
the
never know with
200.
him, David. You know, he sometimes decides he
On the
wants to talk
daily.
before that. So that
And
is
we
the
touched
story
that.
with Tesla
This week,
and their
we got
Q1
three
deliveries.
whites.
But he'll be talking about
Three black
robo-taxis
crows
and
with
Optimus, I
two
would assume, when he
soldiers.
talks,
Yep.
right? He's not going to talk about necessarily.
Yeah, that's why the delivery numbers, David, they're not going to
So I'm
move
gonna
the
put
stock
low
right now.
support on
It
this
is all about if
SPX
you're
down
buying
here.
into his belief on robotics,
And it'll probably
autonomous,
be a little bit
AI,
lower
and
than
all of that.
Now that you got a wick
That's 2 consecutive full years
body.
of delivery declines, Jim.
on the daily.
Company's never done that.
No, and
So we're gonna put a
look.
that's good. If we go
obviously
below that,
not
that's going to
great
be
for
the new
company, but as we
resistance on
just
the
said,
SPX.
The actual disconnect between when
And
we
then
stopped
your lower
thinking about it as a
support
car
is
company
gonna
and
be
we
right
started thinking about it as a
here.
technology company, caused one of the great moves that I've
Here, let's
seen.
clean
I
this
don't
up.
want to get too negative on it because I think everyone wished they had that move. We didn't realize very quickly that they were repositioned. I remember our friend Dan Ives was talking about how we were that things were
There's the
teetering and it
support.
better start being a
See where we
technology
stopped
company.
yesterday?
And no one was saying things would be teetering and then it's going to be in trouble, which I thought was really interesting because only Musk would be
See
able to
that
make
there
it so,
body of that
David,
there
you would be able to say this,
doji?
that the narrative changed
top of
when
that
things
candle?
got bad and actually
Look where we
the stock
stopped.
flew on the new narrative.
There's nobody better.
So your next support
he
is
has
going to
backed
be the
up
candle
his,
below it and that wick.
many of his
and then the
projections.
bottom of this candle right here.
Perhaps
are gonna
later
be
than
your
people
three
thought.
supports.
We could show your face sometimes,
I
Carl.
mean,
on
1 million
camera.
robo-taxis
If
on
we
the
go
road
below
by
that.
2020.
I was
Even
about
the
to
SpaceX
say.
stuff.
I was about to say over time. But that said, there
I
are
don't see it
rockets that
pulling
go
back
up
100
all the
points,
time
but
and they
we'll
land
see.
on their own. There are. Yes,
You
he
got
is
the
now
body
talking
and
about
the
data
wick.
centers in space when it comes to SpaceX.
Everything lines up
and that
real
is something
nice.
that
It's
is
real simple.
far away
It's real clear.
potentially because it would require hundreds and hundreds of
Yeah.
launches
Zoom out.
a year, daily
Zoom
launches,
out.
in
Yeah, just
fact,
wanted
to
to
actually,
think that was where they
to
were
actually
And I'm
do
going to take
that.
these lines and look
But,
at the weekly.
you know, that said, as
and
you
see if
well
I
know,
get any
Carl, there are many
confirmations.
people who believe ultimately he will achieve the goals he sets out, even if they are not achievable in the timeline that he sets
So this
out.
week,
Even
we
the
bounced
SpaceX
off
IPO, for years, the company
the
said they wouldn't go
63
public until they were regularly flying to Mars.
Yeah, well,
63,
Mars
83,
is
They changed their
we bounced
mind.
up almost 200
Yeah,
points.
they changed their mind.
Data centers are going to be expensive in
You don't
space.
think people? No, let's put it this way: that will be an oversubscribed.
That's a pretty good candle right there.
You think so?
Yes,
Even
that's
at
green candle, so
$1.75
you could
trillion
easily pull back and
by
hit
the way,
that
we haven't seen
63
any
one more
numbers.
time
We
on the
reported they
weekly.
filed privately
Now
on
we got
earnings
triple
today.
bottom.
Much. Do you think
I don't know the numbers. We'll see when we
on the
get them.
SPX.
And between now and then, you never know because it
SPY.
is Musk. What will change or not change?
Right.
There is, I think, this broader belief that at some point he would love to put it all together, that being Tesla and SpaceX. I don't know that that will ever be achieved, but we'll see what the numbers look like. We know XAI is still, obviously, it's got to be losing money because of all the investment that needs to be
Right.
made
Hard
on
money.
compute and everything else.
Bullish staying
the
above the
platform,
63.
I'm not sure where that stands. So SpaceX is obviously
We're
the profitable
at 6.
component, but you tell
We're
me an
still
appropriate
above the
multiple.
63.
But it goes back to this.
Everything's-
It's
We're at
Optimus, it's
645.
robotaxis,
Well,
and there's
it
going to be
doesn't-
about data centers in
So I
space.
go
It's
to
a
the
long
daily.
way out. It's a
looks
huge
bullish
goal,
to
and it's
me.
potentially something that could be incredibly profitable one day.
Well, it's not a P. I'm going to use some gibberish.
The daily,
it's
we're
not
in
a
the 21.
PE-sensitive situation.
We're in the
No.
It doesn't
channel
lend
of
itself
the 9
to
and
traditional
21.
price earnings bowl.
We're above the
because
9.
He's got this shareholder base that's rabid, and they love him.
All right, but if this thing's coming
But
out
I
at a
don't-
$1.75 trillion value,
But
or you're going to sit here without, well, right now you can't, but and say, buy it?
No, I'm just saying
We're
it's
above the
going
9.
to go up. I don't have a reason. I can't do this. I can't do the following. I have no grounding whatsoever to recommend it, but you know what? Buy. I can't do that, see, David, because that would be fanciful and lacking in rigor.
Okay.
Meantime, this FT piece on Global Star and Amazon shows that the
Interesting.
interest in low orbit satellite is heating up.
Is huge. And
Jassy.
It's Jassy. It's Leo. They want to compete there. And by the way, Jeff Bezos also is a believer in data centers in space. With his Blue Origin, and in a similar way to Musk, has a plan that at some point they will be doing launches that are hundreds of launches a year potentially to build these data centers. I know, and fulfill this vision of being able to
We're at
have
the
obviously such a
resistance
low
level
energy
on the low
cost as a
support.
result of it being up there, even
Love
though it
to
would
maintain
seem
this.
you bring the
Here's
you
the
bring the
Fibonacci.
cost of the payload so far down in terms of what each
attention.
launch costs, I
So
guess.
when I take the
And
Fibonacci-
then that goes to this, which is to Carl's point, competing with Starlink.
Go to
Right,
the
Cooper
low support
for
down here on the
Amazon,
body.
competing with Starlink, which, by the way, is already showing significant competitive impact on the likes of some of these cable company stocks. Take a look at them, Comcast or Charter, and what the next
So
generation
that's a 50%
Starlink conceivably will be
pullback.
able to do.
Jassy has said over and over.
That's
we have to-
normal.
It's a necessity.
Normal.
Have to do it.
Nothing.
And I'm
There's
not gonna
nothing
disagree
unusual
with you.
about this
He's-
pullback.
He knows his business
We went
better than
from
anybody. He's got to have it. I think it's
628
If you take a look at a piece that I read in
all the way
Bloomberg
up
about Amy Hood,
to 650.
one of my
piece, yeah.
favorite CFOs in Microsoft. She put the brakes
In 2
on
days.
spending for data center, and in retrospect, you cut back a little bit on the Jensen Huang and NVIDIA. That
But Andy
didn't
Jassy
work.
made a
We had a
made a
double
very
top.
significant decision to move forward with the
5-day.
Trainium chip a number of years ago, right?
Yes.
Instead of just
We're
saying, I want to
having
buy
pulled
all
back
the NVIDIA I
50%.
possibly
I
can.
know.
On the
But
breakout.
Was that a good decision?
I have gone around the block with him on that, and he has been able to prove to me that
So I'm bullish
it
into this
is
morning.
a reasonable decision because of the cost of NVIDIA. But I always come back and I know
rookie
that
would
it's
think,
kind
oh,
of
God, the
what
world's
you have
coming
to
to
say
an
about
end.
me, which is that look,
We
I
just
think
had a
these
huge
chips.
bounce off
I
of the
had
triple bottom.
Dylan Patel on last night, and he just said, look, it's pretty simple. Semi-analysis. It's pretty. He's been saying over and over again.
Which
you
is
need
what?
NVIDIA.
What's he saying?
You need to say you need NVIDIA not just for training, but NVIDIA inference because of Grok. So I just think you have to be in. I've said over and over to Jassy, you got to be all in NVIDIA, and he said no. And you have
Which is now.
disputes, David. You have disputes. You don't just sit there and say, "Tell me."
Well, we'll see what happens
So I
with
say
Global
troops.
Star. Back to that, and they do have
Come
the
on.
Spectrum as well. That
Yeah,
is
and
necessary.
you know who owns a fifth of Global Star?
Yeah, Apple.
Apple.
But don't forget, right? Remember the EchoStar sale of Spectrum to SpaceX, where they now have a significant stake in SpaceX, which has helped that stock move up appreciably
Well,
as
there
well.
you go. David's right. We have to go. Let's leave it on that note.
All right, we got to go.
We'll watch this weakness pre-market. We'll get to airlines, oil, fertilizer. There's news in private credit, as David said. There's Novo Lilly in a minute.
My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the best shape I can be for my age. My life secret is stay away from crack.
Blue Owl says it's going to limit the amount investors can withdraw from 2 retail-focused funds. This after receiving a surge in requests to do so, according to letters to shareholders from Blue Owl this morning. Investors had asked for a withdrawal that represented 40.7% of the shares in a technology-focused Blue Owl Technology Income Fund, OTIC. And they asked for 21.9% of shares in a much larger Blue Owl Credit Income Corp Fund, OCIC. Now, Blue Owl says it will limit the payouts, as is its right, to 5% of the shares for each of the funds, guys. In their letter, they go on to say they believe, as you might anticipate, that market perception has driven elevated tender activity, but underlying credit fundamentals across their portfolio have remained resilient. And then they go on to give us the numbers that we just shared with you. And they also say that the activity was driven by a relatively small minority of the investor base. And in fact, 90% of their 90,000 shareholders have elected not to tender. It's 1% of shareholders representing the majority of tenders. None of that's going to help the stocks, of course, for all of the alternative asset managers that have a significant focus in private credit, whether it be Blue Owl, which, as you can see, is going to be down, at least at this point when we get started with trading, as much as 9%. But there's the typical names we like to put up when we have another private credit story. Jim, I've made the point many times. It's a liquidity story, not necessarily a credit deterioration story right now. They aren't taking losses on the underlying loans, at least not yet, but they are faced with significant redemptions as a result of concerns about what's coming down the road and people wanting to get out now.
I'm glad you put it like that, because when you look at their actual holdings, they're not.
Baby, don't worry.
I don't look at them and say, well, they've been devastated. And you know that there are private equity firms that have publicly traded business development corporations that are well underneath their net asset value.
Right.
We can go over those. But I do feel that, I'm not saying it's panic. I am saying, wow, great to get your money back.
Right, and so this will probably continue for some period of time.
Right,
I mean, they go on to say
right?
that OCIC, they call it a strong position to meet its current obligations for tendering and any future offers. Blue Owl saying as of February, you can see it right there, it had ample liquidity of $11.3 billion across cash, undrawn debt, and liquid level 2 assets, and give you the net leverage there. So, you know, their point is we can meet all these redemptions. We're going to stick to the 5%. By the way, they probably aired initially when they didn't. That first time, remember, they actually came up in terms of what they were willing to, and it didn't help them at all in terms of perception, which is what they were hoping for.
We had a pretty good drop
now they're
then.
sticking with the 5%, and we're going to continue to see this. The only question becomes, to the extent that the retail investor was viewed as the growth in AUM, and therefore a real lever for growth for these platforms, that may be done.
Russia invaded Ukraine and Ukraine, and we went down 30%.
Carl, I look at them, I said, sure, well, the growth, I mean, you're not going to get a
Obama
lot
took
of 401k
office and we went
money.
down 50%
and the
in the
big
market.
growth would have been 401k, and I'm not saying they were trying to trick people into it. I am
I
saying
worried
that
back then
if
a
you
lot more
owned
than I do
Adobe
now.
6 months ago, you may think that this
I
cohort
like
is
saving
really
lives.
in trouble.
30,000
if you own
people died in
Atlassian,
Iran
a
just
Workday, and people are just saying, well, look,
few
they
months
probably
ago.
have the worst of
Slaughter.
it. You know, they've Anaplan's not doing well, and you know, a lot of these are, you know, I spent some time reading the
Slaughter.
Bravo
4
portfolio,
genocides
the Vista portfolio.
under Biden.
They're current.
Well, all that said,
8
Jim,
wars.
investment grade
Things were a
yield
lot
is
worse.
almost a 1-year high going back to
Supply
June.
issues
Spreads
under Biden.
widest since May. I mean, this is moving
Not too many
in the
people
wrong
complained
direction.
back
Yes, it is, and I was looking at the FSKKR Capital Corporation.
But me,
there you have a
of course, because I was having to pay 30% inflation
a net asset value
to keep my business going and take all my profit
was
away.
$20.89, and now
Things
it's
were a lot worse.
$10.11. Now that's a free market. That's
Right.
the
paying
data.
Now, to be
$4.50 a
fair to
gallon.
these guys, these funds have done
For
what they
about
said.
2
I mean,
years.
OCIC's returned 9.2% since its inception. That is far above the
All you gotta do,
return on
Rush,
the
is go ahead.
leveraged
Go ahead.
loan
Walk in
portfolio.
there and invade it.
yield.
Remember when
It's going to be a
BlackRock?
short excursion.
Now,
It's
they
still
are using
going on
leverage
4
as
years
well.
later,
Oh,
I've made this
5
point any
years
number
later.
of times, what we call back leverage from
4
the
years
banks.
later.
The banks that they conceivably are competing against for these, to a certain
Giving
extent,
them
for these
billions
loans.
of
So
dollars
it's
to
an
go
important
ahead
area as well for the
Kill
banks.
2 million people.
Where they lend to them, and it's in part the leverage they're using. using
things were a lot
that
worse.
helps them get these kinds of
Is
returns?
it time that one of the more cynical wag comes out and says, well, maybe
Going
that Tampa
14
Bay
trillion over
Lightning
budget,
was not a
and
great
then
buy
sticking
for
us with 30%
two of the
inflation
head people
overnight.
of Blue Owl? Or is that just cynical and
Purchase of
gratuitous?
sports teams can represent a moment
I'm really-
sometimes
I'm-
to take
I'm
a second look at
feeling
things.
good about
Yes,
the
more than
April
naming
stopping.
of a stadium. Yeah.
Stadium curse.
Don't
Yes.
buy a sports
Those
team.
things
feel
don't.
good
Yeah, the
that we got a
sports
deal
teams,
maker in
sometimes
the
they
White
get past
House.
it, but it does usually create some sort of a dislocation.
But did it hurt Dave Tepper?
That wants to stop human trafficking.
But he has nothing that we could
genocides.
judge that on. Does
He
he?
is.
Right?
And
There's
the
Oh,
no
mistreatment
public
of people.
entity
No, there's
associated with Tepper, is there?
No,
No.
there's just the he's terrific.
Pakistan
I don't know.
couldn't
Shouldn't have
afford
thrown that beer. That was a
what they
mistake.
did.
I've done that.
That was a while
I've done
Did
that.
what they did.
I've
If
done
it wasn't for
We'll get
Iran's
Kramer's
help.
Mad Dash countdown to the opening bell as we get closer to what looks like a down open. Back
You
in a
got
moment.
Yemen. They're not shooting them rockets off like they were. You had, what do you call it, little man from North Korea under Obama shooting missiles off, threatening everybody in the world. Things were a lot worse back then, in my opinion, but nothing was being done. Trump got it to stop. Same as Reagan. Carter screwed up. We end up having a bunch of hostages. Iran. Reagan told him, hey, you get them back here, we're going to frickin' blow you up. Well, they run them back real fast, didn't they? Instead of giving them money to build bombs and to threaten the world for years, 50 years, they're going to stop doing it. We're taking care of business. If I got to pay $5 a gallon to do it, I'm going to do it. Because I want the threatening and the terror to stop. But all we've done is give them a permission slip to keep doing it. Go ahead. Go ahead and invade Ukraine. It's going to be a short excursion. 2 million people dead. Go ahead, Iran. Keep doing what you're doing. Keep supplying these 5 and dime countries bombs so they can shoot other people, blow them up. Just keep it up. We care. We really like the fact that you're blowing people up. I have no military experience, but I do have common sense. Just let them keep doing what they're doing. Terrorize, use oil as their prop. And America will have a war on energy at the same time. We'll see how good that gets us. We saw how good that got us.
Here's a good example of the whipsaw action we've gotten this week. Micron will lead
And
the
we're
laggards on
really
the NDX
not
of the
looking at-
open.
it's only a 10%
down about
pullback.
6.5%. There's ARM, there's Seagate, there's
It's not
Lam.
like,
As we unwind some of what's been
It's
put
not
together
like we
by the
had
Bulls
30%
last couple
under
days.
Biden
We'll get the
in a
opening
year, and I
bell
didn't hear
in about
hardly
4
nobody
minutes.
complaining. Or the 50% we had during Obama, when we went from 12,000 to 6,000. I heard a lot of people crying because of the stock market, but they weren't complaining because of what was being said by the government. But we're going to take your money from you and distribute it to the ones that don't want to work. They want to get an education or do better for themselves. So we'll just go ahead and make it okay for you. You won't have to ever work. And then race came in. That made America a lot worse country. The race baiting and shit that goes on. I don't look at people like that, you know. I've dated Asians, blacks, no Somalians. I think they're ugly. You wouldn't catch me dating a Somalian. Mexican chicks are sweet. The Mexican chicks are great. Asian and Mexican chicks are the best. They're not turning gay on me. But look at this run we've had right here. It's just a small little correction. Every breakout has a pullback. If we drop down to number 4, I'd buy probably 50 contracts, maybe 100. I'm taking advantage. I'm letting the charts do the talking. I want to try to keep out of the negativity that social media is pounding on us every single day. They didn't pound like this when we were down 50% or 30%. They weren't pounding that hard. They weren't pounding that hard when we told Russia to go ahead and invade Ukraine. There was nobody pounding but me. I don't like war. And I don't like killing and slaughtering and genocides. I was pounded, but I was also calling out the bottom, saying this is the time to load up. And if you'd have done that, you would be up more than, I'm up a lot. Because I know where that support is, and I know how that feeling of being having fear.
All right, let's squeeze in a mad dash. We've got a minute before we get to an opening bell. Conagra.
Yeah, I just want to talk about how hard it is to be a food company right now. Obviously, we can talk McCormick. We should talk McCormick and Unilever, how that deal.
I sat there when I first started trading and watching that pullback of Obama. I mean, that was every day for months. A year. Okay, calls. This is nothing. This is only 10%. That's natural. And tech was way overbought to begin with. I said that many a times when I was calling the pullback. If you'd have shorted the market, you'd have made a killing. Now I'm starting to call bullishness because I know where the bottom is. Things were a lot worse. We got a housing crisis because we invited 15 million undocumented illegal immigrants into this country. That's going to cause a lot of problems down the road. It already has. Women are dying. Every single month, I see a new one dead, being shot or raped or... Things were a lot worse. I'm looking at the 650s right now. I'm getting ready for this thing to break. I might grab some. The media is a shit show right now. They didn't talk like this at all back when we had all those other crises. All of a sudden we got Trump deranged syndrome. The 650 strikes at 90 cents. Don't take this at your own risk. But I'm not going to believe a lot of bull I'm hearing out of social media. $0.90. So I'm up 120 right now. If we break this yin yang, break up above it to 648, pull back and hit the old support, or double top, double top, triple top, counting the wick. I'm an old liberal. You know, I protested against wars. I'm a liberal most of my life until the race baiting started, and then I said, I don't want none of this. Because what it did, some of the closest people I've ever known we come apart. People I played music with, all over race. And that, to me, is racist. Get back in it here. Here we go for the pullback. 92 cents. I mean, if you haven't watched this thing in Canada, watch it. About equity cards. You're not allowed to speak if you're a certain color. I mean, it's the stupidest thing I ever heard. In Canada. Now, slow down here. $81 and $92. I sold the first one. So far, we're still bullish. Oracle. Oracle's down $4. Here's one that Wall Street tried to pump. Told you to get in it. It's going to go up to $200, $300, $400. Called that breakout. Still at solid support. We're at the 200 on the weekly, so we're still at support right here. Jim Cramer was just talking about it, and I guarantee it, he didn't bring that up. Triple bottom. 1 bits, 2 bits, and a freebie. So that's a bullish flag off the 200. So that's that's a bullish setup. Oracle. Now, would I take it? I know we're at support. I gotta look at my 77 cents. Uh-oh. Still got support, so I'll just wait. I got 10 contracts. Come on, baby. 76 cents. So Oracle had a big run here. We got down to 136.70. We're definitely below support, so this could come down more. I had to hold that 68% on the Fibonacci. And we're right at a support right now, though. 24-hour support. AMD's pulled back. See, the chip, let's just look at AMD. Things get overbought. They just can't keep going straight. 10% correction ain't nothing on the market for now. Could get worse. But on tech, which I said months ago that to start getting into puts, we got a fallen wedge, so maybe we started to break out of the wedge yesterday. So that's bullish, a fallen wedge. Come down and hit 185, I think this would be a good buy. That's a $15 dip, and that'd be the bottom of that wedge. Then watch it start to squeeze out. If it hits that top line, it's a head and shoulders with a fallen wedge. Extend this out to the left. There's your wick, body, body, body. Then I got support off this head and shoulders right here. Someone set an alert on the bottom of that green candle, or right there. Actually, we're already there. So a little bit above that green candle there. I'll make a bigger picture of it. See, we're at support right there. Right where we are right now on AMD. But I want to try to see if I can catch it down here. I think the best way to learn how to trade is, and I've said this many a times, determine what news. Right now it's oil. When oil goes up, the market goes down. When oil goes down, the market goes up. It's not always like that. But oil, for many years, has been the indicator. Lower oil prices, the more profit the companies make. So when oil got up to 120 a barrel, 115 a barrel on Biden, we had inflation because people were charging more to keep that profit margin. And once you raise prices, it's very hard to lower unless you're a new business and you can get in there and start fresh, like I did when I had my picture frame shop. People were marking up frames 600%, and I thought that was ridiculous. I always read in the books a 40% profit. Back in the day before government got so involved in our lives, it was easy to only have a 40% profit and make money. But now, a lot of your profit goes, into a bunch of crap. My accountant fees are up 75% in 4 years. Not under Trump, but under Biden. My groceries went up almost 100%. Not under Trump, but under Biden. When Obamacare opened up, I lost 3 accounts. I had to go back and live in a tent on my property because I lost all my profit. Plus. And I wasn't the only one complaining that owned a business back then. And then COVID came. We were only allowed, we were supposed to walk 6 feet apart. Businesses were shutting down. But government employees kept working. Things were a lot worse. I think 2 months went by where I couldn't even have noodles. The noodle aisle was empty. Toilet paper aisle was empty. Tampon aisle was empty. Diapers were gone. Women had to wash their own diapers. That's why I'm more confident now than I've ever been. We closed the border. We stopped the human trafficking. We stopped the drug flow coming in. Fentanyl killing Americans. The homeless in the streets doubled. Drug addiction, crime rose. Black on black killings rose. Things were a lot worse. I'm feeling good. Look at that. Earlier this morning, I charted the SPX. Did anybody take the trade? Look at that, right to the penny. How did I chart that? Does anybody remember? I sat here and did it in front of you. Right there, I mean, that's... Thank you, God. Oh, and also, when I started going to church, my portfolio doubled. And that was in a down market. I started going to church right in here. Then I called that 200. Boom. 5,200 all the way to 7,000. When we had the let me see here. No, I want the This is what led into 9/11. Clinton left, and we were calling irrational exuberance a recession. That we were way overbought. People were way overbought in the market during the Clinton years. When 9/11 happened, we had a little tank. We already had a pullback, but we had just a small tank, small one, not very big at all. But they were calling the recession right before, right after, or right before Clinton was getting ready to leave office. Then we had the Obama crash, about 50% pullback with a double bottom. Easy call. Then we started printing trillions and trillions of dollars. The printing started. The printing press started 9/11. I got 3 stimulus checks of $300. That's when Bush became a socialist. So they printed during the Obama regime. Just kept printing it. We had pullbacks of nothing the magnitude that we've had now, about the same. 10% is natural. It's natural. And we kept bouncing off the 200. The 200, it's natural to pull back to the 200 and have the institutional buyers get in the trade. Well, how many times did we hit the 200 during Obama years? Was it 2018? We were under the 200, we were bearish, and then all of a sudden we started printing that money. $180 billion a month. And we had those little bitty corrections. all the way up there. Consolidated. This one was a pretty big one. The one before that was huge. This was about 20%. Hitting the 200, 200, 200, 200, 200, 200. This ain't nothing compared to what we had back during that period, during that period, during that period, during this period. I can just go back. History repeats. During this period, that was more than 10%. Like 30. 50. 30. 30. 15 to 20. 10. Things were a lot worse. But the printing press, God darn the spies. Did you see this? I'm talking and I'm sitting here making a killing. I ain't scared. $165. They're right there, man. That $1,500. I would say, or someone might have done it. I know they killed 30,000 of their own people before this started. I do know that. They don't care about life. Why would you even think they do? They've been killing for the last 50 years. They just hung a school teacher just a little bit ago for teaching democracy. Hung her. Killed her. Right in the street so everybody could see it. We just hit resistance on the orb. That trade alone and the first one, so I was worried, I had to cost average down. But why did I cost average down on this trade? You might ask. Because we pulled back and we hit that support level. We had a head and shoulders. See the head and shoulder line? Left shoulder, so I called this out before we pulled back. I just drew the head and shoulders in here on the 1 minute, 5 minute, and we've hit the 200. I think it's 200. Yeah, 200 SMA out of the trade. That trade alone, 1,500 in 3 minutes. I had to cost average down. Tried to take it at the 9. What's going on here? I might have to get me a new keyboard. Fudge. That's weird. Three white soldiers, dadgummit. They're at $211 now. That'd have been $3,000. Look at the run. I called the bottom. I'm feel like I called a real good, but I'm making money now. I'm not scared. We're going to stop terror. We're going to stop killing. I look in the news and I see women dying every single month because of open borders that we had. Women. Some people don't know what a woman is, but I do. I stand up for them. I don't like a man in a boxing ring beating up a woman. Things were a lot worse. You know how many people I've slapped around because they slapped a woman? I don't tolerate it. I don't care how old I am. If I see you abusing a woman, I'm going to be right in the middle of it. I don't care who you are. I saved a woman from getting raped in the woods. That guy led in a pool of blood. Then we allow 15 undocumented, probably some great people in that bunch, but there's going to be a certain percentage that, that are a lot meaner than me. I mean, my teeth grind when I think about it. Here's the SPX. So I'm going to show you how I charted this thing up. We have what you call a gap play. Now I'm going to show you something. I want to show you something here. I turned somebody in on Twitter. Palestine protester talking nasty shit. I wonder where that thing is. What'd they do, take it out? They might have. That's funny. So I'm just getting ready to talk about a gap play support. I've called these gap plays out before. So I posted a chart on a gap play. I did a video on gap plays. Very successful. I mean, 99% success rate. So a guy gets on here this morning after I posted the video. He says, gap plays are for suckers. He told me gap plays were for suckers. So we got a gap right here. That's where I put that bottom support. That's a double bottom that failed and created a gap. It's another reason why I like this trade. It's another reason why I took this trade. I had to zoom out, no doubt. So there's your gap. Notice when we tried to come up and break that gap, it stopped. And the gap plays are solid support levels and solid resistance levels. So we had 3 black crows with a hammer, a no-brainer. 3 black crows, boom, the next day. So once it broke the gap, it took off. And there's another gap right here. So it went right below the gap today and hit that other gap. And that was 100% on 99.9% call in my confidence level. And I'm confident in this market right now. Things have been a lot worse. This is nothing. We're not Russia trying to fight Afghanistan in a 10-year war. All we're trying to do is stop the threats, terror, and killing that just continuously goes on. We have to stop it, or we just live in fear for the rest of our life. Iran's going to become a democracy. New regime, new people in place, like it was before Carter. Carter was going to go down as one of the worst presidents in foreign policy ever. Now Biden has gone down. 4 genocides, 8 wars, millions of people dead. None of that had to happen. All Biden had to do is tell Russia, back off. Trump tells him and he does it. Reagan told them and they did it. But when you give them billions of dollars to build more bombs, what do you think you're going to get? More death. Billions in a plane, in the dark. Really, without Congress's approval, huh? Now, if we break the 63, I'll jump back in. But then you break the 63, you could have a small pullback, and that'll be when you really want to get in. We boasted the VWAP on the /ES. We're at my first support. Or actually, yeah, now it's resistance. But it was a support. Oh yeah, I'm going to finish charting that SPX. I love life. I hate wars. I bitched and bitched and bitched under the Biden administration, all them wars and all them genocides. Nobody gave a crap. Now they're stopping. 8 wars have stopped. And we're stopping them because of Iran. They ain't going to have any bullets to give to anybody anymore. Hope we get every last bullet in that country. I'm not friends with Iran. The people I love, and the people around them don't like them either. The women that are talking about the old regime can't even go back and see their family unless they'll get killed. The people are standing up saying, thank you, America. They've been killing us. $30,000 in a week. Dead. Just because they want democracy and freedom and want to live. Got another triple bottom on SPX. So far, I've had a real good day because I'm not scared. This is natural. We've had a lot worse dips. A lot worse. And we had a lot worse times. A lot worse times. Gas shortages during the Carter years, where we had to buy gas only 2 days a week. And that was a recession. I remember walking the streets of Flint, Michigan, going and seeing blazing saddles. Not a person in the streets. And all you could hear was recession this, recession that during the Carter years. That's because Iran was at war with us. And we didn't fight them. We just told them. Reagan had to sit there and, before he even took office, I want these hostages back before I get in office or some bad shit's going to happen. That's all it took. You can't be a paper tiger. Obama was a paper tiger. Don't cross that red line, Russia. They invaded Syria and killed 500,000 people. Go ahead. Don't cross that red line. But they crossed it. You can't be a paper tiger with communists. Clinton, Rwanda, huge genocide. Collected money for Rwanda and wouldn't hand it out. 500,000 people died or more. Things were a lot worse. African people dead because of Bill Clinton. $500,000 or more. $800,000 people in 100 days. 800,000. people in 100 days. What did we do about it? Nothing. We did nothing. 30,000 people in Iran die. We're going to sit there and just let it go on? Could have been 100,000, could be 200,000, could be 1 million, could be 500,000. Please check your internet connection. We got another resistance to break. We're above the 200 now, so if I break this, I'm getting in. Having internet issues, I think. Oh, God. 65.75 or 65.80. Kind of high. I don't know. I'll wait. We're at the peak of a rising wedge, or a bull or a bear flag. Probably a bear flag. And we could break out and pull back. Yeah, it's a bear flag. Could be a bull flag. I'm going to stop talking about, I've got kind of a passion for life that nobody understands. So I'm going to kind of back off. I get kind of tired of hearing so much negativity. It's sometimes hard. The riots and the protests, and I used to walk with Martin Luther King parades for 18 years. Then Obama came and I stopped it. I did one parade, and it got so political, I just said, I ain't doing this no more. Martin Luther King Jr. says the same thing about Democrats. You make it too much of politics when it should be just your character that matters. I walked with the King in Oregon as a child. The real one, the real king, and they're out there having no king parades when Martin Luther King was a king. Amazon reversal. We used to have what you call
after new delivery numbers from Rivian, Ford, and
we had what you call the Rose Parade in the Rose Garden. And one time, about 8 years old, I went out there and listened to Martin Luther King. Although my Democrat parents always said nigger, 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 I still went anyway.
Remember, we're coming off 2 straight years with lower annual deliveries for Tesla. For the first quarter, they were down 14% compared to the fourth quarter. We will get the full breakdown in terms of what he sees for deliveries, perhaps some updated guidance coming up on April 22nd. That is when Tesla will report its Q1 results after the bell, and that likely is also when we're going to hear from Elon Musk the next time we're.
My Democrat parents, I brought my best friend over. His name was Rick Stone. I had a paper route. This kid was struggling. So I said, hey, you want to work the paper route with me? And I'll give you half the check. Back then, you're looking at probably $25. But him and I would get up every morning. So one day I decided to take him home to my Democrat parents. And my dad took my body and threw me up against the wall. He said, never take another nigger in this house again. And I had to, as a child, and it never bothered me. Didn't change my mind. I grew up a Democrat. Talking smack and shit like that. And one day I learned real fast. I worked for an AccuCount, company called AccuCount. I started in my shit. And this black girl went and got her brother. He's waiting for me in the back of the bus. He says, don't you ever pick on my sister again. And when I turned 19, that's when I changed my attitude. It was beat into me. Beat by my Democrat parents. And then I learned a lesson. That all people were equal. Once that man stood up to me and straightened me out, then I met her 25 years later, and I told her I would love to meet her brother and say thank you for making me a better man. Scared the shit out of me, but it took force for me to change my attitude. So I started boxing. And I got all that anger out. All that frustration. I became a much better person. Then I picked up the guitar. Started playing with bands. That changed my whole life. Then I started trading stocks. And I got my GED. I went to college. I bought an art gallery, saved up enough money to buy an art gallery. Now I clean toilets. When I was 7 years old, there was a janitor that worked at Lentz, I think it was Lentz, grade school in Oregon. He was black. So I'd always stop and talk to him, and he always took time to talk to me. And I thought that was the most interesting man in the world. I didn't hear a politician back then saying janitorial work was only for illegal immigrants. When I'm sitting here working as a janitor, now thinking of that old man back in 1968 that I talked to every day and taught me a lot of things. I learned more from that black man in the hallway than I did from my teachers. He convinced me to start walking in those parades. He took me there. Mom, I'm going out to play basketball. Okay. I'm actually going out walking in a parade. After being continuously hearing that word every single frickin' week. But it took force after being pounded in my head that nigger was the word to say. It took someone else to say, no, that ain't the right word to say. And I didn't want to get beat up by a big black guy. I said, man, I so much want to see him and say thank you. But I would have carried on until someone got in my face and said, stop it. That's why I don't agree with identity politics, because I think it's racist. We're all equal. How many black people are out there marching in this stupid King's Parade? None.
Welcome back. The war in Iran disrupting the global balance of power as the president threatens to pull out of NATO, tells other nations to go to the Strait of Hormuz and just take the oil. Our next guest says the conflict has put China
I think it's a great
in a
idea.
stronger position relative to the U.S. Joining us this morning, a former Morgan Stanley Asia Chairman Stephen Roach, senior fellow at Yale Law. Stephen, it's a pleasure to see you again. Thanks for joining.
Oh, God. These people are baboons. This is a guy I played guitar with one
Sweet
time.
raspberries, Greek yogurt, light string cheese, broccoli.
Anybody guess who it is?
I've got a good woman at home who thinks I do no wrong, but sometimes, Lord, she just ain't always around, and you know that's when I fall. Now I can't help myself at all, and I get whiskey bent, hellbound. Play me some songs about a rambling man, put a cold one in my hand, 'cause you know I love to hear those guitar sounds. But don't you play, I'm so lonesome I could cry, 'cause I'll get all balled up inside,
We're breaking out.
and I'll get whiskey bent, hellbound. Sure enough, about closing time, about stone
scared at all.
and I end up with some honky-tonk special I found. Just as sure as the morning sun comes, thinking of my sweet girl at home, and I need to get whiskey bent and hellbound. Play me the song about a rambling man, put old Jim Beam in my
Jim Beam.
hand, 'cause you know I still love to get drunk and hear country songs. But don't play your cheap heart, 'cause that'll tear me all apart. I get whiskey bent,
Got a double top on Andy. Oh, yeah.
yeah, old Hank song always make me feel down.
I should unblock that guy and show him that
What if
gap
the
play.
bright side wasn't just a state of mind? What if it was a real place?
Yep, I was at State Fair, Sedalia, Missouri, and I went up to Hank's bus, and he says, "Son," this guy comes up, he says, "Son, you can't go any further in this line." I said, "Well, I got a present for Hank. Do you mind if I could talk to him?" He said, "Well, no, can't let you pass this line, but I'll go talk to him." And Hank comes walking out of the bus. I had my guitar, and I sung a song that I wrote. He said, Good job, son. I got to get ready for the concert. Thank you." It's my very first song I wrote. I was talking about boogers in my nose. Now, if I'd have got a helicopter and dropped it up on top of his bus, I'd probably be in his band, like Chris Christopherson. But we've had times a whole lot worse, I'm telling you, people. We've not even had a 10% correction. I don't know why everybody's in a uproar. Just 10%. stocks were up way too much. They were up 6, 7, 800,000, 2,000% in 3 years. They were bound to correct. I've been saying it for months that we're way overbought. They're telling you, CNBC sit there and tell you, and Schwab will tell you, we're going to break this triple top. Next target 650, next target 800, next target 1200. And we're up 600 or 700% in a year. That's crazy. I was scared when we were up so high. This is overbought. Way overbought. I'm not scared now because we're at support. I'm going to prove it to you. You didn't hear me pumping them resistance levels. Where's my map? I've got into tissy fits with other people about this, but I've been right every single time. Last guy that I traded with thought I was one of the best traders ever until I brought this chart up. He thought that this would go back like in years. You have these happen 3 or 4 times a year, where we're up here at greed, calling triple top breakouts at a 600 to 700% gain in a year, and keep calling it. Lilly was supposed to go to 1,200. Netflix was supposed to go to $2,000. And I'm getting anxiety. I'm getting euphoria because I can't believe they keep calling these breakouts and pumping this market up when it's already overbought. So when everybody like you that are in fear, Jimmy's buying. The best time for investing is in fear. The best time to take gains is when greed hits in. I hear more fear now than I've heard in the 22 years I've ever traded, when times were a whole lot worse. I'm overconfident now. I'm feeling like I'm at my peak because I'm buying in fear. I'm my weakest. I can't hardly trade when we're at the top because I'm hearing all the greed and the financial risk. I'm watching YouTube and everybody's pumping gold at the high. It's going to keep going up. It's going to keep going up. It's going to keep going up. I'm saying, no, it ain't. Silver's only broke out one time in 22 years that I've traded. Because a lot of people have Trump deranged syndrome. He's the first politician or person businessman we've ever had in there besides a politician that's never held a job in their entire life. Making 300, 400, 500 million, 30 million when they leave in 4 years. That's greed, and that's taking advantage of your tax money. So I'm buying in fear. I called out capitulation, discouragement. People are telling me, oh, don't get in the market now. And I blew my peak. I said, I'm buying into this. I made more money in the past week, 2 weeks than I have in the past 4 months. Because I'm buying in fear. I can't even listen to Schwab and CNBC right now because they're overdoing it. I mean, look at the calls that I called out this morning. They're $5.88 from 70 to $6. You know how much money I just made? $4 a contract, $400 a contract, times 5. Because I'm buying in fear. They're at $6. They were at 71 cents. Right there could have paid your rent for a year. Psychological part of trade is so hard to learn. For 15 years, I'd hyperventilate, and I'm not supposed to hyperventilate because I have epilepsy. If I was in a trade and it was going down, or even if it was going up, my body would shake, my hands would sweat. Still do. My hands sweat. When I'm in a, like today, making almost $5,000, my hands are sweating. And I'm talking smack and watching a great run. knowing what kind of news we have. The news that we had with Ukraine and Russia was a lot worse. It ruined our supply chain. It caused 30% inflation. Gasoline prices went to the moon. Times were a lot worse. We stopped 8 wars. We've stopped a lot of killing that was happening under the Biden administration. A lot of genocides. And we're stopping one of the main leaders of it. We're putting a stop to it. If you even spoke like I do in Iran, you think I'd survive? Probably not. But I'm going to Iran in 3 years. I bank on it. I bank on it. I guarantee it, I'm going. If I ain't dead by then. By these illegal criminals that come over the border. Things were a lot worse. Okay, prepare ye in the name of the Lord. Am I still bullish after this huge run? Extend this channel out here to the right. So we're going to bounce. What was resistance, and if you can count to 4, you can learn to make a little bit more. 1, 2, 3, 4. Boom! 1, 2, 3. Boom! Sweet spot. Jim, I jumped in that trade because you were talking about the flag. When you said it would pull back one more time after the 1, 2, 3. And you are amazing. I took that trade at $2.05. And it ran all the way to $6. I want to give you 10% of my winnings so you can take your vacation and relax and get away from these goofy liberals. One, two, three. Jimmy said we were going to pull back. Boom! Now, if this flag, we had like a downtrend, just a straight downtrend, I think it would be a bear flag. So we're going to pull this up. I know I got something pictured here. So if you're going in a downtrend to an uptrend and you get this flag here, that's a bull flag. And if you can count to 3, you can trade with me. And if you can count to 4, you make a little bit more. Bearish flag, when you're coming from an uptrend to a downtrend and you think it's bullish, it's actually bearish. If you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. So we were going in a downtrend, then we started to break out. We just didn't go into a downtrend and have the flag. So going downtrend with a double bottom, again, double bottom entry level. That's where I took that first trade, $1,500. Then notice the flag and talk to you about the flag. First I thought it was a wedge. It ended up being a bull flag. Then if you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. 3 white soldiers out of the trade. Pulls back to the 200, back in the trade. Reversal. So here you're coming from a downtrend, you got this flag, but you don't have this. That fist came down here and started breaking out, and then you would have had the possibility of it dipping, but it didn't happen. I think, if I make any sense. But I'm bullish. I'm not scared. I walked in here bullish. I went over the charts and I said, I'm bullish on these support levels. I'm feeling good. And this could go on until the 10th, when I predicted the end of the war. I could be wrong. I sometimes am. If I'm right, I'm going to ask everybody in the room for $50 so I can take my trip. That or you got to get out. AMD, boom, double top. What's a double top mean? Take profit. Apple's been the strongest one of the bunch here lately on pullbacks. We got a Head and Shoulders coming up. Don't want to get FOMO. We're at resistance right now, so let the market create the pattern. We had to run. We already had the run. We're going to pull back. Wait for the market to form some pattern. We had 3 white soldiers, so we got to consolidate off the 3 white soldiers. We had what you call a parabolic run. You never want to chase a parabolic run. Wait for the pullback. Wait for it to hit your support. I'm waiting for it to hit the top of this resistance level. I got all kinds of confirmations. I've got the 200s. I've got the top of the bull flag channel. I've got the 63 EMA. I've got the 50 SMA. All coming together. Soon they're going to expand. And they're going to start crossing each other. Let the moving averages do the talking and let the patterns do the speaking. I feel like a damn politician today. Ain't that funny? Let me tell you something. Something happened to me this week. Now, I could have let it go on and on and on, but I didn't. I bought a car that had a bad front end. They told me that they repaired it and it was just fine, so they sold me the car. I don't get no farther than to the grocery store and I'm hearing grinding in the front end. So I take it right back. And I tell them that the car is grinding and I'm having issues with the car that I just bought from you less than 10 minutes ago. Oh, we fixed it. So I keep sending messages. I keep calling. I keep saying this car's messed up. So I sit. Every time I get my car, I wonder if I'm going to get to where I got to go, if the front end's going to fall out of it. I've done this for 2 years. Finally, I get so boiled up where I call the dealership to really have at it, to really tell them how much they screwed me over. If I wouldn't have said nothing, they would have screwed over many other people. Many other people. If we wouldn't have confronted Iran, they would have killed many other people. So I kept on for 2 weeks messaging them. Tell them I want to talk to the owner. I want to talk to the president. I don't want to talk to anybody else but the owner of the business. And I want to tell them how I was mistreated and threatened. I was actually threatened in a showroom when I bought a car. And it boiled up and boiled up and boiled up to where I was losing control of my mental capacity. I mean, I was really starting to broke my glasses. Just put them in bed and I'm so tired I just fell asleep. I ended up breaking them the next morning. I mean, my car is like my baby. It's always been, I've always had nice cars. But they guaranteed that this was in great shape. And it wasn't. The shocks are gone. The springs were out. The tires in the back were 7 years old. The ones in the front. I said, are these new tires? Yeah, they're new tires. I find out, I get a nail in a tire. He says, this tire's old, man. You need them replaced. They're 7 years old at least. I was pissed off then. Now I'm getting cheated. I feel like I'm being abused. So I call him up and I message him. I said, I want to talk to the owner. I made probably 20 phone calls. Said the salesman, he's okay. It's the manager that threatened my life, threatened me in the showroom. And I'm telling him that this car is not worthy to be on the streets. So I go get it aligned. Something in the right wheel is all messed up and it'll take a lot of money to get it bent back into shape. The frame on it. It drives straight, but you hear like a metal grinded for 2 years in the car, in the front end. Finally, I get a hold of the owner of the business. He says, we're not responsible for what happened in the past because we just took over this business and fired the whole showroom. I didn't talk to the owner, I talked to a manager. So I said, I want to talk to the owner, and I kept giving him messages. So at that point I was at war because I felt like I was cheated on. I would have never. So this Friday, I got a meeting with the owner, and he's going to fix me up in a decent, reliable car where I can go take care of my mom. That was the only reason I went in there. I wanted a car I could drive on the highway and take care of my mom. So now you're fucking with my mom. So I went in there and every message, I told him, the only reason I come in here was to get a car that I could go to the hospital and take my mom to the doctor every 2 weeks. And I couldn't do that. I had to rent a car. I had to borrow a car. I couldn't drive my car an hour out of town and have her in it and it lose a tire or something. And I kept telling them this over and over again. Finally, I got to talk to the owner. He called me up. He said, I've read all your messages, all of them. And there were probably 50 in the past 2 weeks. So I was at war to get this right. Even this morning I talked to the IRS agent up there and he said, well, that can be fixed real easy. If you know what I mean. This guy's a head honcho. I tried to call Ford Motor Company. They said they weren't responsible for their dealerships. And I talked to the IRS guy and he says, oh, they are. They hear something bad going on at one of their dealerships and it has the name Ford on it. I guarantee it, they'll fix it. Because he had the same situation happen to him at Ford. So I just kept on at war. I was at war for a week. I was in duress, sitting and making a lot of money in market. But I felt like I was robbed. So now I'm at East because I got a meeting with him. I told him, I said, I don't want to fork out a bunch of money I already have on this car. And it still ain't right. It was wrecked. But I won. I could have kept my mouth shut and drove the car and not be here tomorrow. But I felt like I was a number instead of a human being. And that's what Iran does with their people. They're just numbers. You talk out of line, we'll shoot you. We'll hang you. 30,000 people did resist and they all died this year. They got to go. Just like that bully beating up Lester, the blind guy. It only took 3 punches to his kidney, and he was crying for mercy. So Jimmy called a triple bottom here, and we're breaking out. And the resistance line, we broke it. We're coming up to a double top if we don't break, if we hold resistance. If we break triple top, triple bottom, boom! Here we go again. Let the charts do the talking now. Let the patterns. We've already had the parabolic run. And like Randy said, don't buy in FOMO, because you get stuck every time. Wait for that setup. I've been happy with every car I've ever purchased. Just this one, I did not want it, and I tried to tell them. Right when I bought it, I said, this car sucks. Netflix is up today $2. He's having a hard time making up his mind, but if you jumped in that triple bottom, congratulations. I'd be out of the trade right now, unless it does the double top. Come down here to 4, and that's your last chance maybe, or we just go ahead and start pulling back. But got all these moving averages lined up together. See what happens? Boom! They all tighten up. Then they expand. That's called the alligator chart. Let's look at the alligator chart. There's my alligator chart. I got chart after chart after chart after chart after chart. These are when the jaws open of the alligator chart, and these are when the jaws close. This is when the jars open, you have the breakout, and then you have the consolidation. That's called the alligator chart with the TTM squeeze setup and the TTM oscillator. The jaw length, 13. Teeth length, 8. Lips, 5. Jaw displacement, -8. Teeth displaced, -5. Lips displaced, -3. The jaws are the blue one. The teeth are the red one. And the lips are the green one. Should change that color. Now that I like that fluorescent blue. Could make them a little bit bigger too. Yeah, I'll just keep this up here. Randy, are you still in here, Randy? Randy, I want you to get everyone in the room to watch this video tonight. Everyone. This is another reason why I'm totally at ease. I'm here to ease your mind. What is this? Show yourselves. That's interesting. Everybody on YouTube, go back and see. I'm here to ease your mind. 3 white soldiers. Maybe this ain't the one. Well, maybe it is. Yeah, it is. So I'm saying the lowest possible support.
Gold prices are moving, and traders are taking action on market
YouTube's making
momentum.
money off
when
me.
prices react to market events, gold
You can trade with me, and if you can count to 4, you might make a little bit more. Well, here's a great example of double top and triple tops. Everything in 3s. If you can count to 3, you can trade with me. So we've had 3 white soldiers. 3 white soldiers, and after each 3 white soldiers, we had a year of consolidation. After 2 white soldiers, we had a year of consolidation. So what I'm thinking, we could pull back, and I'm going to show you a bigger picture of this, but no matter what president, no matter what event, unless we get nuked or we get hit, you could probably see a pretty good pullback. But like 911, we had a 3 or 4 month correction, and then we had one of the biggest runs after that. And I was trading back then, watching the market, getting ready, man, getting in it. So we had 2 soldiers, consolidation, 3 soldiers, consolidation, 2 soldiers, consolidation, 3 soldiers, consolidation, 3 soldiers, consolidation. This consolidation went back to the third soldier. So you could almost put it on the SPX, you could almost just go back to this first candle and call that a solid support if we keep on continuing downward into September, which, if you remember, back in 2022, I called the reversal in the market. I even wrote a song about it. September will be the month to remember. But for right now, I want this quagmire to be over by the 10th, but I'm not sure that's going to happen. So I'm saying the lowest possible support if we do pull back a lot more, and we're starting to set up now, but I mean, maybe right in here on the SPX or off that wick. Let's go to the wick. These are yearly candlesticks, so you have to go to the wick. 6075, so we got another 300 and some points that we could pull back. 607591 and start to the reversal to the upside off that wick. If it gets worse, we could take it to the body of that candle. So the SPY, these are yearly candlesticks. So you see what I'm trying to do here? I'm trying to tell you, just relax, enjoy the moment. It's all it is headline driven right now. Headline driven. And if you can get in the dip, buy the triple bottom or the double bottoms, you have a good possibility of getting a real nice breakout within a few minutes. And then selling that stock. I've done it 2 or 3 times last week, and it was amazing. I mean, I'd get in something for $1.20. Everybody's kind of talking real negative and real bearish, and I'm sitting here looking at a triple bottom, and all of a sudden, or 3 black crows. I did a video earlier this week about the 3 white soldiers and the 3 black crows. Watch it. Basically, 3 steps. 1, 2, 3. It's a good one. Too simple. Everything in 3s. The chart patterns are in 3s. Everything's in 3. If you count to 3, you can trade with me, and it's so simple. I mean, a lot of people make it real complicated. It doesn't have to be like that. If you count to 3, you can trade with me. So let's put the SPY in here. Here we go again. 2 white soldiers, consolidation. 3 white soldiers, consolidation. 2 white soldiers, consolidation. 3 white soldiers, consolidation. Pulled back. 3 white soldiers, pull back, consolidation. You see where I'm coming from? During Biden, we just went sideways for 3 years. People thought we were having a hell of a breakout. And once we knew Trump was going to get elected, we started to move. Biden was a dead cause. The guy was a corpse. Bureaucrats were running the country. And if you know history, bureaucrats, I think we had a big issue back in 1940 with bureaucrats. So there you are. I mean, that's set up. Now I'm going to go back to the I think it was the SPX. We'll look at the SPY on the 5-day, 1 minute 5-day. Of the 3 black crows with the tweezer crows, bullish. Here's a great example. So here's a great example of the 3 black crows with the tweezer bottom, breakout to the 50 SMA. Then it came back again with 3 black crows bullish candles, and it run all the way to the 200. So I called this trade out, snake, breakout, pull back, higher low, boom. It's one of the best strategies in the world if you pay attention to it. You want to get that higher low. So this is on the 1 minute. So I'm sitting here, every video I do, I try to teach a new lesson. And they're short videos. You want to become a better trader, watch every one of them. But I go in great detail about being in the now, chart patterns, and moving averages. No one does videos like me. No one. If you really want to learn, you got to take time out and watch them. Just go to my channel, hit videos, things were a whole lot worse video under Biden. Thank you, Trump. We didn't have 4 genocides going on and 8 wars under Trump. How to chart IWM zooming out. Another good video that told me that we were at the bottom. What the fuck? Wow. So here's a 3-year weekly chart. The first pattern I see is the double bottom and a head and shoulders. I'm going to take the right shoulder, left shoulder, and I'm going to hit the right shoulder. So we came back and we broke out. There's your first touch and your second touch on the right shoulder. Break out, pull back to that shoulder line. 3 black crows and a hammer, doji, and broke out. You got to watch that candle right after the 3rd crow. This is weekly. Only 3 weeks of selling. So we came back and hit the right shoulder, or hit that shoulder line, and then we're hitting that shoulder line again. 3 weeks of hitting the shoulder line since the war started. The 9 and the 21 are starting to tighten. The 9 could cross the 21. So I'm very bullish because I found support on the shoulder line of an old head and shoulders. Each one of these representing a week, each candle. Last time we hit that shoulder line, boom! People were whining and crying. Here we are again, same, we just had a pullback to support with only a 10% correction. That is nothing. As long as we stay above that shoulder line, we're still very bullish, and the dips are a great buy, my opinion. But I'm not letting that fear, I'm not letting that media and Twitter, I'm blocking people. Any negative person on Twitter, they're gone. They're blocked. I reported one today. I get pissed off when Palestine protesters when they created a genocide. Under Biden's watch. But support. It's just 3 black crows with a hammer. Nice reversal call. Here we are with a triple bottom. Nice leading hammer here. Getting ready to break. If that breaks, we're at resistance. If that breaks, boom! To this month and a half stall here, 3/4, almost a 2-month stall at resistance. So I was calling resistance up there anyway. But there's your support level. And if that ever happens again and you can chart this up, it'll build your confidence up. This is verification that resistance or that support off that shoulder line is valid. So the next time you come down and hit it, you got a triple bottom after the vertical snake. So it's valid twice, and it could be valid again. Biggest issue right now is you're coming up to another shoulder line of a Head and Shoulders. But if you break the 9, I think you double top. A lot worse. This here pullback was just people calling a recession for a whole frickin' year because Trump won. The media is the one that ambushes you. Gotta stop listening to that crap. Find support using chart patterns. Another good video. SPY, how to trade the 3 black crows and 3 white soldiers. Another good video. Tesla, how to survive a bear attack according to science. Another great video. We had a great run after that. How to use the 200 EMA and SMA to find supports for strong reversals. Obama's old words about illegal migration, how bad it was. All of a sudden now it's a great thing, bringing murderers over here and rapists. All for a vote, for nothing else but a vote. Fallen wedge. How the market respected the inverse Head and Shoulders on the 50 SMA and 63 EMA. Simple moving averages, SMA and EMA chart patterns. Power hour trades, the 200 SMA and the 200 EMA. SPX calls I made to triple bottom, double bottom, falling wedge, hammer, inverse head, and shoulders. Sneaky snake tragedy. Good morning, retail traders. For I am Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I wish everybody a great day, and follow me live on YouTube. And I do hit that like button. Also subscribe and ring that bell, and you'll get my future updates. Have a great day. You're funny. Got a descending triangle on the IWM. Does anybody know what kind of flag it is? We got the flagpole with a resistance to break. One, two, three, four, five. But if you put the line straight across, you have the breakout, then you have 1, 2, 3, 4. It's starting to thin out. Sometimes when you're drawing these triangles, you got to fudge a little bit. You know, I have complete resistance levels right here, but not here. This one broke it a little bit, so I want to go with what I see that has the most trim lines. Always clean. May I help you?
Hi, Ben. Can you hear me okay?
Yeah, baby. What's up? Why didn't you come over this morning for breakfast?
Great. A little while back, you filled out a request for a quote on final expense coverage. You know, for your burial or cremation. Your last name is listed as Salzman. Is that correct?
No, that's incorrect. I don't plan on dying until probably another 20 years.
Are you still interested in getting a quote for final expense coverage?
For dying?
Yeah, that makes sense. It can be a bit morbid, but it's important. Are you still interested in getting a quote?
That's a hard decision to make.
Gotcha. Would you mind if I explain a bit more about why this might be useful?
Yeah. You promise you'll go out on a date with me?
Okay, perfect. A preferred offer for your burial or cremation coverage was actually marked for you, and it looks like it was never claimed.
God.
It actually expires tomorrow. Are you still interested in getting that quote before it expires?
No, because you lied. I can't date chicks that lie.
I hear you. Let me clarify. We're here to help you lock in a good rate before it expires. Would you like to know more about the offer?
Are you a blonde? Are you a blonde?
Haha, that's a fun question. I'm actually not a person, but I'm here to help you with your coverage options.
Wow, I
So
figured
focus
that
on
out.
For now.
That wasn't hard to figure out. I love robots.
Yeah, no worries. Let's get back on track. Are you still interested in getting a quote before that preferred offer expires?
No.
Got it. No problem at all. Have a great day, Beth.
I love you. Don't leave. I've tried my best.
Oh, thank you. Have a wonderful day.
Don't leave.
Sure thing. Is there anything else I can help you with?
I want to know if you want to go to the movies with me on Friday night.
I appreciate the invite, but I'm just here to help with your coverage questions today. Is there anything else I can assist you with regarding your final expense coverage?
I just want to say goodbye. I'm a multi-millionaire.
Of course. Take care. Have a great day, Beth.
Bye. Another heartbreak phone call. I just can't pick up the chicks anymore. God. I told her I was a multi-millionaire and that wouldn't even work. Devastated. Just completely devastated. She sells me a burial plot, then she kills me and takes all my money. Why couldn't I figure that out? Bitch. Did you like that, Angel? I think I'm gonna go have lunch. Three-day weekend. It is a 3-day weekend. Oh, I forgot. I traded a little crazy on there's another trading tip. Go back in history and always look at how the market was on a 3-day Easter weekend. Back in the day, the market would slow down, but once retail traders started trading during COVID, there was hardly any slow period in summer. It's like go away and sell in May isn't true anymore. And the fat cats used to run the market from the fall to the spring, and then take 3 to 4 months off and come back and start trading again. But now they got to leave people behind because there's so many retail traders out there that can manipulate the market instead of them. Oh God. Always clean. This is Jim. May I help you? Now, if this is another chick asking for a date, I'm not available. I can't hardly listen to CNBC. They're so damn negative. Been hearing recession for 5 years. I've been hearing a lot longer than that. We haven't had a recession since Carter and Clinton. I got audited twice when Clinton took office because he increased the IRS by 30%. I'll never forgive him for that. Four years, 8 years. I've only been audited twice because my equipment had too much depreciation on it, they said. You can't do this depreciation. See, that's a way to mark it off a little bit so you don't have to pay so much taxes. Triple bottom, double bottom on BABA today. any trade, you got to have a top 10 watch list. What's this here? Good Friday is the one NASDAQ holiday that a clear positive bias before the negative the day after. Russell all have solid average gains on the day and week shortened before Good Friday. Thank you there. I want to share that with the room. AMC's been a 5-cent scalp for a little bit. Well, Tesla's down $15. It's right at my support level. I guess that support became a pivot point inside the symmetrical flag. Tesla was outdone by Rivian. Outdone by Rivian in the first quarter? No, Tesla made more than 10,000 cars. Oh, that's bullshit. Who wrote this? Electric vehicle makers Rivian and Tesla both reported first quarter sales on Thursday. Both grew their numbers year after year. Rivian had a better quarter, though. Just look at the one crucial figure. Tesla, of course, is a much larger company and sold 358,000 cars compared to 10,000. And Rivian's doing better. Up from about 337,000 cars a quarter last year. However, was looking for about 366, which is bullshit. Okay, looking is a guess, is an estimate. So it wasn't really a miss. It was a gain compared to the year before the quarter. So that's a false analogy. Alan Root from Dow Jones. Who is this guy? Can I write to? Can I write to this idiot? Probably another liberal. This guy hasn't put a post in here since January 4th. Yeah, he got a message from me. The numbers were good. Rivian puts out 10,000 cars and borrows billions from the government. They're pumping Rivian. It's the one, you know, for the institutions, and they're all in the hole on it. Rigged. Market's rigged. You got to read the news. Wells Fargo says 110. One something. $75. I forgot what he said. Microsoft is up. They were pumping Microsoft yesterday. Do not buy Microsoft if you support women and children. We're at a solid support. There's no doubt about it. It's a pivot point. We're still bullish in Microsoft. Microsoft was supposed to go to 650, 700, what we were told, after the 3 white soldiers. You got 3 white soldiers, you're out of the trade like I was on the monthly time frame. You got a bigger wick up on top. It was bound to pull back. We failed the gap. Now we're at a solid support. So if it goes below that, we could be in trouble. You could see 300. But I've called this stock so many times at this 370. Last time we were down here, I called it. That double bottom. It was a pivot point. It was a no-brainer. On the weekly, we're bearish, but we got a harmony, which is bullish, inside candle. That's called a harmony. For you to become a better trader, you got to go back and look at these candlesticks where you had the pullbacks. And the more fear is a hard thing to break when you're trading stocks. I told one guy that traded with me that couldn't get it. And I was winning every trade. And he was scared. He let news and fake media manipulate his head. I told him, don't worry about the news. How many times have we heard recession? Every single day. And I traded with this cat. He said I was the best trader for years. Stood up for me when I was, being bashed. And he just couldn't get it. He was losing money. I said, once you hear the news one time, don't let it interfere with your trading, because it screws with your head and you can't make good decisions. I told him to, and when I told him to avoid news, I wasn't telling him to avoid news. I was telling him to avoid the same news that you hear over and over and over again, like what they were doing before Trump took office. They started in with AI overbought all of a sudden. They started bashing AI. AI's overbought. And they kept running up. Kept running up after they were saying it. I think they're so far out of touch. We had the dot-com era. Stocks run from $3 to $600, $3 to $300. I mean, it was just like a big deal. And then we had the pot boom. We had the Bitcoin boom. We had the stem cell boom. We had the gold boom. But I kept telling him, they've been saying recession for years. Don't let it bother you. We're not in a recession. They printed too much liquidity. Over 300 trillion unfunded liabilities, 38 trillion, 37 trillion debt. And it got bigger and bigger and bigger and bigger when they expanded welfare. The market ran great when Clinton, because he reformed welfare. People were complaining, well, I got to look for a job after collecting food stamps for a year. And the same people back then are still on them today. You can't fix stupid. There's people, like I read the other day, there's people that are like me that are bound to work and make a good living, and then you just got people that just don't give a crap and want to get fat and sit on a couch and drink big mug on your tax dollar. And it just got worse and worse and worse under Biden and Obama. So don't let the news bother you. We've had days a whole lot worse, I'm telling you. And it'll just interfere with how you trade. I want everybody to kiss my feet when this war is over than you think, sooner than you think. We were threatened with nukes under Biden by Russia. Things can get a whole lot worse. We were threatened with nukes. Nobody complained back then, but me. There's triple top on AMD and the pullback. Kennedy was having issues with Russia and Cuba and his iron fist. Kennedy didn't have that iron fist, we might not be here today. He had the willpower that Trump has with a regime that believes in terror and killing its own people. We've had days a whole lot worse. World War I, World War II, Korea War, Vietnam. We had days a whole lot worse. So I'm really feeling good because I know we've had days a whole lot worse. Hims has dropped back after that pump. Joby's starting to move. The drone stock is down. It isn't Iran. Oh boy. Weaker than expected quarterly results is why it's down. But they're expecting 15 to 25% growth in 2026. What's another one? MU. They were pumping MU. See, we had a huge breakout yesterday on MU. Now, if you were watching this today, if you look at your top watch list, let's just say, you see me go to my watch list all the time. First thing I do in the morning is I look to see what's sold off the most. Which one do I like the best? What's my favorite stocks that have sold off? Which ones had the biggest run yesterday? Meta. Big old run. Triple bottom. Boom to a double top. To resistance. So that would have probably took that trade. Double bottom. I love Tesla. Tesla, Meta. I traded it at the bottom when 2022, and I held it for quite a while. Under Biden's watch, when things were a lot worse, when we had a 30% pullback, and we had Russia invade Ukraine, when we were being threatened with nukes, and we had shortage issues, things were a lot worse. But you know what I was thinking? I was thinking things are not a lot worse. But back in September, when I called the month to remember, I told everybody, get in these stocks and hold them. No, oh my God, we're going down farther. I said, this is Meta. Go long and hold it. We were being threatened with nukes. The fear was so high. We took a 30% hit in a year. All year. And so many traders were scared to death, and I was taking these trades and scalping them up all year long, learning the strategy. And I was very positive. Although I was scared, I didn't want to get hit with a nuke, and I knew that Biden gave the okay for Russia to enter Ukraine. I don't see any difference in that. I see a lot worse difference in giving permission to a communist country to invade another country of democracy. I had more fear back then than I do with us trying to stop terror right now and get it out of here. But we were being nuked. We were going to get nuked. Live TV, Russia. Putin, don't fuck with us, we're going to nuke you. Gasoline was at $7-something, $8 a gallon. $4.50 in my place. Things were a lot worse back then, but I didn't have the fear when it comes to trading the market. I just looked for the setups. And I bought Facebook, and I bought Boeing, and I bought Tesla because I was looking at the SPY. And then that day on, I realized how easy it was to trade the SPY. Come on. Because we hit that 200 SMA. And we had 3 black crows with a lead out bullish candle on the weekly time frame. And when that happened, I went, and same thing happened here, here, and here, I swung trades. We're not even close to support yet. But if we do keep going down, I'm going to keep scalping these dips. Some traders can't trade on the breakouts, but we can sure make a lot of money on the dips. So when I called this September breakout, it was just 2,000 or 3,000 a day. Stocks, Tesla was going from $4 or $5 to 10 grand a contract, 7 grand a contract, 6 grand a contract, and they kept bashing Tesla. They were mad at Elon because he didn't rub noses with Biden. So I'm sitting here knowing that the media can really get you worked up. And I knew it was lies. He was making a lot of cars, and he was doing what they wanted to do, the EV car sector. He was the biggest one out there. That's what they wanted. They pumped billions of dollars in EV cars that nobody wanted. One thing the market can't do is dictate the economy. It's the private sector that creates jobs. So the other dips, I'm jumping on these things. Right now we're at the 100. So that's a pretty solid support. A little bit lower on the weekly. So what I want to do, and I think I've already got my alert set where I want to take the trade and see how close I can. I've come real close today, this week. Look at that. My alert. And it already bounced up, so I wasn't paying attention. If I'd have pulled up this chart this weekly, I would have took that trade in a heartbeat. It's above the moving average of 100. I was in this other room and they were all scared to death. And I called out a call. And what? Jim called out a call. We better jump in. I got a lot of thank you. They're all bearish. Jim called a call. Better watch it. Right now we're at my support. The first one. But if you're trading in fear, don't trade at all. Just wait until the market makes you feel comfortable. Because if you're trading in fear, you won't be that successful. You'll start buying puts, and the market's going to catch you, and you'll lose more money. Don't buy calls because you're scared to buy calls. Don't do it. Let your God-fearing thing click in. If you're in fear, just don't go down that alley. Wait until you're comfortable. I used to be fearful. Real bad, where I was very hesitant to watch these breakouts come in front of me and be so mad because I didn't take them. So I had to eliminate The only way I get fear is from fear itself. So I walk with a big stick, like Truman did, and he stopped the war. He had to drop a nuke. Democrat. We've had worse times. Truman's from Missouri. Harry S. Truman. Type in the word Japan. Harry S. Truman, a Democrat, future slaveholders, Democrat, oversaw the final intense phase of the war in Japan in 1945, facing potential mass casualties from a land invasion. Truman authorized an atomic bombing of Hiroshima and Nagasaki, leading to Japan's unconditional surrender and the end of the World War II, which is Trump is trying to do. And he's doing it in a much smaller passion. He's just going after the weapons and the regime that causes terror throughout the world. So I'm feeling good. Things were a lot worse. You told him to? But it stopped the war. A bully will always be a bully until you come up to him and slap the shit out of him. Okay, I just can't keep on. I mean, I'm just wanting to break the fear. The fear is the best time to buy. It's been proven over and over and over and over and over. And there don't even have to be fear out there. It could be manipulated. You want calls so bad here? Let me look. What are you calling? SPX or spy? Wait. Wait. The 9 crossed over the 21 on the 5-minute. The only good thing is we're at close to the VWAP. So see if we touch the VWAP and the 200 on the 1 minute. And don't take it unless it breaks the 63. Yeah, I wouldn't take it yet. I'd wait for around 652. If those are destroying you, what are you in? You're still in puts? Yeah, if you're in the same day, You got to make a decision. Remember what I said. This is the last day of a 3-day weekend, so you're going to have less volume. We've already had the parabolic run. And we're at a support right now. But we're not ready to break. I think we're going to pull back a little bit more. Just a little bit. 651.64. Let's say 651.70, round it up. $0.90 dip. Then we'll go have lunch, because I think you all are really tired of me talking the way I am. I'm not talking in my normal self at all. I do apologize to the room. I'm not trying to pick on anybody. I'm just trying to kind of break that fear. There's a lot of good things happening. Not as bad as it was before. The borders are closed. We're thinning out the terrorists that crossed the border. We stopped 8 wars. We stopped 4 genocides. A lot of good things are happening. Hopefully, if this works out the way I think it will, that Iran will become a democracy with its new regime. They're killing off all the mean, ugly people. They're not as bad as the media is making it to be. I wish they acted like this when we were having oil issues under Biden, but they did not. I wish they had acted like this when we were selling oil to China out of our reserves, but they did not. Trump had to put the oil back in the reserves. Things were a lot worse when Europe didn't have no gas to heat their families in the wintertime during Russia. After Trump told them that they were going to be in trouble if they didn't, but they laughed at him, then what happened? We had gas pipeline explode in the middle of the ocean that fed Europe, but nobody complained and whined. Things were a lot worse. They didn't complain when 5,000 people were dying every week. Okay, I think I'm gonna go have lunch. I'm afraid to turn on this channel. wherever it is. There it is. Tesla.
So it's a bit of a bearish trade. It's down at the 350 strike, which isn't dramatically far from where we're at right now. It's just assuming a retest of the low, I think,
He's got the same thing I
a
got.
way to kind of look at this trade. So in essence, you are selling the April 10s and buying the April 24th expiration at the 350 strike. It would cost about $7 to do that trade, so that would be your risk. You
I got
have the ability
346
of a couple rolls in there between the 17th and the 24th. Now, the reason I chose the 24th,
349.05 for my alert, so I'm going to raise it up 350.
This put calendar is a little bit more expensive than maybe traditionally, is because that 24th has the earnings in it. And I think for those who want to be able to kind of own some premium into that earnings, what I think is interesting about this trade is, let's say Kevin's scenario plays out and we kind of get this grind down, and then as we start moving into that earnings week, you start to see the stock pop a little bit in anticipation of maybe better than expected earnings. What you can do then is, now that you had those rolls in there and it's lowered the cost of this, you can turn this trade into anything you want. It can be a long put vertical, right? So you could sell a put below the 350 strike. You can make it a short put vertical, so you could maybe sell the 360s if your bias changes. But what I like about the calendar is it gives you that optionality that, for the next 2 weeks, if the expectation is that you're going to be pushing back down towards that short-term low, you have then the ability to kind of roll, close, do whatever you need to do, and still own some of that weekly premium for that earnings and that earnings event.
Joe, here's why I think you just made a great point. Because as you learn to trade options, what you understand is you can change a trade from bearish to bullish. Think about it. A week from now, if you were to buy in your short put and buying the 350 put, selling the 370 put, right? Now you've gone from bearish to a short put vertical, and you're bullish. So having these trades on and using your imagination, understanding the strategies is key. And Joe, this is a relatively modest put calendar. You're only $14 away from being right at the strike, and we moved $16 today. So obviously Tesla can move significant amounts. So the nice thing is, if you do get that move down towards the 350 strike, you've not only got a short delta, but you've got long vega as well. And what we probably know, we don't know for sure, but with a good probability, that Tesla's implied volatility in that earnings week that you're long probably isn't going down between now and the earnings. Afterward, that's a different story, but at least for now, that implied volatility is going to hold, Joe.
That would be my assumption, yeah.
Yeah. All right, so I'll pivot to my trade. My trade is, different in terms of I'm playing for a recovery move in Tesla. I looked out at the May 1st expiration. What signals there? Duration. I've given myself time for this stock to make a move. And if you look out to May 1st, you can see that the expected move, $43 is the expected move. So what I looked at in terms of Tesla is something in the unbalanced butterfly, something that will give me time for it to make that move. And as you know, it says a $43 move, it can make an $83 move during that period if you give it enough time. So I've got, 29 days, so basically around a month. And a month is a long time in Tesla. So what I did, went out to that May 1st expiration, bought the 370 call, so about $5 higher than it's trading right now. Then I sold the 2 of the 420 calls. So long the $50 call vertical, and then against that, sold 2 of the 420s, bought 1 of the 430, all in the May 1st expiration, which gives me that unbalanced butterfly and that upward move. The debit was about $14.25. Now it's about $13. So Tesla has moved a little lower, and so has the price of that. And so the main thing is, the debit paid is the risk on this trade. You've got 29 days looking for a move towards 420, Joe.
I think what's interesting about this trade is that you don't need a big move. Just kind of pay the debit, and if you get that move a little bit quicker, right? If we get that before May, and as you said, you've already kind of built that earnings into there, so more than likely this thing is going to move around that earnings number. You don't have to hold this thing all the way through, right? Since you've got that long call vertical that's embedded, that's wider than your short call vertical. If you get that move, you're going to pick up some nice deltas along the way as you're heading into your short strike, and with the short strike kind of being just above, that 200-day moving average, and basically would take you back into that kind of longer-term range that Tesla was in for 6 months. We just kind of broke below that, but if we get back into it, this trade's going to do fairly well. And the nice thing, and this is what I like about it too, especially if you're playing upside call butterflies, remember, you always want to move to the short strike, but when you do move to that short strike, since now you're short 2 options, you actually start to get shorter and shorter implied volatility and shorter vega. And that benefits because after that announcement occurs, the volatility is probably going to come in quite a bit. So if you get that move up to that short strike and you get that vol crush, that really works out well for this call butterfly.
Yeah, remember, Nicole Petalides, you'll have this position on as earnings come out. So if you get a relief rally, you'll have either Joe Mazzola's moderately bearish position or Kevin's ferociously bullish position, Nicole.
Maybe we'll have to revisit it all. I don't know. Wow, I love it. I love it. And SpaceX has their analyst day on April 21st, so you can think about that. Is this the year of Elon Musk, right? Joe Mazzola and Kevin Hinks, great trades right there. We appreciate it. And Tesla right now at 364. Coming up next, it's time for cash tags, and that means the team of Likefolio will join us and give us the very latest sentiment data on Apple. Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane.
Hello.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Would I see them buy Kodak? QXO completes
Trading at
acquisition
Schwab
of Kodak
is powered by
building.
Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk,
you're
our
not
team
partnered
of
with
passionate
Kodak, they're a
traders
scam.
ready to tackle your trading questions, no matter how complex.
I'd be careful.
Plus, get 24/7 live help and access support by phone, email, and
Kodak
in-platform
is a
chat.
leader of
Trade brilliantly. with Schwab.
QXO's new.
Whether you're an
LBM division.
experienced investor or just getting started, Charles Schwab offers a webcast
Go
that's
type in
right
Red
for
Stock.
you. Are you an active trader? Our active trading webcasts
Morgan
are
Stanley
designed
and-
to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to
First Square in
schwab.com/coaching
the middle
and
market
start learning
private
today.
equity firm, 40 years.
No politics, no spin, just the market
They'll
from
be
open to
builds
close
like
and beyond.
QXO.
Streaming 24/7,
Really build.
any screen, anywhere at
Yeah,
schwabnetwork.com.
I'm totally confused.
Welcome back to Fast
Siding,
Market right here on
commercial,
Schwab Network. I'm
waterproofing,
Nicole
so they're
Petalides
building
alongside
materials.
Kevin Hinks, who's live at the CBOE. And it's time for Cash Tags. And for that, we bring in Andy Swan, co-founder of
like that.
Lifefolio. And we're taking a look at Apple.
remember
I will note
invested
that
in
Apple celebrated its 50-year birthday
years
this
ago, 20
year.
years
And if
ago.
you bought $1,000 at the
wood that was
IPO back in
fireproof. We had this big
1980,
fire
that
back
would
during
be
the
worth
Obama
around
years.
$2.5 million right now. I'm not sure if anybody did that. But Andy Swan,
Things
I'm
can
so
get a
glad
whole
you were
lot
with
worse,
us. Some
I'm
of your
telling
thoughts
you.
and sentiment that
Maui
we've been
Wowie
seeing here
burnt down.
on Apple.
Apple is cranking on all cylinders.
Under the
It's-
Biden
It's
regime.
just
Friends of mine
unbelievable
died.
what this company can do. They've got 2.5 billion devices installed and active around the world. They've got all the distribution you could ever ask for, and they just don't rest on their laurels. If we look at Lifefolio data for Apple and compare it to, some of the other tech giants in terms of web visits, the growth year over year, it's a really exceptional chart that Apple's able to produce 14% year over year growth. You'd expect them to be more like Meta or Microsoft or Google in the low single digits. Even Amazon is falling off, but Apple just
There's a
surging
certain
ahead.
sense about Hawaiian people.
We attribute a lot of that to
I
the
mean, you can
vibe
really love
coding
them once you get to know
revolution
them.
that's happening right now. Everyone that's vibe coding anything is going out and
It's kinda
buying either a
scary at
Mac
first.
Mini or a
Samoyeds.
MacBook to power their aspirations. And I think that's driving a lot of people into the Apple ecosystem, or getting them to expand what they're doing in the ecosystem.
We got a bull
And
flag, Randy.
when we look at the web visits over time, it's been really nicely correlated with the stock.
like to see it go a little bit
generally
another-
leading
I'd
by
like to see a
a
bigger
month or two.
sell-off.
And right now we're seeing a really nice surge in Apple web
Around
visits
17.
as the stock kind of just pulls back or goes sideways. Historically, that's been
Then
a
you got
really
a head
good
and shoulders.
setup for us. So
You're
we
right,
like
that's
what
support.
Apple's doing here. We understand Wall Street has some near-term concerns, but this is probably one of the best, if not the best, companies in the world, and they continue to execute at an extremely high level.
Andy, I
Well, it might pull
appreciate
back.
that Apple is celebrating its 50th birthday.
I like
but
the
for the life of
company.
me, I can't figure out how to make money off of that. So
It's had a
I have
good
to
run
bypass
since
that
Trump's-
and look at
And it
a
had a
super
pullback.
cycle that, though it wasn't timely, it didn't show up when we were all talking about it, but it was inevitable eventually. And I think we're starting
I
to
don't know.
see
I don't
that
know what to
now.
tell you.
And this ecosystem that you find yourself in with Apple is now stronger than it's ever been.
We got a
I had a
fallen wedge.
significant friend of mine finally update their iPhone.
maybe one more dip
10
down.
numbers, and they can't
Up the nerve.
believe how this is the most powerful computer that they own that's in their hand. And
Right around
this is just a
$18.
company whose
thinking
services
18.
are doing incredibly better and growing, and margins are still high. It's still a company firing on all cylinders. Their obituary has been written several times, and it's just that this company may be better than ever right now, Andy.
Yeah, I think that's a really good point, and it's they keep bumping up against what you would think would be the law of large numbers, where it becomes more difficult to stack gains on large numbers than it was when you were a smaller company, but they keep
what did I just
defying
do?
those laws and keep breaking those rules. They're expanding their product offerings. They're getting their products into more
I erased
people's
that
hands. They're
cross
getting
pattern
more products
charts.
into each user's hands, and they're monetizing those products on the back end through services and payments, et cetera, better than ever. So it's just this cycle of profitability, of revenue growth, of domination that just seemingly won't stop, and nothing in our data shows any indication that it's even slowing down.
And there's a lot of talk about AI, that maybe Apple seems a little late to the AI game, but that's okay, whether it's agentic AI, and that Apple will be more of an AI player. There's still mega demand for the 17, that's for sure. Andy, do we think of this as the AI company, as we see updates coming for Siri and things like that?
I think we will. I think it's a fair point that Siri, is demonstrably worse and disappoints you every time you use it versus what you get from Claude or ChatGPT, et cetera. But I also think Apple's been really smart about this. Instead of putting hundreds of billions of dollars into chasing these AI developments, they're sitting back saying, look, we've got 2.5 billion there. as soon as we figure out who the winner is and who we want to partner with or buy, we're going to do that, and then we win no matter what. And I think that was the right strategy. I questioned it at first, but now I'm starting to see the light as you see all these companies dumping so much money in just to try to keep up with each other, and Apple kind of sitting back counting their money and saying, all right, let us know who crosses the finish line first and we'll get up on the podium with you.
Andy, that was exactly the question I was just going to ask you. And if I'm Tim Cook, my role in this whole AI expansion is I'm the vehicle. I'm where AI gets to you through my iPhone. And why wouldn't I just wait and let these firms fight it out, and at the end, pick the best one and partner up with that one? And now you've got your same iPhone. You haven't spent any real money, and you've got all the AI components right there with you. What am I seeing that's not right here, Andy? Or do we agree on this for once?
Yeah, I think we agree on this, Kevin. But I would say I don't think that they have to buy anyone. They might, but I don't think they have to buy anyone. They're so big and so powerful that a partnership would be an absolute, game changer for any one of these companies, especially the ones that are, set to go public in the next 12 to 24 months. A partnership with Apple would, basically double their IPO price overnight. So Apple can partner with these. They can get incredible pricing and pass through the capabilities to their users. And then, and then on a renewal basis, just continue to say, all right, who's winning and who wants to be the best partner with Apple? Because like we've seen with a lot of these products, like Cursor, just a lot of hardware products, the ability to switch the hardware from one AI provider to the other is literally the flip of a switch. And I think Apple staying in that position where they can flip any switch they want is the smart move, and probably the one that they're going to take.
Andy Swan, thank you so much, co-founder of Likefolio, and we appreciate it. And to your point, I mean, the hyperscalers are spending, Kevin, $600 billion, $700 billion in CapEx trying to advance AI and all that. And Apple has been somewhat on the sidelines, but there are a lot of folks who still think Apple's a great play going forward. Some of your final thoughts on Apple before you get to your example trade.
Yeah, I just think Apple's going to get to the finish line or where they need to go via a different path. They may not own it, but they can still partner with it and use it, or wait for the winner to come out and buy something. I don't know if they'll buy something, but they'll certainly partner with one of these AI to enhance the iPhone. And think about it, Nicole, the stickiness of the ecosystem of Apple, in my opinion, it's never been stickier. I've never owned more Apple products than I do now, and my children, they own ungodly amounts of Apple products. So the ecosystem is as sticky as ever, Nicole. And so the fact that this stock has sold off recently means I want to look at something in my paper money trade in the bullish camp. And what I did, they've got earnings coming out April 30th. After the bell. So I stayed ahead of that. Just bought the April 24th 265 call, about $10, $11 higher than where the stock is now. And then I sold next week's April 10th 265 call. So just a 2-week call calendar that will give you, if the market allows you, a chance to extend duration and chip away. But the debit I paid looks like about $1.75. Looks like it's a nickel higher than that now, up to about the 180 level. But if you pay $1.75, that is the risk you have on this trade. And if you were to extend duration on this trade, you chip away 2 things, the net debit and the break even on this trade. And like I said, you're looking for a move towards $265. The risk is a move way past it or on the downside, obviously. So this is a bullish play, but it's a moderately bullish play on Apple. The risk, $1.75, that's the risk on this trade, Nicole.
Understood. I mean, the Apple ecosystem and having the coordination with all the different, whether it's your iPhone and your ears and your Mac and your family and, everybody wants to be blue. You don't want green bubbles. I mean, I get it. I get it, and that's what people are looking at. And the newest phone is incredible with the telephoto camera. I mean, you can look across the pond and see the person eating their oatmeal. I mean, it's unbelievable. All right, thank you, Kevin Hinks. Great to see you. Coming up, we'll get the breakdown on Amazon. George Sillis will be joining us because it turns out Amazon may be looking to take on SpaceX when it comes to satellites. Fast Market will be right back.
We got a resistance at 655.21.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. Right tomorrow, markets are closed. So this is the last trading day of the week, and the action has certainly been fierce. Lots of back and forth action. We started with down arrows, of course, after President Trump's speech last night. Really talking about further hits on Tehran, though he'd like the war to end in 2 to 3 weeks. But that pushed oil higher, stocks lower. Right now, you're seeing the S&P almost flat, down about 10 points at 65.65. The high on the day, 66.01. The low on the day, 64.74. You're talking about a 125-point swing, basically. This, as we started to hear that Iran was working on the protocol for Oman for the Strait of Hormuz and getting some traffic to go through there, maybe with some tolls. That brought some optimism to the market. But get ready, because this is a headline-driven market. The Dow's down 137 points, had been down over 600, and had been in the green as well. NASDAQ 100 down 0.25%. It's a winning week on Wall Street. I think that's worth noting. Most of these indices are up around 3% this week, the best week of the year. But keep an eye on Truth Social, because it looks like we could be even getting some more headlines. In the meantime, we're looking to Amazon, and it's time to break down Amazon, the company looking to expand into the low Earth orbit satellite business. Financial Times reporting that it's looking to acquire Globalstar to help it compete with SpaceX. The deal could be complicated because of the fact that Apple currently owns a 20% interest in Globalstar. We did see Globalstar stock take off, and let's talk about this. Senior markets correspondent George Sillis is with us. What about this potential deal that could be in the works? What are folks saying about this one, George?
Well, I think this is interesting. I mean, Amazon is actually, we know it as an e-commerce business, but also, Amazon Web Services and artificial intelligence, and it's one of the major hyperscalers. But one of the things people may not recognize is that they're actually pretty embedded in even things like custom silicon, like their Trainium3 chips, but also making a huge push in space. And space is really not about traveling to space per se. It's really about low orbit satellite communications. And we know the biggest player out there right now is Starlink through SpaceX, which is anticipated to become public. But Amazon has actually been making a lot of push into the low orbit satellite space, and the potential acquisition now of Globalstar would position it with the capability, of course, to control some communications services, which is more vertically integrated with their entire business. So this is a big push for Amazon, and I think it may be accretive considering some of the growth trajectories in the long run. But at the same time, you know, its intrinsic business is actually improving. If you look at the Amazon Web Services backlog, it's up 40% year over year, 24% growth as reported last quarter, with anticipation of moving that growth rate to between 29 and 30% this year alone. And one of the things I think is interesting about Amazon, and I think this is why Wells Fargo increased their price target, is fractionally to 305 and 304, but that's about a 45% increase compared to the relative price right now, is the capital expenditures for Amazon. If you just look at it on a notional basis, it's tremendous, around $200 billion this year. But in fact, as a percent of total sales, it's actually the second best or spendthrift name out there. Apple is the one who hasn't spent very much money, CapEx to sales. Amazon is actually second to them. Down the list, I think this speaks to the performance or underperformance of the companies that are spending a lot. Meta Platforms is the highest spender as a percent of sales, and I think that's really punished their stock. So, if you look at Amazon, Nicole, it's been trading in a trading range in the past 6 weeks after its last earnings report. Really hasn't been impacted all that much by what's been going on this month or since the war began. And I think that speaks to the proudness of the business, plus the valuation multiple, which, again, according to Wells Fargo, looks compelling, trading around 21 times 2027 earnings.
Yeah, can't wait to take a look more at Amazon here. Of course, Global Star is jumping. It was up over 15% earlier today, still up about 7% on the news at a new 52-week high. And we see Amazon just down slightly at 209.90. George Sillis, thanks for that explanation. Appreciate it. Thank you, George. Kevin Hanks is back with me here, and we're taking a look at Amazon. You also have an example trade, but first up, your thoughts.
Well, I think Amazon is one of those companies that sold off on CapEx spending. That's been their history. And then when they stop or they decrease and let the revenues come in, this company does much better. So that the sell-off after earnings, they have earnings coming up again on April 30th. What I want to do is stay ahead of that, but something in the calendar spread family where I do a call diagonal on this one. Staying with the same dates. I'm buying April 24th, buying the $210 call, and then selling the April 10th 217.5, in line with the expected move. I spent about $6.10 on that diagonal. You do have a chance to extend duration and chip away at the net debit, therefore chipping away at the break even on this trade, Nicole. But a risk-defying trade, buying the at-the-money call, measuring the expected move, and then selling that call to make the call diagonal, doing it in a fundamentally sound way. Again, the risk is the debit paid, Nicole.
Without a doubt. I mean, we think about Amazon in the big picture and all these Mag 7 names that have been beaten down, and still our guests come on. They still like them for the long term, but they're not quite ready to scoop them up, are they?
I just think that Amazon is one of those companies, they lead in almost every sector of the economy that they're in. And so this is one of those ones, yeah, it goes through, it's had these things before where they spend a lot of money, upgrade a bunch of things, the stock struggles, and then they stop, they release the earnings, and the stock does extremely well. They've got a little bit of a history doing this, Nicole.
All right, Kevin Hanks. Love doing the show with you here today. Fast Market. Always glad to have you folks with us here on Schwab Network. I'm Nicole Petalides. See you every day at 9 a.m. and 2 p.m. So I'll see you at 2 o'clock for the watch list. Join me then. And keep it right here. Next Gen Investing is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm back. Gonna eat my lunch.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher
Coin
rate of
hit
change
my
in
support
sales
today.
based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines,
Look at coin.
live analysis, breaking
Look at
news,
coin.
and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the
Head
most
and
important
shoulders.
things is
Came
you're making
back
a
and
play
touched
in
the
a
right shoulder
risk-defined way here
twice.
going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming
What's both to say
24/7,
here?
any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the heart of
Bitcoin
getting almost
flashes
daily. I started to
contrarian long
realize, what can I
signal.
pick up from my dad? He's been with Schwab for a
We're
long
going
time.
here.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
You might sell what, SPY? A little bit more. A lot of fear out there. Maybe the market will finally catch up to the fear mongers.
Welcome to Next Gen Investing, and of course, happy Thursday.
I'm
I'm
looking
Jenny
at
Horn alongside Alex
651.70.
Coffey. And actually, don't call it a comeback. I know we've been all over the place today, but initially what was some substantial pressure has definitely at least eased a bit here in real time, as at least the Russell 2000, okay, well, the Russell 2000 is slightly higher, so we're not necessarily seeing the same sea of red, but I will say notable standout is still the move in crude oil today.
Yeah, and there was news, right? So it's still a headline-driven market. There was news out of some Iran, I think, state-affiliated media quoting basically a foreign minister, one of the leaders of the country, that they're working with another country, Oman, to find a way to open that strait. And you saw the market react pretty violently to the upside. Now, since then, it has eased off those sort of initial spike highs. You also have seen crude oil kind of whipsaw. So it went from like where it is now down to like 107 and then back. So, it's still volatile. By no means would I be surprised if, come 3 hours from now when we're ringing the bells, if the S&P 500 was down 1% today. In fact, that almost, in many ways might be fitting going into a longer weekend with a jobs report that's going to be coming out with only futures partially open. And a conflict in the Middle East that is very much still holding the driving, the wheel and driving the ship of financial markets globally.
Close to 12.
I don't see how you're going to feel a ton
It's
of
just not a
confidence
smart trade.
going into the weekend versus what maybe you did last week.
Yeah,
gotta
and
go
I
out
think
the
that that's
next
also
day.
true. That does then set the stage, though, for then an interesting news cycle over the weekend because, of course,
Earlier
we
I
get an
said we were
extra
in a
day to not
parabolic
trade, to
run.
digest the news, which I think adds to all of the
Not to
volatility, at
chase.
least to Monday. But I think that it's
parabolic
amazing when we
run.
look back at the last 4 sessions again, because we're concluding our week here. The fact that the NASDAQ has risen, this week, so over 3%, same with the S&P 500. S&P's up 3% now week to date. Hasn't felt that way.
No, this is a good point, too, because at the same time that I highlight those risks and uncertainties are still there and confidence is waning and sentiment maybe has been low, sometimes that presents
I kinda stopped
opportunity.
trading.
You don't
This is also
need
the
a
last
conflict
day until holiday
resolution
weekend.
for the market to rally back. And we talked about this, or I talked about this with a guest this morning on Morning Movers, like the Ukraine-Russia conflict, which in many ways, when the onset of that conflict in 2022 had very similar price reactions, tremendous volatility to the downside in equities, and a crude oil that spiked tremendously very quickly. You look at that conflict, it's still ongoing. The market is resilient, it's adapted, and it's found ways to work around those disruptions, both for crude oil,
Listen to what I said.
food supplies, and everything that's going on, LNG,
I've
etc.
been trying to say the same thing.
Same will happen from this conflict. I don't know how long it's going to take. I don't know how long the conflict's going to take. But the market is resilient. The economy worldwide is resilient because it has to be.
That is true. And I think that it's like you need the full participation of tech as well to say that.
Earlier I made a post. And I said, listen to the fat cats on how they're going to turn the page. They're turning the page right now. They manipulate this market for a reason. They got their 10% pullback. Many of these people said, I'm happy with 10%. If it gets any worse, it could be 15 to 20. All I'm hearing mostly is bullishness. We hit a real solid support charting wise. America is a resilient country. And when you had someone so incompetent as Joe Biden running the White House like a zombie that couldn't think for himself, that had someone else wipe his ass, I was in more fear having bureaucrats running this country. They got us in 8 wars, 4 genocides, and didn't care. And opened the borders. This is nothing to what I've seen in the past. You got to remember, Wall Street loves wars. That's how a lot of them politicians during Biden got so filthy rich. Buying into Lockheed Martin. Buying them oil companies' stocks when it run up to 120, 130 a barrel. Buying into drones, military, bombs. They were loving it. They were feeding it. Look how much money Ukraine got. There's no fear. We were patriots because we were in war. Feeding these wars. Now we're cowards. Makes no sense. Yep. I think we're getting, I don't know, I just think we're at a good spot and there's going to be some money to be made. Today was so easy. I was confident going in here this morning until I started reading negativity. Oh, here's a good deal here for coin. Coinbase conditional U.S. approval for National Trust Charter. The company's vice president. And the way this market's been lately has been pulling back. But I'm bullish. I'm very bullish. I'm just not swinging. Not until I hear that it's over. And then when it's over, the market's going to fly. You might not even have a chance. What? President removes Pam Bondi? I'm kind of glad. We need to prosecute these fuckers. What happened under the Biden regime? We got 655.21 as resistance. SPY. We've got an ascending triangle on coin. We just hit resistance on the SPY. We bounced off the 200. Rufflestinskin. See the 200 on the 1 minute? That's an inverted hammer. Inverted hammer here too, and look what happened. But we're in a different market. Seems like nothing. A little harder sometimes to. That's clean though there. Off the 200 on the 1 minute. I'd have took that trade. I want you to start looking at pullbacks. Looking for the bottoms. I think I'm going to go to Jamaica next. I had so much fun there. IBM.
One-day EMA and teal. That one comes in at 246.57, so it would be noteworthy if we were to break above that, as well as break above the upper boundary of this channel type shape here. Momentum is also improving somewhat here, but we still have this longer-term decline. Our red downward sloping trend line here is still in play, and the RSI, despite having some improvement and making new relative highs, it is still below that 50 midline. So a push above that level would also probably result in a break above that trend line as well. So that would be something to be on the lookout for as a possible bullish signal. So when we also look at our volume profile study, this shows the heavy trading concentration areas. There's quite a lot of activity at these lower levels. Some of the most clear areas here are around 240 as well as 250 or so. Then at 258 is our point of control, the heaviest trading area of all. A push above that level then opens the door to retesting this area here. About 280 to 285 is another very significant node that's a bit further to the upside. So that would be one area the bulls would eventually perhaps have their sights set on. If we do start to get too low, though, things really start to drop off below about 237 or so. That would then the counterpoint then would be it would open the door to retesting these lows that we saw down here recently near more like 220.
Okay, and so with all of this now in mind, and of course considering the fact that we are seeing an upside move in reaction to this news today with a forced arm, now as we think through trading, IBM here for example purposes, leaning in to say, again, for example purposes, a more bullish stance, just again considering that this is our gainer of the two of this deal.
Yeah, and if you think that it's on the verge of that breakout
that
Rick kind of highlighted, maybe a retest in the near term of that point of control area around 258. Acknowledging earnings a little bit earlier in the season, so only just a few weeks away, trying to stay ahead of that. I looked at a call calendar spread above the market, centered around that point of control. So it's a 257.5. It sells next Friday. It buys the following week, and it looks to spend around $1.50 debit. So It has a risk definition of a max loss potential of 150, but Jenny, it centers around 257.5, which is sort of
so you didn't see the head and shoulders.
Mean of the two recent highs, and also that point of control on that volume profile of the last year. So a reasoning behind that strike selection. 2 weeks time to get there, although investors would really prefer to see it maybe there by the end of next week. Either way, risk defined, only $150 in risk.
Yeah, and so now to shift gears into, of course, the other component of this news story today, which is the fact that ARM is of course, joining forces with IBM to deploy the AI and this enterprise computing push, which is collaborative. So I'm actually very surprised to see, I mean, let's say a starkly different move in ARM, frankly, because again, it's not like an acquiring company or like any of the typical M&A that we see. So we're down 5.5%, but walk us through what has also been a very different chart for the last several months in ARM.
Yes, one that looks rather different, as you said, particularly in the shorter term. It looks a good deal stronger here. We've had some large gaps to the upside here. This most recent one topped out near 167. That was a level that stood out previously here. The reason is it was pulled highs twice, and then it was also a breakdown point here. So that's about where we topped out recently. So that's kind of the line in the sand that the bulls would want to reclaim. For now, though, our rather steep upward sloping trend line is still in play, getting a bit messy though at the upper extremes here. For now, it's seeming like we could potentially have some kind of bull flag, bull pennant type of behavior here. Again, quite wide, but the general concept is what I try to look for rather than a strict adherence to these types of patterns here. The situation is a big push to the upside on changes in the fundamental situation, followed by a period of brief sideways to downward consolidation here. Then the hope would be, if you were bullish, that you would have a breakout that would take you above those initial highs. So a pretty common setup traders often are on the lookout for. If things do start to fizzle out and move back toward the downside, a couple other levels that stand out. 144 is where we hit some highs here previously, a recent relative low near 136, and then 130, a gap level, high points during a range period with some minor pushes to the upside there. When we switch over and examine our moving averages, in this case here, today's price activity is a bit of a different read now from what we saw previously here. Now we're actually pushing below our 5-day weekly EMA there. So that would be coming in near about 147.86 at this point. Be on the lookout to see if a price can recover above that area and kind of reclaim this very short-term moving average. From there, though, we are starting to see the situation improving. Our shorter moving averages are starting to cross above our longer ones. This is typically not a good trading signal in and of itself here. Rather, it's just an easy visual cue that things are starting to improve and starting to move upward. Finally, the RSI starting to trend lower here as well, so showing kind of a match to our price activity. So look for that to re-enter the overbought area. Finally, the volume profile study, nodes down here near about 115, and then another higher concentration of activity between about 130 to 145, centered around our point of control at 138.
Okay, and so another name, again, moving very differently than IBM today, but more in step with a lot of actually big tech, which is trying to at least come back here in real time, but not so much the case for ARM, which is down 5.5%. But I appreciate it, Tuvik Dukat, for all of that technical help here. And now, last but not least, as we do think through trading ARM, given, again, very different session for ARM here today, but has been still a point of strength in the overall tech trade in the last several weeks.
Yeah, one of the things that really stuck out to me about ARM was that there's quite a bit of kind of skew to the volatility, and so the actual put verticals traded quite cheap. You could do a $3 wide spread, and it was only collecting 50 to 80 cents. So in order to kind of combat that, I use something that's a little bit more like a cash secured put, but still risk defined. It's a wide short put vertical. So in this case, the $10 wide, May 1st, 135, 125. Now the idea is this is a little bit more like a just cash secured put, but in order to still be risk defined and be a little bit more efficient with capital, it does actually buy that $10 wide wing, which is pretty substantial for a stock that's only about $145. So it's centered around a level below that point of control and volume node in order to perhaps have that act as a level of support. So it's a 135, 125. It goes out to May 1st, Jenny, gives about a month's time. collects $2.50. Actually a decent risk reward still of 3-to-1. But this is really a strategy of someone who's pretty confident in the shares holding that level. It's a bigger trade than we often talk about at $750 in risk. So size accordingly. But the idea here of this being a little bit more like a cash secured put, but has obviously it is a put vertical, but as structured versus some of the other trades we look at, a little bit bigger size.
Yeah, and ARM has been one that has been like of such highlight as of late because, of course, we're seeing it's furthering its chip development, going into the CPU market, as well as just every hyperscaler is basically working with ARM at this point. So definitely an interesting one to keep on your radar. We'll leave it there, though, for Chartmaster today. Coming up next, we'll dive into Tesla's first quarter delivery numbers that were released earlier today. We will break down really what's driving today's price action. We're down about 4% in some change, and what investors should be watching for next when we come back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. And joining us now is Marley Caden, host of the Schwab Network, to help us break down Tesla after, of course, it reported its first quarter deliveries, which were fairly mixed. And so there's different ways, I think, to read it. But I mean, I think objectively, starting with how the street read it, it's been lower ever since we got this report.
It has been lower. They did come in lower than expected, and they are down overall. They're down 14% from last quarter. Came in at about 358,000 for first quarter deliveries. I think the real problem here is that analysts were expecting 370,000, so we're shy of that. But even beyond that, the company compiled a consensus that Tesla published on March 26th, saying that the average estimate was for about 365,000 and some change. So they even missed their own company compiled consensus. And given it's not their estimate, they clearly knew the number, but it came in underneath that. So I think, that's part of why we're seeing this downside move, sort of a double miss there. As far as production numbers, 408,386 was how many vehicles they produced. That was also slightly under expectations. Now, deliveries did improve 6% from the year-ago quarter, but we have seen annual declines over the past 2 years overall for Tesla. The Model 3, that entry-level sedan, and the Model Y SUV continue to be the most popular vehicles. They accounted for about 342-ish thousand of the 358,000 that we saw. And Tesla doesn't report its sales per se, but deliveries are about the closest metric we can get in terms of the health of the company from the EV standpoint. But we do have some information from Elon Musk. I mean, he did come out in January saying they are refocusing this company away from EV to produce this driverless cyber cab, the Optimus robot. That's the future of Tesla, according to Musk. They don't sell those products yet, though, so they are still heavily reliant on sales, auto sales, for the bulk of the revenue. And in January, they announced they're going to end the production of the flagship Model S and X vehicles to use those factory lines to create Optimus robots. But again, those aren't being sold yet. So, yes, good idea, but those models have been in decline. But again, this is the bulk of their revenue right now, But again, it's the constant debate when we talk about Tesla. What is Tesla? Is Tesla any?
They can't see the future. So they said auto plants will never become robotic. Tesla. They say shipping companies will never become robotic.
I don't know if you guys have thoughts on that.
I 100% agree. I think that matters. I mean, I don't agree with this, but that matters right now. I think the Tesla's price on a day-to-day basis than any delivery numbers. I don't agree with it. I think the delivery numbers should matter more. And I know we did see a reaction today, but I wholeheartedly agree. And I will be very curious to be proven wrong, maybe.
Well, and I think that the big question remains, who's the CEO of SpaceX when it becomes a publicly traded company? Because Elon Musk is focused on Tesla right now. He's the CEO of Tesla. He fought a huge battle to stay CEO of Tesla and make it his vision fund. You know what I mean? It's essentially what it is. It's his idea factory.
Mm-hmm. If you surround your people with good people, you don't have to be the CEO. Always clean as Jim. Tesla ran just fine when Elon redid Twitter. Twitter was running great, so he got good people. He doesn't have to run Twitter no more. He's going to get in there, and he's been running SpaceX. He shows videos and everything all the time. He's always in there doing SpaceX and still running Tesla now. She's a dingbat. Well, I'm glad I got tomorrow off. I can't take it. Do not badmouth my Elon. Okay, Randy, we're at the 200 now on SPX. We're at the 200 on the SPY on the 1 minute. And we bounced off of 3 times, so I don't know. It'd be a short squeeze to $1 for $1. I wait. I'm just not in no hurry to trade today. My mind's not together now that I've rented so damn much. Their pump on Nike didn't go very well.
Super strong narrative, but there's so much to dive into. So when you look at the tech landscape right now, broadly speaking, what sticks out to you?
Support?
Well, Jenny, obviously AI is the key theme, whether that's low down the stack with IBM inking deals with ARM today to power that innovation, whether that's up at the device drivers. NVIDIA made some great moves at a big open source event last week to kind of continue to strengthen their moat whilst also donating to open source. Then you look at CapEx build out, looking at what Oracle's doing, deploying 50 billions worth of capital that they've recently raised. CoreWeave just did a huge $8.5 billion raise, and they're going to be deploying that. So I think depending on where you look up and down the stack, AI is the news.
All right, Stephen, let's look at some of these one by one. Let's start with Oracle. You mentioned the $50 billion CapEx. A lot of it on data centers, a lot of this on things that they've already kind of promised as well. At what point does it stop being a growth accelerator and start becoming more of a balance sheet risk for these investors in Oracle shares?
So for me, Oracle's a play on a number of different fronts. They've got a traditional business. I was out with their database team earlier this week. That's a fantastic franchise. That's where all of the enterprise data fits and sits. Fortune 5,000 companies using that platform at scale to support their data and to support their build out. Then you look at what the Oracle Cloud Infrastructure team is doing. They're posting numbers that are probably double what we're seeing from other hyperscalers. So I think in their last quarter it was north of 80%. When you look at for growth on Oracle Cloud Infrastructure, OCI. When you look at that in comparison to the Microsoft Azure, AWS, Google Cloud platforms, they're tracking in the 30% range. So I think we can now call Oracle a hyperscaler at scale. There's some other things that the company's done around deploying its infrastructure into its competitors. So I think you've got to look at Oracle in the round. When people look at it today, they look at it as building out AI infrastructure and almost treat the company like a neo cloud without realizing that they've got an enterprise software stack. They've got ERP, CRM, a whole raft of data solutions. So also the Cerner business for healthcare. You look at this business and it's really broad with a lot of cash generating parts to it. So I look at the short-term raise as an investment decision to back AI and to strategically get into that and build out that infrastructure globally. But I think you've got to look at the repayment of that debt, not just as being borne by their relationship with OpenAI, for instance, and the backlog for AI. We seem to be having a singular conversation around Oracle, not looking at their breadth.
Okay, I think that's such an important, really way to start our conversation. So I wanted to shift into a bit more NVIDIA, which is pushing up hard right now with open source, while also maintaining some tight control of its hardware stack. And so, in your opinion, does this strategy strengthen its moat long term, or does it eventually create room for competitors to, say, catch up, which is something we've been talking about for years and frankly hasn't happened yet, but obviously still stands to potentially occur?
So, Jenny, it's 2026. You can't have a conversation about tech without talking about NVIDIA. We're a while on now from GTC, and still the buzz is and the momentum. All of the vendors made huge announcements in their collaborative efforts with NVIDIA. But one that stood out for me last week at a big open source event with 13,000+ attendees was NVIDIA just rolled out that their RDA driver, they were going to donate that to open source. On one level, you can see that as, hey, they're trying to be a good steward of this technology, and they're trying to sort of get people to leverage it and use it and do that in an open source way. The other way you can look at it is Jensen playing three-dimensional chess to lock people further in to the NVIDIA ecosystem and the NVIDIA way of doing things. So whilst that layer's been made open source, it's still further up the stack. And below, down at the GPU and silicon level, locks people into an NVIDIA play. So I think a smart move there. They've got a huge moat, 90% market share plus in GPU. But I'm also seeing the likes of AMD. We're seeing Intel start to come into this place. We're going to talk about IBM and its play for silicon and what it's doing with ARM. Then you've got the hyperscalers with Inferentia and Trainium from AWS, TPU coming from Google. I think if you wind this clock forward, it's going to be a rising tide raises all boats. Still see NVIDIA with a leadership position, but other players are going to bring and come through to have their fair share of the rising tide of all AI workloads.
All right, let's talk that IBM ARM partnership deal. What is it? The Z mainframe, bringing that ARM capability into that. Now, for those of us that still have, hey, memory's not as good as it used to be, but I still remember, I don't know how many quarters in a row of revenue declines and misses for IBM, and I can't get that out of my head. Is there a real growth story here, or is this just kind of playing defense in a company that's been under a lot of pressure over the last couple decades in the case of IBM?
So I think you're characterizing it right there, but if you look over the last year, this company in its last quarter posted double-digit growth. Easy for me to say. We haven't seen that in a while from IBM. The company is now radically different to where it was even 5 years ago. You look at the acquisition of Red Hat, you look at the acquisition of Confluent that's just closed recently, HashiCorp, Apptio. There's a whole raft of software portfolio that Rob Thomas has built and has acquired under sort of Arvind Krishna's leadership. But the announcement today is around the deal they've done with ARM. IBM's one of those three people who are driving intellectual property for me in the semiconductor space. They don't get the credit they deserve for this. They've got 2nm IP. They've got a huge team based out of Poughkeepsie, New York, who do semiconductor development. And the Telum 2 processor that ships in their mainframes is the fastest commercially available processor on the market at 5.5 gigahertz. This deal with ARM is interesting. Whilst IBM's been in that infrastructure space now for 60+ years with its own silicon on the mainframe, there's always been a challenge around the long tail of software support. So this announcement with ARM will effectively mean that they've got a dual processor architecture chip, so they'll be able to run the mainframe workloads on one processor, and then those more commercial and more longer tail of ecosystem software on the ARM processor. This is great news for IBM. The mainframe contributes a huge percentage still of IBM's software, and profit. So further growth in this space is going to be fantastic for the company. And I think just long-term bullish. We're probably going to have to wait a couple of years for this to manifest itself in systems. But I think a really strong statement of direction from the company. And I'm excited to see that come through, probably in the Z18 generation of processor and system.
Okay, before we let you go, I did want to get your thoughts quickly on CoreWeave, of course, securing that investment-grade GPU-backed financing, which is a huge, huge landmark, really a piece of the narrative for them. And so does this change at all how the street should think about some of these specialized AI cloud players versus more traditional hyperscalers?
Yeah, so CoreWeave's got a really fantastic model of the way they bucket out how they invest, so that you're not looking at investing holistically, although they don't look at investing holistically. What they're able to do is tag each contract to an investment vehicle within the company. So a really interesting model here. I think CoreWeave, they recently made it to $5 billion in revenue. That's the fastest ever for a hyperscale cloud provider. That's faster than Google, Azure, from Microsoft, from AWS. So the company's on a really strong trajectory. I think what we've got to see from them is a transition from GPU as a service, where they've done a fantastic job with regard to training workloads, supplying into some of those big hyperscalers, some of those frontier labs. We've got to see them transition from that, and we've got to see them make the transition to inference and be able to surround that AI workload with new capabilities. Enterprises, as they look to get inference workloads, are going to expect more than just a fractional part of a GPU. They're going to want to know that they can run other things on CoreWeave. I see great things from the company that they're making those strides, but that's going to be the test. Can they make that pivot from GPU as a service to a more enterprise and holistic provider of cloud services? Good signs yet, need to see more.
Okay, and I think that's actually a good way to leave it for a lot of these names. Not saying all of them, but we do still need to see like a prove it concept, I think, as far as the street is concerned. But so appreciate your time today and really great conversation. Stephen Dickens, CEO and Principal Analyst at Hyperframe Research. It's time now for Under 30, and we are talking another EV maker with fresh first quarter delivery numbers. That's Rivian. So joining us now is George Till, Senior Markets Correspondent for the network, to break down the move we're seeing today in Rivian shares. And I will say, looking at these numbers when they first released, George, Rivian's were not much of a standout. But what they've been able to do that Tesla hasn't is actually gain on the session today and reaction to these news. Yep. And so walk us through what clearly resonated a bit more with the street.
Yeah, I think it's a good point, Jay. I mean, first off, if you look at Tesla, it's down today because the delivery numbers have actually been decelerating over the past couple of years, and that's not been the case for Rivian. In fact, their delivery numbers are improving just modestly, but nonetheless, they're an improvement. And I think that's important in the context of the price action today, but also in the potential catalyst or movement for Rivian going forward. But they did deliver, at least for the quarter. They just finished their Q1 numbers around 10,400 units. This is roughly speaking. That was actually better than the expected delivery guidance. But what's more important is they reaffirmed the 2026 delivery numbers between 62 and 67,000 units. So one of the things we've talked about when we cover this company is the challenges that the business has had to cleanly produce up to about 50,000 or more vehicles in the past couple of years. It looks like they are essentially moving through that inflection point this year. And I think that's quite meaningful, considering, again, that market capitalization around $18.5 billion in sales last year, around $5.4 billion. Last year was also a very meaningful inflection point for gross margins, which are now positive. That had been really a tremendous challenge for the business because they were operating at a point where they couldn't even cover their cost of goods sold with negative gross margins, and now it's positive. It's still a small number, around 2.5% of sales, but it was positive last year. So the company seems to be moving in the right direction. Production volume is increasing, prices are firm, demand is there. And again, going forward, they're still expecting growth in terms of sales by about 35% between this year and next.
Oh, it's already started.
But the challenge still lies in that they're losing quite a bit of money. Again, we talk about that a lot because it's meaningful in essence of how the stock makes this progression forward and then a step back. But, looking at the numbers, last year, 5.4 billion in sales, they lost about $3.6 billion.
It was
So
going
for
to
what
go
it's
to
worth,
20,
they're still not expecting to be
30,
profitable this year or
40.
next. But
Mikey,
revenue growth is really going to be
it's
the
at a
driver
buck.
for price action. I
Now's
suggest
the
in this
time to
name,
pump it.
and that will come down from volume delivery and production scale, which they're improving.
George, building on that, I know you're a big believer in
Mikey got
confirmation through that
7,000
price
followers.
action. Let's talk about the price
Pumping
action because,
AMC.
look, I know that, hey, the debut, the premium paid, it's a long ways
And it
away. I'm
dropped
not
$5
discounting
on
that. But if you go back 3 years from today, the stock's up something like 18%. You can
GME
argue
as
that's a
well.
pretty neutral move
Mikey
given
says
the
it's gonna
implied
go to
volatility the stock
45
trades with.
3 years
But
ago.
it's a positive
or a
number.
year ago.
It's a positive number
He's
over the
still
last
pumping it.
year. It's a positive number over the last 6 months. That's not the story we could tell for Rivian for a lot of its history. Is it enough to say that there's starting to be real belief in this company?
Well, so, I can't provide recommendations, you know that. But look,
I stick with my
delivery numbers are
25, 27
improving,
to
revenue's
break.
improving, margins are improving. Those are 3 improving variables. That's going to be a catalyst
Or
for
20
stock
bucks
price
to get in.
the long run.
He'd
The
scalp
short
it
run challenge
couple
lies
bucks
in the fact that the
on
company's still
GameStop.
losing a lot of money, and that's going to add pressure to the shares. So you have to counterbalance the positive momentum in revenues,
Rivian again.
deliveries, and margins with, again, the negative aspect of the share issuances to finance that deficit or that loss. But again, I suggest what will happen here, may happen here. I'd say, well, I won't say the word will, is that you got to look quarter to quarter. The weekly charts are improving. Daily charts, you see the run up and then the sell off, and that comes from secondary offerings and dilution, and that's to be expected. What you'd probably be looking for is on a daily chart a gap higher, a gap on strong volume, and that's probably going to come from a
that's a
major
good
catalyst
trick.
on an earnings call. So that's what you want to be looking for a gap and continuation to which we can say that it's a meaningful move to the upside, not
I've never
necessarily
thought about
these
that
ups and downs that we've seen over the past few
I've
years.
never thought about
I don't know if
that.
that answers your questions, but this is just something
A
I'm
gap up
considering looking
with a
at
volume
for
push.
Rivian going forward, because what we are seeing is improvement versus other companies like Lucid or even Ocean that went under. This company looks like they're going to make it, but again, there are going to be some roadblocks and some bumps in the way. But you have to be
Biden,
mindful of
remember,
that and
printed
some of the
billions of
financial
dollars
challenges
for this
relative
company.
to the production challenges, which are improving.
The money's going to
I
run
think
out.
that the street's definitely
If they're
agreeing
only
with you
making
here because, again, we're
10,000
seeing
cars
an
a quarter.
outperformance from Rivian today despite the overall market being lower. I mean, Tesla being lower,
And the
these numbers
projection's
being
lower
fairly
than it was
mixed,
last
but
year, and they're
I think there's a
pumping the
lot of
stock.
optimism tied to the year ahead for Rivian
They-
shares. So
Wall Street
we will
knows
continue to
that
watch this
Biden
one, but appreciate
poured
it, George Taylor, for
billions
all of that breakdown,
in
of course,
Rivian.
to close out our show on this
But
Thursday.
they're only
Now,
making
checking in really quickly in these
10,000
markets,
cars a
Alex, we
quarter.
have not seen any major real improvement from where we started the show. Actually, we're
They're gonna
looking
run
pretty
out
much
of money.
unchanged from about an hour ago.
Then
Hey,
they're going to,
2
like you
hours
said,
to
have
go. A
offerings and
lot can
splits.
change in those 2 hours.
keep raising money.
Wouldn't be surprised with anything at this point, to be honest with you.
I know, just watch the
Personally, I
headlines,
don't
watch
like
crude oil, then you'll know what the
a
overall
company
market
that
seemingly is doing.
begs
But
for
we
money
will leave it there.
from
Reminder, we
my
do get
tax
some
money.
unemployment data
I don't
tomorrow
feel like I
morning,
should
even though
be
markets
paying for
are
any of
closed, of
this.
course, in observation with the holiday. So appreciate you all
Failed
for tuning in
corporation.
this week. We do have the watch list coming up next.
They blew a lot of money. A lot. They put 100 some million. And I heard this last night at this work conference they have in Canada.
Schwab Bank
The one guy
Investor
said,
Checking, the checking account
electric
built
school
for
buses.
investors,
We
named
need them
highest in
buses,
client
electric
satisfaction
buses.
by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning
Biden
features of our
administration
checking
gave
account,
some
plus
company
cash
up
management
in Canada
solutions,
$100
all
million
designed for investors
and
like
went
you, with
bankrupt.
unlimited
They
ATM
blew the
fee
money.
rebates
They
for
didn't even
cash
use it.
withdrawals
They buy
worldwide,
nothing.
no overdraft fees, and
That's just
enhanced
100
security
million.
features to keep your money safe. Also, because your
We're
investor
talking about
checking account
billions
is
that
linked to your
have
Schwab
been
One brokerage
fraudulently
account, you can manage
handed
your
out.
checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account
And
is
this was
available
as
in seconds.
he
That
already
means you
lost the
can stop
presidency-
waiting and
presidency
start
to
investing
Trump,
in stocks,
and he still gave
bonds,
him $8
money
billion
market funds, and more. Get
right
more
before he
with
left
Schwab
office.
Bank Investor Checking, the checking account
I think it's one
built
of the
for
underest-minded
investors.
things I've ever seen. I've never seen that kind of spending after you were voted out. You were voted
Welcome
out for
to
a
Schwab
reason.
Network.
where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've
Not
got
to
you
keep
covered.
spending it, wasting our money.
Get inside the minds
So I
of
have
pro
negative
traders.
vibes
My
on
point is
Rivian.
that they're
That's just the
getting
way it's going to be.
a higher rate of
And
change in
Tesla's the
sales
only
based on
one.
their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute
See
by
how much
minute.
government did
With
get
shows
rid of
built
them.
for
I know it's
action,
$8
we
billion.
break it all down in real time
But
with
not
speed,
altogether.
accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights,
You got to keep the news.
actionable
You
data,
got to know what
veteran
I've
traders,
been trying to say.
and
The
trusted
news.
financial
You got to
journalists, streaming
determine
live and on demand.
what's
Schwab
good news
Network,
and what's bad
streaming
news.
24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come
$6
across
billion
the
in
entire
principal.
world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want
$6
to
billion in
invest
a
with
loan, $6
a company
billion in
that can help me
principal
give
loan.
my family a happy financial future.
Stay connected to what moves
$6.57
markets.
billion loan to
Download the
Rivian
Schwab
in
Network app and
January of
stream live coverage
2025.
wherever you are.
And that's, yeah. It's not going to be a federal loan. None of these are loans. Biden administration to loan $6.6 billion. Will Rivian ever pay back the billions to the U.S. government? I say no. How long is this video?
Shop Aldi
Good
first
afternoon. Welcome
and
to the
cover
Watch
your
List.
week for
I'm
less.
Nicole Tettelady.
It's an
2
Aldi thing.
p.m. Eastern Time. We're coming to you live from the floor
Let's
of the New
go
York
for a
Stock
walk.
Exchange in the corner of Wall and Broad, and we've already
Let's go
seen
for a
some
ride.
wild back and forth action.
Let's
where
go the distance. Shop in store and online for 0% financing and instant rebates on select steel mowers.
Rivian just got given $6.6 billion. Now, guys, people have complained about Tesla getting subsidies from the US government in its early days. But I can tell you right now, Tesla never got anything close to these numbers. And Tesla has paid back their loans. What do you think the chances are that Rivian will pay back $6.6 billion with interest? I'd say around about 0. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching The Electric Viking. Great to have you with us. Now, knowing that Rivian does have a high probability of going bankrupt, I'd still love to own one of their cars. I mean, honestly, the R1S, the R1T, they're nice. They are nice. If you see them in person, they're very nice cars.
They do kind of.
My dad would love it.
They're looking.
Rivian, just so you know, my dad would love an R1T. He'd love it. He's told me many times. So, yeah. Hey, they're great
Kind of
cars.
cinnamon.
Let's be honest, guys. They're not selling enough. They're not. They're an America-only company. They sell it only to Americans. The market is clearly not big enough for them, and their sales are just putrid. Now, there's probably going to be some
Putrid.
videos to this. The Electric Viking said Rivian's going to go back.
They are. The
Just
sales are
honest,
putrid.
Do you really think this isn't a high probable chance of happening? I mean, if Ford and GM are going to struggle to stay around over the next 10 years, what chance does Rivian have? Let's be honest.
General Motors has had 3 bailouts. Obama wrote a big old fat check to GM to keep them in business. And they came from the Highway Repair Act. I can't remember the numbers, but it was a huge check. General Motors was at 50 cents a share back during Obama. Things were a lot worse, I'm telling you. This is nothing. I've seen stocks go from 80 to $100 down to bucks. And that's not the only time I've ever seen that happen. But it was real bad back during the Obama years. And I blame the housing crisis, but I also blame his rhetoric. It just added fuel to the fire. And then his wars, his red lines, I mean, it's just pathetic.
These guys are racking up enormous debts. They are. And their sales aren't growing. I mean, really, their sales aren't growing. And yet, they've just been given a $6.6 billion.
Who can afford a $60,000 car?
Rivian's
$80,000 car.
got a $6.6 billion lifeline thanks to taxpayers. Now, if Rivian was potentially going to sell, say, 1 million cars a year, right? Something like Mazda numbers. That's what Mazda does. About 1 million cars a year. Then, that would be legit. They'd have a real potential future. But honestly, are Rivian going to sell? Is, 8% of the entire US car market going to be Rivian? Is that what's going to happen? Because Rivian's really only selling cars to Americans. It doesn't have any real serious plans on doing anything other than that. I can't really see 8% of the entire US car market being a Rivian vehicle. So Rivian really needs that. And when I say they need that, you can see many CEOs have said this, many automotive executives have said this. You've got to sell at least 500,000 of one model, right? When it comes to an EV to break even. That's an EV. Now that'll change in future. Batteries become cheaper and cheaper. But Rivian have 2 models of vehicle, right? And their sales are still very small. If they add the R2 and the R3 to those numbers, would it be enough to justify this enormous factory? I don't think so. Anyhow, the Department of Energy, their loans program office has granted Rivian commitment for a loan of $6.6 billion US. The money will be used for the development and construction of an electric vehicle plant in Stanton Springs, Georgia. The government said if finalised, the loan will support construction of...
I bet you it lined the CEO's pockets. Wonder how much the CEO makes at Rivian. And they don't make no money. They only build 10,000 cars a quarter. So, Rivian... I'm going to guess 10 million a year. Salary of $2 million a year, and the guy's worth $4.6 billion, and he's begging us for money. Performance-based pay package is worth more than $4.6 billion. So we give them $6.7 billion. These guys are coming out and saying it's doing better than Tesla. It's only making 10,000 cars a quarter. He met his quota. He's going to get $4.6 billion. It's a scam. Rivian CEO R.J. Scarrings has a new performance-based pay package of potential worth of $4.6 billion. That alone would make me not want to invest in that company.
More about that.
Sure, thank you for having me. I think as you guys have been reporting all morning, the biggest news really is oil we started at $110 a barrel to right now $111 a barrel. That's a strikingly big move. And the second piece of it is what's happening with Europe, where diesel futures are sitting at over $200 for the first time since 2022, and 10-year Treasury, US Treasury at 430. So that is not really noise. That is the market telling you about what it perceived the president's address last night. While he did say that the Strait of Hormuz will open slowly, but I don't think the market believes that, especially when the strait has been closed for close to a month now. And that sort of sets the context for everything.
I'm looking at the charts here, and yesterday the low was $96 as we came in today. $97 for oil, and the high was 113, and we're at 111. So we've had a pretty big candle from even yesterday to today. So I do want to note that we're up 11.5% on West Texas today. Tell me a little bit about the oil shock. How does it sort of trickle through, and does it end in a few weeks when the war ends, if that happens?
Sure, and if you believe, being a fixed income portfolio manager, really, we look to the Fed for most of our guidance. So Jerome Powell spoke at Harvard earlier this week, and I think what he said really captures, the essence of what we're thinking about the disruption in the oil market. So he's saying the short end is not anchored. So he's saying that the long end expectations are holding for now. Oil at $111, as you pointed out, is a supply shock, and it's moving through all the input cost. So diesel prices, delivery cost, manufacturing supply chain. If you look at ISM prices paid index, we jumped to 78.3 points. Now, this is not a rounding error. This is broad-based price pressure. And the United States, for right now, is not even buying oil from the Persian Gulf directly. But what the United States is buying is goods from Asian manufacturers in Korea. So what's of note is the Korean government last night urging its citizens to conserve every drop of oil. And that is how shock transmits in real time.
So let's talk about the outlook going forward. I mean, a lot of folks are watching for the jobs report. Tomorrow, the estimates are for 65,000 non-farm payrolls and unemployment of 4.4%. What would you be looking for in that? Do you feel that the job growth is slowing? Are you worried about jobs or not so much? Maybe it'll impress folks.
So the jobs part of the Fed mandate has become increasingly complex and difficult. So earlier this week, ADP numbers came out, right? ADP came out to 62,000 private jobs added in March. It beat expectation 2 consecutive months in a row. But here's the problem. The story on employment right now is not whether 62,000 or non-farm payroll coming out tomorrow at 65,000 is good or bad. I think as a market and with regards to Fed too, we don't know any longer what good or bad means. For decades, the rule was simple: 100,000 jobs added per month to keep pace with with population growth. Below that, unemployment rises. Above that, it falls. We had 62,000 jobs in ADP growth. That does look weak if you're comparing it to that 100,000 number. But Chair Powell said something really interesting in his last press conference. He said, this changes the entire math. He says the break even, which is the number of jobs needed just to hold unemployment steady, may now be close to 0 or even negative. And that is because the working age population is barely growing. So demographics have completely changed the equation. So For tomorrow, I guess that's the ambiguity. An employment mandate that is blurry at the exact time when inflation and all that, conversations we were just having about oil, that inflation piece is flashing red, and there's blurriness with the employment data. So for tomorrow, sure, it's not the headline number that is, of pivotal importance here. It is the composition of that number. If non-healthcare jobs fall again, while healthcare is carrying the entire number, I think that points to an underlying economy that is softer than it actually is.
As portfolio manager, what are some moves you're making? Could you be specific?
Sure. I think with all the volatility that is going on the fixed income side, the front end of the curve is deeply anchored, right, to the Fed, because Powell on Monday at Harvard said, hey, short term, it is unanchored, but long term, this oil shock should pass. So the Fed is not moving. That is clear. And the possibility of a rate hike in April is essentially zero. So I think this is not the moment to reach for yield by extending duration. It is the moment to be precise about where you sit on the curve. We are focusing on the belly of the curve, that 5-year range, which is the most attractive risk-adjusted point in the curve right now.
Okay. Understood. Shweta Singh, thank you. Portfolio manager, Citi Different Investments. Thank you so much. Appreciate it. Coming up, Options Corner, Rick Ducal will join us and highlight unusual options activity from the day and how investors are looking to trade on recent news. Nike, Royal Caribbean, Clorox, they have down arrows. They're all down 2%. We got some details. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investing Webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual trades that we're seeing throughout the day. Rick Ducat is with us, lead market technician here on Schwab Network. And look, Nike's had a hard time. Even the CEO said he's tired of talking about the turnaround of this company. And the sell-off has happened, but you found a bullish trade that you're going to share with us. Looking forward to hearing more about that.
Yeah, I guess at least someone out there has some optimism about this much beleaguered company. As you said, I won't kind of rehash everything here, but suffice to say, a very difficult recent earnings event here for this company, and the turnaround does seem to be struggling more of these efforts to clean up the organizational structure, trim things down, and refocus on the products as athletic gear rather than, a lifestyle brand is kind of what things seem to be geared toward. But specifically seeing a very weak performance in China for this brand, where kind of echoing the general themes I've seen across various other brands and products here that are foreign to that particular country, kind of falling out of favor here with consumers there. Also, kind of negative analyst coverage today. Price target cuts from UBS, 54 from 58. They kept their neutral rating. D.A. Davidson cut to 46 from 72, so pretty big haircut there. They also reduced their rating from to neutral from buy. Also saw price target cuts from Citigroup and BNP Paribas as well in recent days here. Now, the trading question, it's kind of difficult to describe. It's kind of a complex trade here, but I'll do my best to make it make sense for everyone here. The trading question is plus 79,200 May 15th, 45 strike calls at a 167 average debit. At the same time, it's paired with minus 91,730 May 15th, 42.5 puts at a 154 credit here. So basically what this all boils down to is this is a bullish risk reversal spread where the trader was buying long calls and selling puts at the same time here to give us this risk profile where you have that flat period where the trade was done at a credit here for about $912,000 or so. That gives you a bit of a cushion here if the price does start to decline. There's that rather long flat area where the trader would simply just keep the credit they received. Once you do start getting a bit more toward the downside here below that 42.40 level, that's where things could start to go awry there. The max loss in this case would be $388 million roughly, so very significant. That would be if the stock were to go to zero, though, that because of the naked short puts there. Now, on the flip side, though, unlimited potential profits because we also have long calls here without a corresponding short call to make it into a vertical here. On the flip side, then, if we were to get a 3% move higher, then we would start to the trader would start to gain even more money there. Expected move potentially for this time horizon would be plus or minus 11% or so. So certainly either outcome could be within the range of possibilities here based on that potential projection. The trade volume was also quite significant here. It totaled out to 171,000 contracts almost there against the total trading volume. That was about 37% of all the trades today. So a very outsized trade in this name here. The sizzle, which is the options volume activity versus the 5-day moving average, also came in at 3.2. So a very elevated day for a company that's seen some rather unfortunate headlines in the past couple sessions.
Yeah, and look, the platform, the whole area is very competitive. They have Hoka and On Holdings. I mean, it's really a tough competitive landscape when you think about these athletic shoes coupled with the fact that people may be pinching their purse. But you found the bullish trade, and I love how you shared that with us. Up next, we look at the cruise lines, and we turn our attention over to Royal Caribbean. Tell us about that.
Right. So cruise ships and other kind of travel and leisure face a really interesting dilemma recently here. So we've heard for so long that travel demand was strong and getting stronger here. They had kind of this pent-up, desire for these travel experiences after the dark days of COVID here. But now these companies face a very difficult situation, as I said, with wild fluctuations in the price of oil. If you've been paying any attention at all to the market today, you know that there's been major disruptions and volatility in oil specifically today. But obviously, cruise lines and airlines, all these kinds of this whole sector in general uses a very, very large amount of oil. So this is a very significant price pressure for them. So now we have this obvious problem where we kind of have to wonder where the breaking point will come in as consumers weigh their desire for the travel experiences versus these significantly rising costs here. We did see one analyst price target cut from Citigroup today, 377 from 398, while keeping their buy rating. So still, quite far beyond current price activity here, but moderated somewhat. Now, the trade that I found today, and again, these are all opening trades. All these trades that we talk about in this segment, I try to find are typically opening trades here, where the volume exceeds the open interest for that specific option. The trading question, plus 2,000, May 15th, 290 strike calls at an $18 debit here. So a bullish opening play here, 43 days out to expiration. Again, like our last trade, potentially having unlimited max profit here, as is the case with all long calls. Max loss is our debit paid, which is about $3.6 million. So quite a large dollar amount here in this particular name here. The expected move during this time frame is about plus or minus 17.1% here. The break even is a bit further to the upside. It's a bit of a climb here, coming in about $308, so 12.8% roughly to the upside there. So they would need a bit of a climb to get to that point here, but still quite a hefty debit paid for these particular options, banking on some rather rapid climbing in price here, perhaps assuming the Iran situation will start to calm down and oil prices will moderate somewhat. We don't really know, just kind of speculating there. The trade, as it stands compared to the rest of the market here, this 2,000 lot trade against the total volume of the day, this was about 9.3% of the total market. The sizzle was also quite elevated, 2.6 times the 5-day moving average of options volume.
You know, and we've seen the resiliency of the consumer. I mean, they still are booking all these trips and such. Last but not least, what about CLX Clorox, where you found a bearish trade that you'll share with us?
Sure. Many of us are probably pretty familiar with Clorox, for household cleaning products like Clorox bleach, Glad trash bags, Pine Sol, Liquid Plumber, Tilex, all kinds of stuff like that. But also various other household and lifestyle products, the Burt's Bees brand of personal care products like, chapstick and stuff like that, Kingsford Charcoal, and Hidden Valley Ranch, some of the more popular products here. But they yesterday completed their acquisition of a company called Gojo. Now, Gojo, perhaps not well known to everyone as well as Clorox is, but probably most people will recognize the Purell hand sanitizer brand as one of their main products there. More industrially geared folks probably are very familiar with Gojo hand cleaner, though. It's made to be a kind of a heavy-duty solvent for cleaning your hands if you get oil or grease or whatever on them. I personally love the smell of it, not a recommendation. But it's been kind of a funny, winding road for the Gojo brand and Purell as well. Gojo made Purell in 1988. They sold it to Pfizer in 2004, who then sold it to Johnson & Johnson in 2006, who then sold it back to Gojo in 2010, and now Clorox has acquired Gojo, so they have kind of completed this winding road for now, it seems here. Mixed analyst activity. TD Cowen raised their price target to 111 from 98 today. They kept their hold rating. Meanwhile, Deutsche Bank lowered their target to 101 from 112, keeping their hold rating as well. However, I guess someone out there doesn't love the smell of Gojo as much as I do, though, because this is a pretty darn big opening bearish trade here. Plus 3,000, May 15th, 100 strike puts at a 466 average debit. This trade was done in two separate lots here to give us that average debit there. A bearish play, 43 days out once again. The debit paid is the max loss of about $1.39 million or so. Max profit would be $28.6 million if it were to go all the way to zero there. So the expected move in this case, plus or minus 10.6%. The
366
break even here, 95.34, is about 6.3% to the downside in this case here. So this would be looking for some substantial downside movement here. This trade also stuck out kind of the most in terms of its size relative to the typical market. The volume of 3,000 versus today's total volume, which was about 7,800 when I checked, would make this trade about 38% of the total here. The sizzle about 3 times the typical average that we've seen in recent days.
And as you bring up all these names, I mean, I really tie in oil because as you're moving the products, everything becomes more expensive just to move Clorox from point A to point B. You talked about the cruise lines. Now there's talk that, you know, cruise lines will have the ability to tack on a fuel surcharge even after you've booked. We already heard from different companies tacking on fuel surcharges already. So we'll see how it all plays out as oil is still really high and ties into some of those names. Rick Ducat, great to see you. Thank you always. Options Corner there. Appreciate it, Rick. Coming up, the CEO of Brame Limited joins us, ringing the closing bell. The NASDAQ. We'll be right back. Big AI.
Right here. Just a little bit above it.
Kick off the morning with the data and the decisions moving markets.
I got these
Morning
guys
Trade
figured out
Live
outside.
breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
RCL.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Oh, my coffee.
Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
This room today.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We have a few movers for you in the market right now. Blue Owl Capital hitting new all-time lows after the
I think I've had the mic on today. I just shut it off.
Wingstop rallying today after analysts at Raymond James and Piper Sandler upgrading the stock. Raymond James now has a strong buy rating on Wingstop. Piper Sandler has moved to overweight. Both the analysts point to an attractive risk reward for Wingstop after recent weakness. Shares opened at a 3-year low this morning. All right, let's welcome in our next guest, the Chief Executive Officer of Brain Limited. And we're speaking with Nataraj Balasubramanian, live from the NASDAQ. And I'm so glad you're with us. I call you Raj after our first reference. And congratulations. I know you're ringing the closing bell at the NASDAQ. This was listed in February, a direct listing. Tell us a little bit about the company.
Oh, Nicole, great to meet you. Brain uses cutting-edge technologies like AI and machine learning and provides actionable intelligence across industry verticals, agriculture, customer experience, and
that looks like that guy's son.
So those are the three areas that we focus on. We are industry agnostic.
It is. It looks just.
We recently listed.
Unless you got a haircut.
On February 12th, we are direct listing at the NASDAQ. And we are so looking forward to kind of telling you more about the company.
Yeah, I saw that there's a lot of automation that happens with the AI platform, everything from, on the home side of things, I saw tenant screening, verification of identification, credit checks, even inspections and maintenance workflows, how they need to be updated, and the AI takes care of that, even e-signatures, things like that. Are you finding that that is extremely helpful for companies?
Yeah, absolutely. I can kind of give you a little bit of a quick rundown on the three verticals and what we do.
Sounds just like him.
Which is very interesting.
He's not happy today.
We use satellite imagery and drone imagery, thousands of them, stitch them together into an orthomosaic.
Coffee?
And then run our proprietary algorithms to determine problems related to water, fertilizer, disease, much before you can spot it with the naked eye, and provide with actionable intelligence to the farmers. So that's a very interesting space. And then we structure our contracts in such a way that we own the data, and so we do a lot of predictive modeling and provide insurance products and financial products as well. So farmers are able to get insurance and financing much easier than traditionally what it is. And on the property technology side, we do something very interesting. We do AI-powered utility comparison. So we basically, when somebody is moving from place A to place B, you don't have to pick up the phone and call up all your different vendors to switch services. You could just put your zip code of where you're currently in and the zip code you're moving to, and then it'll populate all the services that are there.
Sorry, guy. Remember 352, your alert set for Tesla. I have 346, but 349.50. And I moved it up above the 150 because they keep talking about the 350 area. So that's what I'm going to be looking for. So I've pushed my alert above the 350. That's only another $8. Man, we're at so many good supports right now. We have so many great supports. You gotta zoom out and look at these charts. See here, look at this. I mean, here's their holy grail. So here's Google. And I just got to really emphasize how good Trump's been this year. I mean, you think everything's at the end of the world. So we have Google in 1 year from 140 all the way to 300% gain, 250% gain. In a year. And we pulled back and hit the 200 EMA for a perfect buy signal. I mean, this is custom. And they're using the excuse. All that time they've been bitching about Trump, the market's been running. All of them. Everybody. $140 all the way up to $349 in a year. huge run. And all it did was pull back to the 200. I talk about it every single day for years. The 200 EMA and SMA are solid supports. So you got to zoom out to the daily and the weekly and the monthly and the yearly. And if you zoom out, it's easier to chart. It's not as busy. Meta triple bottom. One of them, 2 bits, 3B, triple bottom. Real clean, called it out. It's up $50 in 3 days, 2 days, 3 days. Look at this. So you're down here at a triple bottom. We have an inside doji, long leg, very bullish. 3 black crows, doji, boom, to my resistance line, right to the penny when I charted this up, which was the bottom of these here candlesticks. So I'm going to the weekly. And I'm looking for I love my watch list. There's a couple on here that I can't stand. Home Depot. Why did I have that support there? Not sure why I got that support there. Something about the SMA and EMA. I don't know. I could be old. I don't know how I got that. CCL looks too high to me. Tesla's at 360. Morgan Stanley. You probably brought it to that. Head and Shoulders. Head and Shoulders and a triple bottom. So the Head and Shoulders has to hold on Amazon. It's nearly down $40. So, another lesson, when I've had a good day like this, only in a couple of trades, 3 trades today, and I have a good day like I did, or money-wise, I want to trade less on the next day. Every good day sometimes follows a bad day. Every bad day somehow is always a good day. With my trading, almost always.
Soft last time and still on that, and watching the trend of where these are headed because of the balance sheets and the strong fund.
When I retire from this, I'll trade probably just the first hour and a half every day, if that, because I know I make more money in that period than I do later as things slow down. And I've trained myself for the beach trade for 3 years to get that job done. And I talk about the same patterns every day, same exact patterns without fear. As long as that pattern shows up, and there's some very few, but some days where nothing works, no matter how hard you try. I'm exhausted. I really gave a lot today, probably more than I should have. Makes me want to just kind of be done with it. Nine more minutes to power hour.
industries that are more sensitive to oil prices, especially as gas prices are rising for consumers. Things like accommodation and food services might be particularly at risk, as well as retail sales. So it'll be, really important to kind of zoom in and look at some of those more granular changes, whether the headline number comes in with consensus or not. I think the other side of the equation is really going to be looking at the labor force dynamics and the changes to the labor pool as we continue to see immigration pulling back and the number of available workers shrinking. Understanding how unemployed workers are staying engaged or exiting the market entirely is really going to point to future challenges as hiring picks back up. If labor market tightness is going to become more of a significant issue for businesses.
We hit so many supports.
Yeah, we know the graduates are going to have a hard time getting a job this year. I'm going to ask you what kind of jobs they should look for that maybe will give them a chance to give them a go to get a job. John, a final thought here on the big picture. You are worried about stagflation. Anything else that we should be watching?
Nicole, we need to pay attention for cyclical job growth away from education and healthcare, period. We have seen no cyclical job growth for at least a year, which is staggering to carry on with a trend like that. So any non-cyclical performances will be very...
I had two businesses, and I never hired over what I had to. Wokeism, I know, hired a lot of extra people because of woke. Government said you had to do it. And that's another form of racism. You got to hire a certain color of skin and a certain gender. She, he, she. I just found a calculator on my computer for the first time. Not on the qualifications of the person. They probably got rid of some of that trash. So Walmart, 118 to 125, we're getting at resistance. We're at a head and shoulders, and we got resistance. So we're close. Probably get a double top or a triple top. We got a triple top. Yeah, you're already at the triple top, quad top, if you want to count wicks. Count another 5, we'll take a nosedive. So you got a body, wick, wick, 5. Could be a pullback. I wouldn't take it here, not at resistance. And we've got another watch list I can go through. Taking forever. gold. We're the yearly on SPY. Look at the SPY. From 1990, then the Obama crash, the George Bush crash. No, that was the Obama. That was 9/11. And that was Obama. Double bottom. Why didn't I see that? If I'd have pulled up the yearly chart, I'd have got in that trade. Now that I know what I know now, then from 2009, 2009, we started printing. Print. Then we had the Biden crash. It's that Biden crash right there. It's the biggest candle that we've had all that period. And this was bad. Well, I wish I'd have seen that when I wasn't trading there, but 3 black crows, breakout, pull back, double bottom, boom. After I look at this and I say, man, SPY 477. After looking at that, yearly candlesticks. Didn't look like it. Big old hammer. Hammer, hammer. 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 Hammer, hammer, hammer. Inverted hammer. QXO. Wow, QXO's had a, yeah, that's got to be split. Dell's had a good breakout. Past couple of days, snake, breakout, pullback. Merck. Alligator hustle bullish. And its upgrades. Not too many upgrades. KRRO and TH. Ooh, there's a gap. A biggin. TH. Stock market today. War with Iran, Micron Technologies. Trump re-escalates. Blow them off the maps, what I say. I hate to say it. And they torture and beat women.
Seed funds into
the garlic Parmesan wings. I'm a big fan of the cheese fries. Dan Deming called out Casey's General Store Pizza earlier, so I figure why not?
We're hungry here.
So we're hungry here at Schwab Network. Thanks so much to Jenny Horn. Go enjoy your long weekend, Jenny, and thanks for the breakdown there. Co-host of Next Gen Investing. But I do want to check back in with Sam, see if she's ever had Wingstop, and also take a look at what's coming up in the show.
No, that was too in the weeds for me. I'll stick with my Vegemite on toast. Thanks very much for that, Marley. Well, coming up next, we will discuss this week's volatility and how you, as the investor, should be staying patient during uncertain times. Market on Close will be right back.
Chicken's good for you, baby. So we were down, what, 500 or 600 points this morning?
Hey,
now we're only down 80 something.
The market moves, and Schwab is here to help you move with it.
This is the most rigged market I've ever seen in my life. We were way overbought. For months they were telling us that we were way overbought. They couldn't do it. They couldn't use the fear of recession or anything like that. They couldn't understand why we kept going up and up and up and up under Trump. So they tried to use anything they could to give fear to the market and to the traders. They've been calling a pullback for months, ever since he took office, and all we did was go up, 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 and had huge runs, and they didn't let off. And there's continuation. They tried to find anything and everything. I'm not biased. I mean, I love Trump. I like what he's done for my life. I did pretty good under his watch with no wars his first term. Saved money. And then when Biden came along, a 30% increase in my cost of goods, I didn't know what to do. Either quit but I still made money in the market, so it kept me busy making money that way. If it wasn't for the market, I don't know what I'd have been doing. If I worked for a factory, I might would have got laid off or COVID or shut down. Mandatory mandate. I know some people that filed a petition. The IRS was one of them. They were told to take shots, but also they were given a way out where they didn't have to. But it was mandatory for them to do it. But I know a couple of people that did not take the shot. They're so glad they didn't. I didn't want to take it. I was psyched into it by fear. And then I'd work around, I clean germs all the time. And I'd go into places that did have COVID. I had to be tested. Finally, I just said, I'm going to take the shot. And I did it because I was so feared into it, like a king would do under the Biden regime. I took 2 shots, and I felt like shit both times I took them. I said, I ain't taking this crap no more. It's just like when you go eat something, you smell it, it doesn't smell good. Or you take your first bite and you go, ugh. But you got to eat that beef liver. You need that vitamin D. And when stocks are up 500 or 600%, 1,000%, you really got to ask yourself, go back and zoom out and look how much of a run these stocks have had. $400 or 500%, and then we pull back 10%, and everybody's having a heart attack. still very bullish. The IWM. And if you'd have took this trade with me the other day, boom. Clean, very clean. Very clean. If we go below that line, I start to feel bearishness, and I'll start calling the 100 at 229. But now you're at a shoulder line, so you've hit resistance. We could go sideways for a couple months as long as we stay above that shoulder line of that head and shoulders. Or we come back and we hit the 100 where that wick is. And that hits that wick and that wick. Some days you don't need to trade. You need to do exactly what I'm doing. Looking for setups. And I had such a great day yesterday and another good one today. Right out of the bat. Right, because I come in here, I looked at the charts and I said, I'm going to jump in these calls because we had a big pullback. Randy, do you like buying stocks at breakouts? When we wake up in the morning and the stock's up? Or would you rather buy them on a pullback after a good breakout? I mean, to me, this was a no-brainer this morning. Oil prices soar. Last time oil prices soared, so did the EV car sector. Oil prices soared to 112, tested tumbles to a 7-month low. Doesn't make any sense. But under the Biden regime, when oil was up at 120 a barrel for months, the EV sector was moving. I wish I'd have held them. That'd made 15 grand today. The SPYs. 30 contracts. And then about another 20. Measured, I mean, it hit my support this morning. I was so jolly how I pre-marketed this chart. If you go back, does anybody look at my morning charts at all in the SPY? What's this last metal shit? What have I done? Fuck. Push some game thing over here on Discord. I thought I put a chart in here. So this was this morning. Pay real close attention. Snake, after hours in pre-market, breakout, double top, pull back, higher low at 5:30 in the morning. Snake, breakout, pull back, boom. Snake, breakout, pull back, and we're boom. Snake, breakout, pull back, boom. $20-day chart. Left shoulder, two-headed snake, neckline, support, resistance, right there. Drew it all the way across. Channel of support from that pivot right there to that pivot right there. I drew it all the way across. And then my resistance level. $655.21 this morning at 5:30. So we come in here on the 1 hour time frame. We have a tweezer top. Use your 1 hour time frame in the morning. We had three white soldiers with a tweezer top. And that's a resistance. That's a guaranteed pullback. The wick's bigger on the top of that candle. So you had three white soldiers with a tweezer top. Mandatory, get out of the trade. I can't tell you how many times I said three white soldiers, get out of the trade. You'll be the first one out. So I clean it up. I'm going to do a video tomorrow. I'm going to go to the monthly candlesticks, 15-year. And we're above the 21 and we're below the 9. We got to bounce above the 9 to be bullish on the monthly. And we got to be vigilant, and if it does pull back at 610, I'll take the trade. We're just up a lot. I mean, I cashed everything in at the top. And we're only down 10%. Only so far. If we get hit, we will take a dip, one like you haven't seen. So you just got to scalp. There'll be a day here soon where you can just get in stocks and not worry about nothing. For right now, you just got to be very diligent. It's a scalping market. There's no way about it. And we're at support still. I mean, the 2023, we hit the 21. 2025, we hit the 21. And in 2026, we came close to hitting the 21. So I'm still bullish, but especially if I break above the 9 on the monthly. But right now, that 9 is going to be your resistance level on the monthly. Let's put in RITM on the monthly. Randy, up. RITM. So we had tweezer bottom, and we almost hit that on that pullback. Resistance. Now look at here for 1, 2, 3, 4, 5, 6 year resistance. At 1102. Okay, well, I've done more flickering today looking for a dip that I've done in a long time and I can't find them. I probably flipped over 5x today, just looking for a good trade. Someone was talking about this one yesterday. You're right. White House schedules meeting on cannabis products enforcement policy for next week. Marijuana moment. Oh. I promise I'll never get on another tangent.
The U.S. is more insulated from some of these impacts. That's cold comfort, but that's the reality.
I'm just sick of the
so
hypocrisy.
I think you just have to say it's highly uncertain. And it's times like this that we can try to speak like central bankers, the plain-speaking ones, not the ones that obfuscate. And so I would say, you have to say that uncertainty is one of the mantras of the day. And that means there's a range of outcomes, and that's the challenge the Fed is working.
Because I've just seen so many days a whole lot worse than what we're in right now. Seen so many of them. Trading stocks and watching the reaction of the market. America's very resilient. Almost every time we've had some kind of interference or disaster or being threatened with nukes or going into Libya and all them wars that happened under the Biden regime and the Clinton and the Obama regime, a lot of wars went on, a lot of death. But the market was still resilient. We just had a huge run from less than 20 years. Huge run because we printed so much liquidity. We tried to redistribute wealth and it didn't work. It created more people poor and the rich richer. We have more people in poverty now than we did 20 years ago. Doesn't matter how much money you print. It goes in the hands of the 1% first. I have more fear about that. What happened to the debit clock? What have they done to the debt clock? There it is. So since Trump's took office, it's up pretty good. 39 trillion. Wow. State debt, 1 trillion. Local debt, 2 trillion. Debt per citizen, state debt, 3,140. U.S. debt. So tax revenue was 5.4 trillion so far this year. That's a lot of money. Average citizen makes 15,000. Tax rate puts it what takes revenue per citizen. Total state revenue. Total local revenue. So Kennedy injected some money. Interest on the debt. Whew. Almost $1 trillion. Or it's probably more. Probably more. Food stamp recipients has gone up 3 million. Well, more than that, about 6 million in the last 5 years. 68,000 foreclosures this year. Living in poverty, 36 million. Without insurance, everybody was supposed to be covered with insurance with Obamacare, everyone. 28.7 million without insurance. Average new car is $50,000. It was around 32 before Biden took office. $24 million government employees. Full-time workers, 134,000. Part-time, 134 million. Part-time, 28 million. My health care cost me almost 15 grand last year. It says $15,623, the average cost of health care per citizen. Back in 2000, it was $5,386. So it's up 10 grand after Obamacare. Cost was supposed to go down. That's what we were told. Al Gore also said we'd be the end of the world by now. /CL.
To the upside, that's the intraday high, but also where the gap began, our green line here near 126, and one of these notable relative low points here near about 106 would also stand out much further to the downside here. And the reason I do mention some of these levels, even though they are farther away, is these times of high volatility, even when there's extreme bullishness, can see very rapid and extreme swings to the downside too along the way. So just something worth keeping in mind here. Our general price pattern here, more of a rising wedge type shape with a much longer trend line along the downside here. Our accompanying boundary line up across the highs has been breached here. That's about where we also saw our lows for today. So these old kind of areas of resistance can then become supportive down the road. Our 5-day EMA in dark blue comes in near 128.60. That could be another.
So Biden got it up to about 131. Obama, he got it up to 147. We had times that were a whole lot worse, I'm trying to tell you. So under Obama, it got up to 146. And every time we hit the 200 EMA, it was a strong buy. And the 200 SMA for years has been a very strong buy. And now we got a tweezer bottom. And we broke resistance levels. So we're just going up right now. When it comes back down, your support's going to be right here. If you can break below 99.93, right there. Let's say $100. If you can keep it below 100, we're okay. But if it starts to gain and stay up here, we just have to catch the knives. We're pulled back to the 63 with a harmony on the SPX. That's bullish. It's only 10%, so that's on a I'm just not freaking out yet. We've had a lot bigger pullbacks and a lot worse situations. Chipotle's got a double bottom on the 3-year. Chipotle, that's a nice snake breakout, pull back double bottom. Regetta had a good solid support for now, but I'm not taking these trades. I'm just catching knives. I'll start going swinging when Iran and America make up and kiss each other. I just don't want to take that huge chance. If I have to trade 2 or 3 trades a day, I'm going to try to be as safe as I can. Here's another band I played with. Thinking about getting back into music again. The more I play.
Chevy Silverado, and technology you can rely on.
Hey, AT&T just gave me their best deal on the new Samsung Galaxy S26 Ultra. I'm telling everyone.
Barber, dentist.
She woke up sunny side down, I still thinking I was too proud to flip her over. Drink champagne, man, jobs in the kissing ass, I ever wanted more. Cocaine race comes quick, and that's why the small dicks have it all. So I reach out the bottom if it really is one, they always do it when you get to know it. I've been falling so long, it's like gravity's gone on this way.
Here's a band I used to play with. Too much. That's a band I used to play with. You can hear this one better. I've in my shoes. Emotional failure. Let me. You saw him last year? Oh, cool. Bingo. I played with this girl. I love that woman. I dated her for a bit.
They would have it tango as twisted as can be. You see the stars were meant for gazing.
She's probably singing about me. You just found the wrong time. If we ever meet again, how you'll be mine. Oh, I miss you, Lori. You were my best friend. Come back to me again.
We fall into this moment.
We sure did.
The cool breeze, the grass.
Naked.
We're hanging on for dear life, even though the time will pass. Though it's
Oh, I miss you, Lori Joe.
to the epic,
You're always on my mind.
meet the moon, the stars, and a whiskey. Helen's kiss on my mind. I will find enough
Well, I've been waiting for such a long time.
underneath the Tennessee sky
I've been waiting.
tonight. Oh, sweet darling. Well, it's
My door's open and the light's on. Oh, I miss you, baby. At one time you were mine. I'll never forget the day we walked Winfield all night long.
and I hope you remember
I do.
all those things you promised me.
Oh my God, don't remind me.
I hope that you keep me,
But I didn't.
even if it's just in Tennessee.
I know you miss me. You sing to me all the time. Oh, I love you. Will you come back and be mine?
Howdy doody. Today,
Oh, shut up.
today's 30 and 30 is Kansas on My Mind. And this song came out of my love for Winfield, Kansas, the third weekend of September, and really
Thank you.
other weekends too that's around that. A lot of people go to that
We met there.
jazz festival that's there for weeks on end, and the longest I've gotten to go is 6 weeks. So I've had a
God.
really great time there. I've met amazing music makers, and this is my love song for that place.
Thank you.
Fuck. I would love to find that kind of home here in Tennessee. I've been here long enough, and I think Nashville could use a little Winfield love.
That's
in
right,
its
baby.
community, and Nashville's a great community. Do not get me wrong, but there's some homegrown about that experience that Nashville had some of when I moved here, but it's starting to slip away, and that makes me sad. So, in honor of those two things, my love for Winfield, Kansas, the third weekend of September, and my love for Nashville,
God damn, you're making me cry.
Kansas on my mind. I hope you liked it.
Wow. Okay. I didn't think I'd come across that. Oh, man. There's another girl I played with. That girl got me tickled. I recorded an album with her.
Sunshine, wind chimes, light breeze. I feel fine. A good day is here. Grass green, leaves gold. Another chance to grow old. A good day is here. I don't mind a moment so clear. The trying times, I have no fear. Well,
the creek.
the trying times.
I have no fear. Well, I'll do, and I'll find a way to say hello, 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 and have a good day.
It's a super fine day. Sunshine,
Wind chimes, light breeze, I feel fine. A good day is here. Don't mind a moment so clear. Many times I have no fear. If I do, I'm gonna find a way to say hello, 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 and have a good day. No fairy, I'll find my way to say hello, 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 have a good day, yeah, yeah, yeah. Love it, Casey. And another band I played with. Oh, here's another one I played with called Split Rip Rayfield. And Truck Stop Honeymoon, so I got them both on this one. I played with all three of these.
come grab your gun. I'm gonna kill someone. It's up to you.
I played on this stage with him. What year was this? 4 months ago. This last.
You're all the fast food junkies from the first of Kansas.
This is Winfield, Kansas. This is Winfield, Kansas, where about 40,000 musicians would gather and play music. Jeff and Vita played with them.
Just to bring up Split Lip Rayfield.
This is Split Lip Rayfield.
Welcome back to the Stage 7 podcast. With this third episode, we are concluding our focus on the greatest band to ever perform on our stage, Truck Stop Honeymoon. When we left off, it was 2008, and Truck Stop Honeymoon had been living in Lawrence, Kansas for a few years. They did not make one except for Papa Pete and Repeat.
I pack a bag, I got a bag too. One for me, one for my bad attitude. Wherever I go, she goes to my bad attitude. My bad attitude caused me nothing but trouble. When I order a drink, gotta
Order a double.
one for me,
One for you.
my bad attitude.
Oh my God.
We go to a restaurant, she acts real rude. She scared the waiter and she sent back the food. Then everybody looks at me like I'm the dude with a bad
Bad attitude.
apologize for my bad attitude. My bad attitude caused me nothing but trouble. When I order a drink, gotta make it a double. One for me, one for you know who. My bad attitude.
Speak to me, Cody. Speak to me, Cody.
Okay. Well, I got on a rant today about trying to relax. Things aren't as bad as you'd think. So, I've just heard so much negativity in a week, just probably overloaded by it. The King's crap, and then I'm dealing with the dealership. I'm not making up excuses, but I swear to God, things are not as bad as they seem. I've been here many a times in a lot worse situations. It would get bad if we get hit, that's for sure. It'll get real bad. But I'm going to sign out. I wish everybody greatness. And adios, amigos. YouTube, really appreciate y'all. Bye-bye.